fair. Yo, 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 good morning, everybody. Welcome to Tuesday Fiverr stream. How's everybody doing? You good?
My screen's frozen. Oh, no, never mind. It's reloaded. I'm back. Yo, what's good, people? Good morning. How we doing? That was
what a
an
start,
interesting
mate.
start. Yeah.
What a start.
Damn. There we go. Guys, I got some exciting news.
What?
I have been on my Indiana Jones adventures. So you guys know when I go away, I like to pick up a souvenir just before I come back. And due to things going on in the UK, I'm going to be flying back about a month, 2 months early. So I'm going to be flying back in 2 weeks' time. I have been to a antique shop. And picked myself up some souvenirs.
Oh, dude, that's cool.
Yeah, sick in that.
Yeah.
So yeah,
Like it.
they're gonna be on display behind me in my new office when I decorate it in a couple of weeks' time. Well, hopefully in a couple of weeks' time. But whenever I do decorate my new office, they'll be on display.
Oh, dude, that's cool. I need to spruce up my office.
So yeah.
I think Will is struggling with his internet, unfortunately. While I wait for Sir Wilhelm, I'm going to say hello to everybody who's in chat as of right now. First in today is Henry. Good morning, mate. How are you this morning? Well, it's evening for you, so good evening to you. We've got Ty Keith in saying good morning, guys. We've got Mani Balan saying good morning, sir. We've got Imram Belinda saying, hey, how are you? We've got Ty Keith saying, morning, Rich and Will. Theola, good morning, Richard and William. Good morning, Theola. HB, good morning. What about GU, says Azriel Trades. We'll get to that in a moment. First, say good morning, mate. Don't be rude. We've got Louis in, good morning, team. We've got Raphael Betancourt saying, good morning, guys. Good morning, everybody. There we go. I can hear myself think again. We've got MGN. We've got Celo. We have Johnny Essex. Everybody saying good morning. Good morning to all of you guys. Good morning. Right, let's get a screen share up and going. Oi, 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 oi. This was a busy morning. Well, hopefully it's not going to carry on being super busy. I think first things first, let's have a look at what the news is for today. All right, so for today, we do have in 10:30 my time, so 8:30 GMT, we just had this news. Why did it not up? There we go. We just had the German flash services and manufacturing PMI to be followed by the pound's flash services and manufacturing PMI within the hour. So about 58, 57 minutes from now. 53 minutes from now. So within the hour, we will have this high impact news on GU. So we should tread carefully with the pound. And then later today at 1:45 p.m. GMT, we have the manufacturing and services PMI for the dollar. Those are the big red folder news scheduled news for today. However, much like yesterday, I would tread carefully. The
Probably
tweet
even more than yesterday as well, to be fair.
Well, with the scheduled news, yes, but like with what I'm about to mention now, it's going to be even more so. Like you're saying, yesterday we had Trump tweet that he was in talks with Iran about ceasing hostilities, and they are going to look for a amicable resolution of this, let's call it war, that they're currently having. However, Iran tweeted back saying, No such. Yeah, they replied. No such communication or negotiations took place whatsoever. So we're getting a bit of conflicted information. The one side, that the US Trump side, is saying, yes, they've been having these discussions. It's looking great. Everything's gravy, baby. And then on the other side, Iran is saying, yeah, that never happened. So with that being said, I think that today you need to be extra careful. Myself, I'm going to play skeptic with everything that's being said right now. All right? I'm going to wait for proper, well established truths rather than this game of hearsay and this game of Trump said this, Iran's leader said that, and so on and so forth. So if I see a sudden movement, I'm not going to jump on the bandwagon and say, oh, yeah, no, the war is over. Because it seems as though we're getting conflicting information. That you could say for certain. Conflicting information. So, with that being said, I am going to heavily reduce my risk for the rest of the week. I am, or at least was, yesterday on 1% risk per trade. I am going to reduce it all the way down to 0.2% risk per trade. All right. And it's purely to do with the fact that if a tweet is going to come out and there's going to be sudden movements in the market, I do not want to be on the wrong side of it and get slipped unnecessarily. And it doesn't matter which side of the trade it's going to be. I am going to play risk manager this week just so that sudden unexpected tweets or news events don't go and destroy me. So I think everybody else, you could do what you want. I'm not telling you what you should or shouldn't be doing. I am merely stating that I think it would be a wise decision to reduce risk this week, especially considering what happened yesterday. And if you so happen to be on let's say on the positive side of a trade, should the news drop and then all of a sudden, let's say you were selling UJ and then all of a sudden news comes out and it drops even further, congratulations, you're still in profit. Not as much as you would have been if you were on 1% risk. However, had that news been the opposite direction and you got slipped on your trade, instead of you losing 1% with your regular trade, now you're losing 3 to 4% because you're getting slipped, sometimes even more. That won't happen. You'll still get the slippage, but it won't be 3 to 4%. So if you're reducing your risk to 0.25%, you might be slipped 1%, something like that. So just something to keep in the back of your minds for today. So yeah, that's the red folder news for today. It's PMI manufacturing and services, pound, euro, and dollar. And then I'm going to say the unexpected war-related news that may or may not pop up during the day. So tread carefully, please, everybody. Whoa, hello from Namibia. Hello. Guppy. What's up, Guppy?
Hi.
Hello from Namibia. I'm going to assume you are either in Windhoek, Swakopmund, or Walvisbaai. So, welcome. You're sounding stressed, Rich. Actually, let's see if I am stressed.
It's because of it. It's because he did the leg day today, guys. He's not actually stressed. He's just got a lot of tension below the waist right now.
I'm tired, mate. Like I did leg day today, and yeah, I was telling you just before the stream, like when you go downstairs, going upstairs is different because you can use the railings to kind of like help your way up.
You like drag yourself up.
Yeah. But when you're going downstairs, one of your legs needs to carry the weight of your body as you're moving the other leg down to the next step. And you can try and help yourself with a railing by doing that. But my leg was like shaking like crazy every time I had to like step onto next. Oh, mate.
Yeah,
Oh, no, I'm not stressed. I'm not stressed today. If it sounds like I'm stressed, it's probably because I'm still recovering from this morning's exercise. Abdos is saying good morning to you. Raphael is saying, Super Trump left 2 of my funded accounts in drawdown.
Yeah, fair. Raphael, I feel you, brother. I feel you, man. I
Yeah.
gave about $300 back to the market yesterday that I didn't really want to. I ended up.
Yeah.
Well, I don't know. There's still what 7 days until April, 8 days until April. So there's still plenty of time for me to give more money back or finish on or
On a
finish
high
the
note. Yeah.
yeah. So I'm hoping I can finish the month positive. If not, it is what it is. It'll be the third month in drawdown. But if we can finish the month positive, this is the closest to break even I've had since January. So this it's okay. It's the drawdown as is continues, but we're optimal. We're optimal.
Optimal or optimistic.
Optimistic, yeah. Optimal? Yeah, we're certainly not optimal. No, we're not. We're not optimal.
Yeah, yeah,
We're
we're not
actually
there yet.
we're actually suboptimal at the moment.
We are par below.
Yeah, exactly. We're optimistic regarding
Optimistic.
the
We're
end.
optimally optimistic, as in we've optimized how optimistic
Yeah,
we can be right now.
yeah.
Um,
Oh,
yeah. MGN saying Trump and Iran sound like a couple that just broke up and each is telling the friend group their side of the story. Yeah,
dude,
that's
that's
true.
yeah, fair.
Yeah.
Jen, that feels like facts, man. I get that.
I mean, as I think has already been stated in the media, Trump manipulating markets. Maybe, maybe not. I don't know, mate. Like, what is there to be gained from manipulating markets right now when you're
Money.
basically teetering? You're teetering on the edge of like full blown, like, let's call it. I don't want to say nuclear war, but like,
It's the potential. It's almost
yeah, full blown from
it's like
escalation
the
to all
Cold
out
War
war.
again. Yeah, yeah. You know when we had the scare between America and Russia with the Cold War and the nuclear powers and etc. It's almost like that, but on a global scale. Like it's not so much Russia America. It's now potentially America lassoing and magnifying the entire world into its sort of vacuum wormhole of participation. So yeah, it's I get you, man. It is that sort of ambiguity, and
Yeah,
why would you want to manipulate markets when times are so ambiguous? But I don't know. It's still
yeah,
money in it.
uh,
It's
yeah,
still money. Money moves.
yeah. I mean, whatever is going on in his mind is whatever is going on in his mind. I personally do not really know whether or not it was just full blown manipulation. I actually think it was Trump tweeting out information he believed to be true, and that he has in fact been fed nothing but garbage in that regard. For that specific tweet, I don't think he himself has been doing the negotiations or he himself has been in contact. I think he has people
Misinforming him.
misinforming him, but being the person that he is, he's going to take responsibility for the good stuff and say, I did this, I did this, I did this. Yeah. So Alicia is saying it's a conflicting information. I totally agree with Richard, but I can see it also as US, which was the aggressor in some sort, as looking for an exit, and markets are kind of reacting to more than any escalation.
It's interesting.
I do think that there's definitely this potential that the US is looking for an out. I do not think, however, that the US's, let's say, plan that they had worked out at all. The people that they wanted to be in power in Iran, they bombed them, along with the people that they did not want to have in power. I don't think that I don't think they may have anticipated it, but I don't think that they prepped for it. The reaction from Iran, like how hard Iran was willing to retaliate, and to where, basically taking up the whole Middle East region and just saying, you know what, anywhere there's a US base of sorts, we're going to just drop it. We're just going to go and look at. So I agree. I think the US is looking for an out. I also think that the US really relied on the fact that NATO was going to jump in. However, However, because NATO's rhetoric is basically that if you attack one of us, you attack all of us, and that all of them will come together and they will, be a united front. However, in this case, as Alicio has pointed out, US was technically the aggressor here. And yes, let's say they're funded or they're backing areas are being attacked, but not the country itself. So NATO is just like, well, there's nothing for us to do here. We're not going to participate in this.
It's not our business sort of ideology. It's and like you just mentioned, it's not a NATO allied country being attacked. It's a NATO allied country doing the attacking. So it's NATO isn't formed to create a super army that's going to be the aggressor. It's to create a super army that's to be the defender of nations, and I kind of feel like America, and I got that one twisted round a bit. I think they kind of thought they could have the penny and the bun, but yeah, I don't know, man. Who knows?
Either way. Yo, what's up, LJ?
Good morning. How we doing?
What's good, man? How you doing?
Good.
Not too shabby, hey, Norge.
Morning.
Good
We got
morning.
Trump Tuesday once again. Not too much data on the cards. It'll just be another Trump day.
Yeah,
So-
everybody's waiting patiently for Trump to tweet. The Trump tweet, We were
Dude,
just discussing.
You know what? He seems to be doing it every 12 months. We had the exact same 12 months ago.
12 months or 12 hours?
12 months ago. Like a year and 12 hours ago. 12 months ago, this month, we were having the whole Trump tweet issues.
You mean we had the
week.
Trump tweet issues for the last year?
Every day, every 12 hours. Yeah, that's it. So
Yeah.
hence
true.
it's almost become like an actual macro play. To trade the inverse. So once you start getting this really bad rhetoric, you bet on the fact that he's going to flip, whether you call it taco or whatever. And that's actually a trade. It's
a trade
proper
idea now.
strategy right now.
Yeah.
And I've heard some people saying like, "Oh no, you can't do that off headlines." And I'm like, dude, this guy's been in office from 2016 to 2020. We had the same thing, and now again for another 4 years. That's 8 years. Right, think about your entire trading lifetime is probably going to be 30 years or something. If you, trade,
Yeah.
Even if you make a bunch of money, most people don't ever fully quit trading. They trade in the background.
A quarter of your trading experience is going to be with Trump as the head of the US.
Yeah, because most people started trading. Say if you started at 20, right? You trade until you're 60. You're probably everyone lives longer now. You probably do some fringe stuff for the remainder 20 years. This is a big portion of your entire trading life. So I think it's a valid approach to inverse Trump and back and forth, right?
Strategize against him, yeah.
Yeah. I mean, we've got how many years was he already in? Was it 8? Or just 4?
No,
it was just 1
4,
previously.
Yeah,
just
2016 to 2020. Yeah.
Yeah. So
And
we've
now-
already got 4 years of data. Plus the extra year that he's already been in again. So it's like we've got 5 years of data about Trump and his ability to befuddle the markets. So yeah, that's more data than most people is willing to backtest on. So I mean, go for it.
And it's very reliable. It doesn't change. Trump is going to be the same guy until he dies, right? He's not going to turn around tomorrow and become, I don't know, Gandhi or something, right? So it is a very reliable signal. The same way when he tweets and he's like, "Oh, market's going to go up tomorrow," and then he says something and it does, right? or people that were selling this or that are going to be very sad that they did. You know, whatever these obscure tweets are. Yeah, you just bet on what he's saying. So it's the same thing with
you
right
wait
now,
for his
even
reaction.
after.
Yeah, you just wait for his reaction, and when it peaks, sell.
Yeah. Even with right now, even though we sort of had the somewhat flip-flop, the hard part with the Iran side is obviously from a game theory standpoint, like it's in their interest to say we didn't talk, right? That puts leverage back in their pocket.
Yes, it does,
So,
obviously. Yeah.
Yeah.
Like the psychological game here.
Yeah, chances are they probably have spoken, obviously, at this point. You know, it's almost the same thing that US and China were doing. Like China said we haven't spoken when they had spoken. US also said they hadn't spoken when they had spoken with China. And you can see all the obvious parts where they had or people have met this person. So it's all this weird game theory back and forth type of thing. So I think markets right now, since we've relatively held these gains, are leaning on the fact that Trump's original statement was, kind of like a 4-week type thing, maybe up to 6 weeks. Similarly with like Dirk and I were talking about. And that also then comes back to the rest of the problems that this gives for the global economy, right? You can't have this go on. So now that we're through week 3 into the start of week 4, and he's trying to like really press that end button and trying to push that stuff, people are probably going like, he really does intend to end it. Oh, the same thing with the tariffs, right? He goes back and forth. Okay, we got 150, 200% tariffs and on China, and then it goes down to 30%, whatever, right away. So it's extreme, and then no, we've got a deal, right? So we'll see if that actually plays out, because it's much harder to deal with Iran than the other situations. Obviously, there's a bit of a wild card in there at the same time, but we're definitely on track with the typical Trump playbook, put it that way.
Yeah. But here's the thing, once again, it's just like, we've got all of this data and all of this information that's like, okay, whenever this guy opens up his tweeting fingers, opens up his tweeting account, his X account, he's going to be saying something, and there's going to be reaction. And then it's probably going to be followed up more often than not, like quite severely more often than not, like heavily weighted toward more often than not, that there's going to be a complete reversal of the original statement.
Yeah.
So he'll say we're tariffing this country at this amount, and then everybody's like, oh, and then within a few days it's completely reverted, saying, okay, well, it was going to be 80%, now it's 20%, and then it's just like, oh, okay.
Yeah.
You know, so this, and that's just a stupid example, but the idea being that people are catching on now to the idea that, okay, he's saying something, there's movement, but then it's completely turned around and in the next few days or even next week.
Completely.
Even if he doesn't retract it, even if he doesn't verbally say, hey, listen, I was talking crap, and then this is not what we're going to do, he'll never admit. He'll never admit that. What will happen is like, oh, okay, so, you know, the Senate has decided this, and that's bull crap, and this, I've had long talks with this person from this country, and we've come to this agreement. He'll always try and spin it to the favor of the US. He'll always try and spin it as if he was the savior. I think we spoke about
narcissism at its finest.
We spoke about this previously, where we were talking about the potential idea that he's creating problems, which he can then come jump in and say he's got a solution for it.
Of course, that's politicians since forever.
Yes,
right? They create the problem, then they fix it. Right?
Yes, but the problem is he's on the platform in front of everybody, confirming
announcing the problems that he made in the first place.
Yes.
Yeah, that's the other choice. It's like that. You're not meant to reveal the secret as the magician. You don't tell them how the trick is going. You do the magic trick, but you don't tell them that you had a card up here and it slipped and
magic is misdirection, you know. So while your eyes are over here, the magician's doing something over here. Trump
Yeah.
fails to remember that he's got to misdirect the audience while he does
I
something.
Instead of having the table in front of him that hides everything that he does under the table, he's had
He's
the
just doing it
cloth
right in
all
front of you.
completely removed from the table, and everybody's like looking on the table, like, we can totally see what you're doing, mate. Like, we can see you.
Yeah, because he's like,
Fumbling with
oh,
the
hey,
cards.
yeah, look how cool I am. Look, dude, I got mega IQ. You see, this is how the trick is done, and here I'll show you the trick after. Like, there you go. It's like, dude, no, that's not.
Nah, Mr.
that's not how
President,
it
that
works.
was the dementia test. What?
Yeah. Oh
Anyway.
god. But yeah, the other thing for you guys with this stuff, again, there is, I mean, we've had the whole thing with Trump market manipulation things, whatever. He's not really trying to manipulate the market, but he definitely is seemingly giving the tip off, the nod of the hat to certain people he is friendly with. So I mean, I can't bring it up here, not with the share chart. I have to pull up other stuff. But basically, this was the same with the oil trade that we're talking about with Dirk just before this happened. If you guys start tracking futures in particular, you'll see it on, because you can get proper volume. Massive sell orders coming through, and we saw that on buy orders for the S&P and the NASDAQ as well. So the QQQs in futures. So any of you guys are looking to trade the new Fivers futures platform as well, that's definitely a way that you guys can take advantage of this. So there was massive sort of random selling volume coming in on oil, sort of 15-20 minutes before, and then the same thing on S&P, slightly different time, and the NASDAQ. But yeah, whenever now I see these mass random volumes, which are kind of against trend as well, coming in, and we always get this random tweet or headline later, you know, it'll be sort of 15 minutes, 20 minutes, sometimes 30 minutes. 30 minutes is sort of the max. It's normally very short before, and then we get a full move. So
Massive movement.
definitely something to look out for you guys. Even if you're trading CFDs or FX, to keep a side eye. Maybe if you got another monitor to actually look at some of those volumes, you'll have to do it through futures and that kind of stuff to actually get exchange volumes, because most of those trades are being done through futures and through options as well, with the whoever's Trump's I don't know, posse friends are that he gives the little tips to, or whether it's Barron, I don't know, like his son, all of them.
Yeah, but I mean,
Right.
it's the Trump tower of people and all of his, interlinked groupies and whomever you want to say, they're all there.
Yeah.
I love this name, ranting. Follows up by ranting. How do you explain this? I was 0.5% away from locking up a 2% payout, sized up without stop loss, then Trump nukes went out, ended up on drawdown 1%. First of all, dude, that sucks. It happened to quite a fair few people. You're not alone, mate. I understand. Now, with that being out of the way, why no stop loss? What the hell, mate?
I think he's saying.
Stops.
Okay, yeah, he didn't have a stop loss. Wait, did you actually not have a stop loss?
Whatever your trading style is, I'm not gonna judge it. However,
Whatever your trading style is, change it.
However, trading, and you're talking about a payout, so you're probably talking about trading a prop account. Trading a prop account without a stop loss, dude, that's asking for trouble. That's asking for trouble. Woo.
I think I even said yesterday, even with scalping, because I often scalp very similar to Saul, where Saul doesn't run stops. But in this current environment, if I'm around London to New York, I know Trump's going to potentially be awake, I'm putting stops on there. But if I'm doing Asia, and I know he's asleep, he's in bed, he's an old man, he's got dementia, whatever, he needs his rest, then I'm probably safe. But as soon as you come to that period, even if I'm scalping like that, running stops 100%, because you get those kind of headlines. And if you just look away to, you're just looking something else up for 30 seconds even, like the run we had last night. I mean, we're up 80 pips on euro dollar on other majors within 40 seconds. Like, you could just be reading an article and then look back at the chart and your account's gone. So I would definitely say, do put in stops, especially around those later periods into London and New York in particular. It's a safety thing, right? You have to have that.
Yes.
But yeah, I'd say, I mean, you're saying you didn't have a stop. I thought you were going to say that maybe you got like slipped or something. But yeah, if you didn't have a stop at all, well, yeah,
Well,
Yeah,
I don't know if you're also trying to say that you didn't have a stop, but you tried to get out at roughly 0.5 and then it got executed at 1%. Same deal, it's just slippage. So you always have to remember the graphical interface that you guys are seeing with the charts and the candles is just that. It's a graphical interface that takes the data from exchanges, right, from transactions in the market, and then graphically represents that. And there will be a slight delay, has to go through this broker, that broker, that broker, and eventually get to you and then into the terminal. So often, sometimes what you're seeing on the chart, there might be a slight delay. Normally it's very minor, like less than a second. But when you get those big events, you get a mass swath of that data all at once, and that delay time is going to increase slightly. And just because the candle has gone to here doesn't mean people are actually executing at that price. The candle is just representative of where the new price is. People could be executing much higher. So that's where you get slippage. And either or, someone else's orders got filled before yours, and then you got filled up here. That's basically what slippage is. Wait, why am I the hippie of trading? What is this about, Raphael? Where does this come from? I don't even know what that means.
Bro, it's because you're Australian. You've got that. Aussies have that super chill, laid-back vibe, even when talking about something serious. It's like
I was going to say, is it because I'm chill or like
100%. It's got to be. It's you got an Aussie vibe, but there's something about LJ that he's probably the first person I'd want to invite to a barbecue. And then it would, and then it would be rich because I know that he loves his braais because he's South African. So like,
obvious.
I think a South African and Australian are like the two top people you could invite to a barbecue, and then it's got to be an American.
Oh, dude! Except the American would be kind of like, they'd be standing off guard, going and being like, "Dude, these guys are wild." Like I thought we had some like, me back in the day at college. The frat parties, I thought we were wild. These guys are crazy,
Yeah.
It'd be good, but it'd be good.
So I
LJ, you are the multiverse itself. Chill, bro. No, dude, not unchill. I was just like confused. Like, I was confused about the connection. I was like, what?
Oh, man.
Oh man. I don't know if you guys were talking about any trades and stuff before I jumped in.
We were just goofing around before.
Or just saying hello. Yeah.
Yeah, we were just saying hello, yeah. We haven't spoken about any trades as yet. I haven't taken a trade yet.
No, GU dropped quite nicely, but I'm not interested in that. EU seems to have already done something. If I was ever wanting it to do something, it's already done that thing. Although we're at a nice point here where we could look at maybe buying up from. I don't know. I don't like the euro right now. Gold looks like it could drop. If we can break and close under this low here, then we may get a nice drop. Nasdaq, same with that. Nas, we've had a really nice sort of drop. We've failed to break higher highs. We've wicked, come back down, pulled back up, retest the highs before then dropping and breaking this structure low here. haven't had a pullback to actually have some form of trigger entry, but that's dropping. So I mean, price is moving okay, but there's just nothing that I could get in on.
Yeah, it's hard. I'm not sure. I took like one trade earlier on the Aussie. That's pretty much it. I'll show you guys in a second. I'm just putting the options level for today for the Nasdaq.
Yeah, we're pretty much at it.
Yeah, I was gonna say we're pretty much at it.
Yeah, it's 24,167.
167, yeah.
Yeah.
What's that? The option level for what?
The option
for the
expiry at the option expiry at New York Open for Nasdaq.
Yeah.
Oh, for the Nasdaq.
Yeah, but we've been trading there quite a bit, so I think most of those have expired already. Yeah.
Yeah, I think this week is going to be pretty difficult in general. Like, I'm pretty tentative with trades overall, like, because we're so headline driven right now. And then even whatever headlines we get, it depends on how central banks play that out after.
Yeah.
Right, so global central banks looking at hiking rates. The Fed was a bit more neutral, slight hawkish tilt, which wasn't quite read into. But yeah, if we get this calming down, it seems like the Fed is probably the only bank that could really reduce rates at this point, or would be willing to. I think, ECB, Bank of England, that kind of stuff will hold off. So if we do get this actually calming down, we get some kind of pause of resolution, quote unquote resolution, maybe we'll kick up again in another couple of weeks. People start to price in Fed cuts once again. Dollar completely turns around and collapses because the ECB, Bank of England, everyone else doesn't want to drop rates. They're already pretty low as we were. And yeah, I think that's kind of what, in part we're seeing, like the euro's still hanging higher up in those high 115s. But if we don't get that, euro dollar back down to that 114, if we crack that, we're to 112. So we got this really weird binary type situation. If that comes out, we're back towards 118 and closing that gap on euro, or we're down to 112. So we're roughly-ish in the middle of that range right now, about 350 points on either side. And I don't like that. I hate being in that neutral middle point.
Doesn't feel great.
So yeah, I don't know what you guys are seeing technically wise, other than that, but
the only thing that I'm seeing at the moment is Nasdaq, the high of the day after rollover. We've just wicked it coming out of Tokyo. London start, we basically created a lower high, and then it's now starting to push volumetrically lower. I think we're going to try and test the low of Tokyo, and then after that we'll probably try and push a little bit lower, maybe see if we can come down today down to this 23,642-ish area from yesterday, before we had that volumetric push up. Because, like I said yesterday, this reaction that we had on
is that
on the
that
news
bottom. Sorry, I was just going to say that bottom is exactly where we closed Friday and gap from.
Yeah. So we had the gap, something like that, but the idea is we were still trying to push lower coming into the day yesterday. However, this news event, I said yesterday, I don't know if there's going to be follow through. If we do have follow through, movements like this needed to pierce above and then start establishing a new upward movement, higher highs, higher lows, that kind of like stuff. However, we did nothing of the sort. We kind of like came close to it. We double topped, started pushing lower, sweeping these lows, and then going into a little bit of consolidation. At rollover itself, we created the high of the day, which was not even higher than the last attempt prior to closing the New York session to try and push price up. I mean, the high of the day you can pull all the way back, and you'll see that it's not even remotely close to that point. However, we've already quite deeply swung much lower than this previous low of the New York session yesterday. So to me, there's no follow through whatsoever. Even if it is delayed follow through. This movement that we had yesterday, to me, did not signify the direction that the market actually wanted to go to. Because if it did, you would have seen follow through. And it seems as though there is a gap between what happened yesterday and what the market actually wants to do. And I don't know how long it's going to take before they kind of align again, and then we know, yes, it definitely wants to carry on pushing up. The fact that we had conflicting information between Trump and Iran, I can see it here, because there's conflicting information between what the move that we had and where the market has been moving since. So the one thing I did not want to see was sideways action, because that was going to be we don't quite know. I mean, if anything, you would have wanted price to come all the way down, kind of like back to that pre-news area, to see whether or not this impulsive move itself actually was what the market wants to do going ahead, going forward. So a lot of orders still stuck here, a lot of trades that's in limbo, in waiting. I don't know. I want to see that script. But if it doesn't, it's fine. If it doesn't, at least let's try and break above these points of yesterday and then start pushing up. But if it doesn't happen...
Sorry, I was just going to say, so basically echoing what you're saying, where we're trading now is pretty much confirming we still have hope that this is coming through, right?
Yeah.
I would have actually been more concerned if we completely erase this, because then I'd be looking at further losses. That means market's like, there's no chance of this. So we've obviously pulled back a touch, which means we've pulled back if you think of that range as almost like a probability of this being true, right? So the bottom to the top being 100%, like 0 to 100. We've now pulled back to say the market has like a 50-50 coin flip on whether this actually becomes something. If you kind of think of it that way, that sort of seems to be where we are. We're seeing that the same with gold, oil, stock markets, all that kind of stuff. There's still hope hanging on there.
Very
but
much.
Definitely we haven't got that confirmation from Iran, or at least some kind of further ships through the strait. I mean, Iran said over the weekend as well, saying like they'll let ships through the strait for like $2 million a ship.
That's just
so who's that 2 mil going to come through though? It's not going to be the shipping companies. They go to the US. And so if they're saying that, like obviously they've tried to probably talk to the US saying, well, you've lifted sanctions on us, on Russia, and we kind of want some more money to let ships go through. And they'll be like, well, because the other thing I was looking at, from the start of the war, there was like 11 billion of new defense contracts up for grabs or awarded, and now it's gone up to about 200 billion. And if you impute how much they roughly spend per day, obviously some of that will go into later production and also refilling of stocks that they've spent on the current activities.
That's been used,
But the implied thing would say that they are gearing up for this to be a 2-3 year ongoing
long haul
at that current number, and that number obviously can go up. So obviously Iran can very easily go, well, you're spending that much, why don't you give us a couple of dollars to go through the strait, and we'll call it even. That's fine, right? Meanwhile, they'll go and do whatever they want to do, try and rebuild and talk to China, talk to Russia, and then we'll have the same thing going on a year from now. We'll have another fiasco.
Escalation. Yeah.
Yeah.
I see what,
it
I see
becomes
what you're
really hard,
referring
hey?
to. Yeah. But I think it's more
Because-
like this right now.
Yeah. Yeah. Exactly. That's what I was going to say. It becomes really hard with this because
Yeah.
we obviously have imperfect information. Even most of the people in
Yeah.
the administration of whatever government are going to have imperfect information. It's only like the deeper, central intelligence that are going to really know what's going on. And all you can do is basically impute headlines, trade it as you see it, potentially watch things like, shipping routes, plane diversions, that kind of stuff. That's the only extra sort of deep information you can get, unless you're a multi-billion-dollar hedge fund and you can afford to pay someone to go incognito on the ground and risk their life to find deep information, right? That's pretty much it. So hence it
least
goes
you're
back
saying-
to the
yeah.
Trump taco thing. Trade it as you see it. Trump says this, go with it. When he reverses, go with that, and just
Go with that, yeah.
yeah.
Alicia is saying 3 senior Israeli officials. Trump is committed to securing a deal with Iran. It is unlikely Iran will agree to U.S. demands. RTRS cites Israeli officials. Trump appears determined to reach a deal with Iran. So that kind of aligns with what was said yesterday. However, it's the way that it was phrased yesterday made it seem like, oh, this is both sides are aligned with this. We want conflict resolution. However, it seems as though only one side of the party is like at the table right now. It's like Trump is there. I want to de-escalate, and Iran is like, maybe we'll, not come to the table. Anyway.
I think it's who's admitting it, because again, like I was saying, with the stuff we had last night and Iran saying they haven't spoken, there's no way they haven't, because they
definitely
also,
did.
People keep thinking like Iran is the big dog and they can keep. I don't know. People flip back and forth between US will destroy them and Iran has so much leverage and it's way more complicated and all this kind of stuff. But the US said we're going to hit all your infrastructure, so it's completely dead for them. Yes, they can go and hit like the Saudis, the Gulf area. They'll cripple trade, cripple production. It'll cause a calamity for everyone else, and probably a global recession, all that kind of stuff. They don't want that, but they survive. Iran gets eliminated. Like they would have no chance. They'd be completely left open, and then that's when you'd potentially put ground troops in and they could fully take over Iran, etc. So for them, it's
the
kind of a death
chances?
knell.
Yeah.
Right.
What is the chances of this time frame that Trump has given now, the next 5 days or whatever, What if after that it's like, well, Iran never came to the table and they've had now these 5 days to get ground troops.
Yep, they've already
deployed.
been putting them in place the past 2 weeks.
So,
So it's very much
once
on the
again-
cards if they can't get there.
Yeah.
So hence that's
Yeah.
the part where you try and pull Iran in. They're still going to
Yes.
be trying to play their cards at the table.
Yeah.
It's game theory for them to say, no, there were no discussions, because that weakens Trump's point, which there is definitely a market element where he wants to calm markets. The other thing where I've said recently as well, how quiet Scott Bessent has been. And I'm sure Scott Bessent's giving the tap on the shoulder saying like, hey man, you need to calm this down, wrap it up. Because like I said, he's not just doing stuff for the Treasury, like he's he's a prior macro trader, hedge fund, economist, all of that. Yeah, so he's made a lot of money trading all this stuff. Like he understands macro very deeply. And this is like 3.5 decades worth of trading and being active. So very in depth. Hey, Fuzzy.
What's up,
How you doing?
Fuzzy?
Fuzzy Wuzzy, wasn't so fuzzy Wuzzy. What's good, brother?
Yo, yo, yo. What's up, Fuzz?
I always love that that profile pic as well.
Yeah,
It's beautiful.
literally him just standing there with his fuzzy face, holding a drink. We do have the Flash Manufacturing and Services PMI coming out in the next 5 to 6 minutes or so. So if you are trading the pound, or if you are intending on trading the pound, do be careful. There might be a little bit of volatility. Even though the news that we had for the euro only basically had like this big candle, and then since then it's kind of been relatively quiet. So we'll see on the pound whether or not we're going to see a similar movement. This was 10:30, so that would be on the news 10:30 here. So that was the 10:30 candle. So very little initially, and then a little bit of a move on pound and euro. So
yeah, the euro stuff was mixed with France and Germany. So we had some better, some worse, but still pretty in line. So
well, you guys have not changed. Well, obviously we haven't changed.
Of course we haven't changed. Damn.
Yeah.
Come on.
Just a day older and
not so wiser.
A scruffy beard's a thing. Well, we don't have the ability to grow a magnificent beard such as yourself. There's only one person in our clique that knows how to grow something that majestic, such as yourself, Fuzzy, and that's MGN. So
I can grow mine out.
Why you hate on us?
I look homeless when I do. Like I have to get it to a certain point, and then it looks like a Viking kind of beard. But the in between, I just look. I look homeless as anything, right? Like
I just look deep enough. Ginger, scruffy. I look like I'm like 40 years old, going through like my 3rd divorce. I look awful. It doesn't. Yeah. So. Yeah.
The wizard has a magic beard.
MGN's beard is god tier. Like that is goated. Yeah, it's amazing, honestly.
100%.
All right, guys, I'm going to have to hop out. I have a few things that I need to attend to today. I will see you guys a little bit later. For everybody in chat, we do have a giveaway happening next week, Monday. It is for the TikTok and the Instagram. So if you haven't, go and download either one of the two, either Instagram or TikTok, and follow the Fivers. All of the links, all of our socials are in the description box below. And you'll also see the Gleam giveaway link as well to go and follow that. So this giveaway is a Instagram and TikTok exclusive giveaway. However, we will do the giveaway results on Monday here live on stream. So once again, if you haven't already, drop it in there. Unfortunately, if it was banned in your country, like in this case, Trade with Patel is saying it's TikTok is banned in India. Unfortunately, we cannot assist you in that regard. So yeah, not much that we can do. But if you are able to in your country, TikTok and Instagram, do go.
I was going to say you can go
get a VPN on.
You can go by the Instagram then, right? If the TikTok is banned, you can go by Instagram.
Yeah, look, I know everybody is saying VPN. I'm going to say yes, that is definitely a cool thing to do. However, if you get caught having a VPN in a country that's banned something, I'm not going to be responsible for the ramifications of that. I'm just saying that.
Yeah.
Yeah.
At one's own risk, honestly. Yeah.
Well, I mean, this is an interesting comment. 6 hours stream and you want to push us towards a 5-second short form platform. I'm not touching TikTok with a 10-foot barge pole. Fair. Fair enough, mate.
That's fair. You don't have to. You don't have to.
You don't have to. You don't have to. That's the lovely thing about being in this world. You have freedom of choice, mate. You can choose to do whatever you want, okay? as long as you're not harming anybody. In this case, this is for those who wishes to receive short-form content from the Fivers. Some of it will be reels from our live stream. Some of it will be reels that myself, William, or LJ have made in the background. That's maybe not necessarily available on the live stream. So it's for that kind of like stuff only if you want to. But if you want to participate in the giveaway, you have to have TikTok, Instagram, and be following the Fivers on those 2 platforms. So have at it.
Indeed.
And yes, a like and subscribe, guys. Come on. Don't be
Like
stingy.
and sub. Like and sub, guys.
Yeah.
We've got to get to 1 million now. We got to 100. Let's go straight to 1 million.
Can you imagine like a
skip,
million
skip 200, skip 3, 4, 5, 6, 7. Let's just go a mil. That's fine.
Yeah.
You know, right?
I
That's how you do it.
I can't wait for the silver play button, but I also wish to have that gold play button as well. So, can you imagine?
What level do you get gold?
1 mil.
Is that
It is 1 mil.
So does it?
Yeah.
Is there nothing in between?
Silver play
nothing
button
for,
is
like-
100k. Nope. They have very, very specific. It's like it's 100,000 for a silver play button. It's 1 million for a gold, and then from there on up, you get like platinum one. Then you get a diamond one. I think a diamond one is like 50 million subscribers, or it could be 10.
Alright, fair.
No, 10 is the platinum, and 50 mil is diamond or something like that.
Dude, can you imagine 50 million subscribers?
Mr. Beast level.
50 million.
Yeah, Mr.
subscribers.
Beast, PewDiePie, that kind of stuff.
Yeah.
Yeah, fair. Yeah,
More
fair.
subs.
Yeah, okay.
Would
More
you
subs
question
than entire countries.
Would you
Like-
go and follow Mr. Beast's YouTube stream if he was a trader?
I've not
To be
watched
honest,
much
yeah,
of his
probably.
content. Like I've watched some of his stuff like on like Facebook if I'm bored.
I
He seems
would
He seems
because
quite funny, so yeah, I think I would.
I definitely would because I think what he'd do is like with the giveaways, he's like, oh yeah, 1 million YOLO gold right now, 5-minute
fair.
trade, and
gonna
he'd
say,
either be
it's a
blown out
fire.
or he'd make like 10 mil, and that'd be it.
It depends on the sort of content he would make, innit? Because like you said, you know, I've not watched much of Mr. Beast's content, but he seems like a pretty funny, chill guy. So as long as it would be like that mix between like a bit like what we do here at the Fivers, you know, like a little bit of mix of degen banter as well as holding value. So like as long as he could bring a bit of value, then yeah, 100%, yeah, I would, because I do think he's quite funny. Like what I have watched of
Yeah.
him. And like LJ's just said, you know, I watched a podcast. I can't remember who it was with. It may have been Diary of a CEO. It may have. I
Stephen
think it may have
Bartlett.
been a podcast. Yeah, it may have been a podcast with him.
Yeah.
But they were talking about like Mr. Beast was actually saying his overheads per video was like minimum of $1 million. Like he'd spend like a minimum of $1 million US dollars per video. And that's just overhead, and I was like, "Damn!" Like so, yeah. Like when it comes to his like lack of fear to spend money, I think his content when it comes to trading would be a little bit like LJ just said. It'd be like $1 million on gold, like long.
And dude, obviously doing that probably most of the time he'd lose, so it'd be funny to watch.
Yeah.
But yeah, I probably watch more of his like business sort of content where he talks about the structures and stuff because I find that really cool. Used to watch like earlier stuff, these days not so much. But I did watch like Beast Games and stuff, the stuff he's had on Amazon, which is kind of like a like kind of like Squid Game in a way.
Yeah.
But that was actually pretty good. I didn't mind that. That was quite good. So, dude, big ups to him. He's done well. But dude, that's his entire life. He's dedicated to that. 100% of every minute, every hour. That's it. So
Yeah.
and fair
All right,
play.
guys.
He's done very well.
All right, guys, with that, I'm going to hop out. I will see you guys a little bit later. Even though there isn't like crazy amounts of volatility in the market, please do be careful. You've already seen what happened yesterday. It can happen again today. So do be careful and do manage your risk properly. And don't, for the love of all things holy, trade without a stop loss. Don't do it.
Yeah. No.
Not smart. All right, guys, cheers. I'll see you a little bit later.
Peace, Rich.
Nice one, see you, brother.
The only other thing I was going to say as far as volatility and markets and stuff right now, like we've had the euro data, we just had the pound data come out. Pound dollar, was that moved to? I don't think there was much of a reaction. Again, pretty mixed, just like the
moved slightly below Asia lows, but it barely moved.
Yeah, if we go down to the 1 minute, like we had a slight jump up through there, but pip movement, like this is not super crazy. It's sort of seven-ish, 8 pips. We do still have the flash PMI for the US tonight, which sometimes people miss, but is quite important because on a lot of calendars it will come as like yellow or orange, and they think it's kind of minor. But that's the precursor to the red folder PMI, like the final release. So often that PMI does actually move things more than the final PMI release because it's the precursor to it. So just be wary of that.
45 GMT, I believe. So 1:45 in the afternoon for those of you in the UK. So GMT. Flash PMI. I got it as red folder news here.
Yeah, that's what I was going to say. Some list it as like yellow, as like because it's a preliminary number, but obviously that feeds in. Basically, everyone bases the final number off that. So yeah, some data folders will have it just as like a nothing burger. Others will say it's important. So just be careful with that because I've had a couple times like guys have been on here and then it's come out and we've actually moved like 20-30 pips and people are just like, what happened? So just wanted to mention that.
That's why I say, don't ignore orange folder news. Like yellow folder, I don't care for. Sometimes you'll get a yellow folder that will turn into an orange, but then therefore, that's a true orange in my eyes. I'm like, yeah, cool. Don't really care too much on orange folder, but never underestimate the orange folder news, because orange folder does have the capabilities of becoming red folder, like what Aljo was just discussing now. That's why I have on my Forex Factory, I've completely filtered out yellow and grey folders because I don't care about them. And if one happens to slip through the net and become an orange folder, cool, a little bit of volatility, I'll do a deeper read into why, and then I'll be like, okay, that's why. It's not consistency, it's an anomaly. It's something that's just slightly outside of that mean average line. And then, but when it comes to orange news, always look at orange news as a potential volatile release. And
and it's one of those.
When stay safer.
Yeah, so it's one of those things depending on the market regime as well. Like prior to COVID in 2020, no one looked at inflation for basically a decade, right? It was a dead release because nothing ever happened or changed. It was just low, nothing moving. That's it. Now, very important, right? So same deal with depending on the regime. Some of these like even yellow or orange folder type factors can actually become more impactful. So, but yeah, we'll let you know if that changes. So,
absolutely.
Are you actually looking at trading anything right now, Will? Because I'm kind of curious on the pound at the moment.
On the pound or longs?
Too bad, yeah. I don't know exactly how high we go as far as risk reward. Yeah, it's a bit 1-to-1-ish. But euro dollar, I was going to say euro dollar definitely looks like
euro dollar move started to move nice. We came down into that really nice respected area on the 5 and the 15. We sort of rejected around, chilled out around about it, wicked around to the downside. And then the news release came out, and we had a positive reaction from it. And I thought, okay, this is actually quite nice, but it's a matter of like, where do we target up to? So I don't know where I'd want to target. I like that zone that you've just marked out there.
Yeah, I was going to say, so that's my only trouble is like, where's the target? Like the target's not that
Yeah.
far. Like we've definitely got this smile, like those lower lows going right through into, you know, higher lows, high highs, etc. Then a big push, the pullback, basically equal bottom through there, and you've got that smile formation.
Yeah.
Euros already kind of ran. That's why I was looking at pound, which potentially has a
Pound
bit better.
maybe
We
up
were basically,
to that sort of like order
yeah.
block or breaker block or whatever you call it. You know, that sort of slight pullback or that base, I think, as Richard Butler would call it. So if we could come back down to that base or come up to that base on the pound, then maybe, you know, we've had that sort of really nice rejection here as well. So if I just there you go. You know, we've had this really nice sort of failure to break and close lower. We've rejected it. There's a slowdown point here. You know, there's an area just up here. Obviously, we've got the prior high, so we got the daily high, so the London high. If we could hold this, to be fair, and consolidate around here a little bit, like there's no structure point that I'd like to see that break and close above potential retest. But if we can consolidate around here for, you know, a little bit, something a little bit like this, you know, just sort of hold, break above, and then boom. Something like that, I think, would be a really nice opportunity for me to buy from. But dude, the way that price has been moving at the moment, can I get a 1 to 2? Obviously, again, this
So I
is
mean,
complete.
yeah, I'm wondering if I want to, because the distance is not that far.
No.
So I'm tossing up whether I'd actually prefer to like short, like wait for it to actually get to the tops and then potentially short, or if we don't get quite to the tops and we peter out in between, then look for a short.
Well, that's why I wanted
The
to be
trouble
doing
is,
on Euro.
again, yeah,
Go
the
on.
movement's going to end up coming from like a headline at the end of the day. So
Yeah, more
you're
than likely.
kind of binary positioning on positive headline or negative, you know. So it's very tough. But I think, hence with that, like the pound, the best thing that you can do is say, with the current structure, we've got a decent technical base that typically you'd probably buy off from, and then you roll into that hoping for a positive headline, or you wait for it to come up, find that higher level, and then seek more
sell-off.
more sell-off and more negative headlines from the
That's what I
Iranian side.
wanted on the Euro. I wanted us to hold this level for a little bit. I think this consolidation was a bit too aggressive for me, especially when you sort of look at these wicks to the downside as well. So I wasn't too keen on this. If we had a tighter consolidation here, maybe not that tight, a nice tighter consolidation here, and then a breakout to the downside, pullback continuation, I would have been shorting the Euro. But we just never got it. It either left without us and then just wicked around at this potential point of reversal for the sells for a continuation buys up. To me, it's just I don't think I'm going to be trading much today. You know, we haven't had much reaction off of the news, so I'm just gonna, like you said, we're anticipating headlines. I've got tradingeconomics.com up on a tab with me as well, just because I want to be keeping as sharp of an eye as possible onto Forex Factory, Trading Economics, Financial Juice. You know, just trying to keep on, see what's going on, see what releases. But I think if I was to trade right now, it'd be a gamble.
Yeah, I mean, it's tough. So we had this was a prior, so if we zoom out, So this was where we had the potential interim top when we had this initial piece through there and then collapsed. We've now come back up to that prior sort of mix level where we traded like back and forth between. But through here, that was that prior bottom. And basically the running point where we broke through that, broke up through here, came down with that wick there around that sort of cluster. It's basically between 116 and 115.80, right? Sort of the cluster that determines whether 116 plus or 116 below, right? And so again, we've sort of oscillated that through here. If we go down to 30-minute, after the punch higher, the initial spike pretty much met that prior top from last week on Friday, after the whole central bank announcements, that kind of stuff. But then pulled back from there, I had a touch through here, pulled back, eventually broke higher, came back into that cluster, another attempt higher, failed new high, came down, but we're still oscillating that middle sector. So I think, again, it's very much above here, positive, below here, negative, right? It's pretty binary at this state. So
Yeah. To be fair, I want to see price come a little bit lower, I think, and try and mitigate what happened yesterday. But I need to see a break and close under that sort of that smile line that you've put now. Otherwise, any selling above that line right now, or before we get a break and close below that. Okay, depending on what happens fundamentally, I'm not a fundamental trader, so you would probably more likely or almost certainly have a better entry opportunity than I would. But for me, I'd need to see a break and close under that smile line, and then a pullback, and then for a continuation. However, we have come into that beautiful area. You can see that high, or the daily high, has come into that consolidation zone just here. Now we've got this consolidation zone here. So we have come into this zone really nicely. Let me just get rid of all this quick. Cool. Yes, so if we can, we pull back up there. I was kind of anticipating a break and close under, and then continuation from around here somewhere. That's kind of what I was sort of anticipating to happen. But then obviously looking at this consolidation zone here, which was prior to this big move up here, I kind of thought, okay, look, we could slow down coming around this zone. We came into this zone, wicked it, and then actually moved up. So I was like, okay, there we go then. If we can pull back up into here, break and close under this level, which is around like 15,761, pull back continuation, then I think we'll have some form of mitigation to what happened yesterday. Where would we come to though? I don't know. That's a whole different story.
That's what I mean. It's tough right now because even the macro thing isn't clear. Like we need another month to the next central bank meetings for this to be clear. Because potentially, if we get the yeah, exactly. Yeah, so down towards the low 15s and then into 114 again, like basically where we spiked up from. Which I think if we don't get more headlines for progress, I think we will start to wilt down that way. So I think net, I have a bias to the downside at the moment for now. So hence, like I was saying, I think I prefer to short from those interim points for potential downside. Because say this gets figured out, right? So I'll give you some macro stuff real quick, Will. But other central banks are probably more likely to hold. Then the US is in the best position to cut. Now, we've had a massive increase in the dollar from this. But if they flip around and they're now going to go towards reducing rates, then the dollar completely flips. And this is where it's hard because then that would send euro higher dollar way down, but we're still probably like a month out from that ultimately. So I think for now, I prefer to stay negative until obviously headlines come through.
Yeah, fair. Can you hear me? Okay.
Yeah, I can. Yeah, you cut out for like a second, so
It was
I'm
me.
sure
It was that was so annoying.
you probably
You were
missed part of what I said.
you were literally like, I'm gonna hit you with some macro. I was like, yes.
Yeah.
Why is he frozen? No, no. And then like I came back and you were like, and that's why. I was like, no. I was like,
Yeah.
shit. Yeah. So unfortunately, I missed that.
Yeah. Okay.
Would you
So
say-
quick summary is that this week, this next period is pretty hard because we've got the mix between the headlines and the text right now. Now, the later part is the central banks in terms of where the dollar goes. We won't have that for another month, outside of their random bits that they come out and say certain things. So for now, if this gets resolved, there'll still be ongoing issues, which means the other central banks will probably stay firm. They probably won't continue with the rate hikes, but they'll stay firm. The only player in town to reduce rates is then the US. So we've seen this massive run up in the dollar, but if this ends, there'll be a huge decrease in the dollar. It'll fall, flip, U-turn, all that kind of stuff. So in that case, obviously euro dollar goes right back up to 118 plus. Where was the gap? That's even further back from there. Up here. So 118. 118.20 up here. Right?
Yeah. Right. Yeah.
Now, that only happens if we get that though. Right, so in the interim, so long as this keeps going on, we still have a net negative, particularly for the EU. So I prefer to lean on the downside. It's only once we get this somewhat resolved that dollar will flip and go the other way.
It's almost like it's on just that sort of autopilot in the middle between certain like things coming out.
Yes, because obviously we get the uplift for the euro right now with that resolution component. But obviously, if this just turns around and we're going on for another 2-3 weeks, this comes down because euro is definitely, or the European sector is one of the most heavily disadvantaged from the entire escalation. Yeah, so we're between 2 points, and we basically like rubber banding back and forth.
Yeah.
So it's very annoying to trade, to have confidence overall in the trade. Hence, I just go off these technical structures overall. I think for now, hence I'm saying today, just like we came into yesterday, we had the negative news coming through, you bet on positive. Because, right, we've had the positive, chances are we get a bit more negative of a lean. So I think that's the only way you can really trade it. And then from the entry-exit standpoint, use the text from there. So we've got pretty much this lower trading block with the tops here at about 115.97, 95 or so, just below that 116 round number. And then the bottoms here where we had a touch here, and a double touch there, right? So it's about 75. So it's like a 25 point range. So this is what I'd call neutral zone. Below that, sell. Above that, buy, obviously. So it depends whether you want to try and sell from the top of the neutral zone or wait until we actually get a break either way. My only trouble with the topside break is I'd have far less confidence in that right now.
Yeah. just trying to think what. Yeah, when it comes to the upside, with everything going on, with what you've just explained, it makes complete sense why you'd be a little bit more heavy leaning towards the sell side. I think for me, when it comes to the technicals, as well as what you've just mentioned, I'd have to be on like minimum 15, like even like 30-minute, maybe hourly, and then start looking at, yeah, exactly. Start looking at like where are your moves, where are your key points, not necessarily where's your intraday figures, where's your intraday areas at, but more where's the overall big figures at, where like where's the big zones, where's the area, the heavy hitting areas of interest that you can see that price is identifying. And then, with that and the fact that you're using the fundamental analysis, I think that's how I would be playing this at the moment. When it comes to just strictly how I trade as a rule, I'm in survival mode at the moment, severely reduce my risk. I'm trying to jump up a little bit onto the higher time frame and either do one of two things. Either look at higher time frame moves, trying to follow that trend and trying to anticipate and read as much as I can about the news, or you have the complete opposite where you're super low time frame, and I'm talking like 1 minute to 5 minute, scalp a couple of pips that really don't matter, and then run away. Just like hyena scavenger strategy. Go in, grab, sprint. And then just take what you can and then leave it for the day. I think that's the only way you're going to be able to play these markets. Certainly, like over the next couple of weeks. But what about you? Are you actually looking at anything at the moment, or?
That's right. No, I definitely agree with what you're saying. I was just marking up some trades with basically what you were saying. So either I look for a break down here. So from that drive high that we had, we've got this interim level. So I go there is like a call it like a TP1, TP. Hang on, we need more space. 2, which would be down towards where we actually kicked off from, and then obviously down here would be like TP3.
I like your TP1 level. I think that would be the most optimal TP level if I was to be selling the euro. Either that or like I reckon even your TP3 looks good. TP1 and TP3 to me are like they're the really nice TP zones that I'd be looking at.
Yeah. And then we've got the upside. So we've got this kind of I don't know, some people call this like a flag still. I don't know, whatever you want to call it. It's just rubbish names for stuff. So we've got this basically double, triple bottom, depending on what time frame you're looking at through here. We got the descending trend line through here with the tops. So if we got a breakthrough here, you'd either wait for this double top through here at that level, above 116, what is that, about 18, so beyond 15, 17, in that kind of area, or you wait for the break through the actual declining trend line roughly through there and where the candle close is, which is about 116.08. So beyond 10, you probably assume that we're going to keep going. And then, so on the upside, you then scroll out, and then it's really hard to see exactly what tops. Do you go through these tops where we basically had this right, sort of bit of a head and shoulders pattern through there, or which is also through the baseline of the main average top of these wicks, or do you go through this top section up here? I'd prefer to go through this one, so that would be like TP1, and then this would be 2. I guess I don't need to write TP, I can just write 1, 2. And then obviously breaking beyond here would probably send us all the way up to the gap on some kind of resolution, which would be like 3 up through there. So that's kind of what I'd be looking at on euro overall right now.
Yeah,
Myself.
yeah, I'd be tempted to agree with that. The thing is, for your buy or like your long position on euro now, I like that idea. However, the TP, I just feel like it's not far. A little bit like what we were discussing with the pound. It's not a huge distance, and
Yeah.
you've got what 1 to 1, 1 to 1. Oh no, you got 1 to 2.
Point
Is that
nine.
okay? Yeah,
Yeah, it's
1 to
1 to
1.
2. It's still
I mean,
alright.
it's not bad. It's pretty good still. So
Yeah. So that's what I mean. With the upside, I see less potential. So even
yeah,
with this on that break, I'd even see if we got a failure through here and then run that all the way down to there.
yeah,
Then you've got
yeah,
like
yeah.
a 6 or 7 to 1, right? If this sort of caps out, say towards the wick high there and that prior wick high there and the spike high and that prior high. So we've definitely got a bit of a level through here. So if you get maybe a touch through or something, but it fails, you get tapped in, take that, you could even pull that down to here, right? You know, about 26, just above that 25 blanket number, run all the way down there. Like that's a 14 to 1.
Yeah.
That's, as far as risk reward, this seems much more favorable right now.
I was gonna say the probabilities are stacking when it comes to the risk to reward ratio side of things. So when it comes to what are you leaving on the table or what are you going to potentially put on the table to take off, the sells like when you start analyzing, start looking at the fundamentals, start reasoning and putting logic behind the whole trade idea. I think shorts are favorable. Certainly,
Yeah.
I think it doesn't take a genius to realize that one. Although looking at your stop loss there gives me anxiety with how tight that is.
I mean, when you're on the break point, like you want it to be sort of tight because it's basically, yes, this
Yeah, enough. Yeah, fair.
ridiculous, right? So it's still what's that, from like 19 up to 26,
Yeah, fair. Yeah,
right? So
fair.
it's about 7 points, but obviously if you kept running, it's probably going to keep running. So in that situation, when
Yeah,
you're on
no,
that
fair point.
breaker point, yeah,
It's either go or no. So that's the point where it's either going to go into your direction or you're completely wrong. And it's almost like that sort of how I say put your stop loss where you're wrong.
yeah,
For me, that's swing points. Now, what LJ's just touched on there is the go or no. It's you're either this is the point that it's going to go from, or you're wrong and it's just going to keep going to your next point or your next swing level. So you may as well completely reduce the size and have that optimal level. Give yourself a little bit of breathing room, but have that optimal level for risk reward and for financial gain.
so you
But
want to
guys, make
see
sure.
something like that, right? If
Yeah,
you see
yeah,
this
yeah.
just going right up, then yeah, you're probably going to pull back to like here and then keep going.
Yeah, exactly. Yeah,
Right,
yeah,
so
exactly.
that's why I want to see a slight failure above that key level, and then for it to come down, and then keep going. So that's
Yeah.
why I'd run that tight. But yeah, Henry, you're being cheeky. Yeah, I know we got a text tool. All right, You see this? This is my Picassos, dude. I was gonna send you one in the mail. Right, it'll be worth a lot of money in the future.
Dude, he's signed them in the bottom right, and he's now selling them in art galleries. It's
Yeah, you're probably not going to get one now, Henry. Jeez. All right.
yeah.
You're
You
in the
can go
bad
buy
books.
it on the retail market like everyone else.
Yeah, you'll have to. Yeah, exactly. Yeah, after, not for retail. He'll have to buy it on the aftermarket. So he'll pay you like
Yeah.
10x. There you go.
Oh man. Oh, guys, on that bombshell, I'm gonna have to love you and leave you. I'll be back in a couple of hours. But in the meantime, make sure you look after these two absolute legends. Make sure you smash that like button, and if you are new here or you haven't already, make sure you subscribe to the channel. And for now, peace.
Peace out, Will. Cheers, man. Pedro. How we doing, brother?
Okay. How good, man? How is everyone?
Good.
How is everyone in chat? Yeah. What trade are you in? Is that euro dollar?
So not in one right now, but we were marking out potentials given because obviously very hard climate at the moment, with technicals kind of breaking down to a degree. You can get one headline that comes out and just destroys everything, right? So we're looking at this current structure. We've got this bottom there, and then on the lower time frame, we had basically a double bottom on like the 5 minute, 1 minute through here. So this is definitely the key point after the run up from last night, and we've got this descending sort of activity coming through here. So it's a skewed triangle, and we're talking about whether you could buy it from here. We saw the pound data come through. We had a slight dip through that bottom just for it to jump up. And again, whether we get a slight push up a touch higher. But it's not very good risk reward. So this was the one that we mapped out from there, and that has now tapped in. But the question being, going forward, given the current situation, would you prefer to bet on price running higher? Because pretty much above these levels pretty much is like the situation's calmed down. We've got a somewhat resolution of the sorts, or some kind of firm ceasefire, de-escalation, or you bet on it's still going to take some time. Look to potentially either sell these tops as like a extension break, or else run this on the break through here and look for those lower levels that we ran up from yesterday. That's basically what we were talking about. How do you play the current headline driven environment with the respective technical setup where we are after last night's pump overall? So that's what we were talking about. I will just, if it's all right, if I jump up for a sec, I'll come back.
Yeah, go ahead.
And then run through things. All right.
Go ahead.
I'll be back in a sec, guys.
Go ahead, OJ. No problem. What's up, everyone? All right. Now it's only one in here. So let me know what you guys are looking at. I am, 1 second, just look at a few comments in here. Yeah. Hi, Louis, Theova, Steven. All right. Tell me what you guys are looking at today. I am in a short on dollar yen. So this was basically a Quasimodo pattern. As I've been saying for quite a few weeks now, I've been trying to look for a potential short on dollar yen for a while, and finally the opportunity arrived yesterday. So I am short from there. As you can see, basically price was creating this range. 1 second, just reduce the volume. So price was basically within this range, created a bottom in here, we fake out the top, and then we completely smashed through this structure. And basically I was just waiting for price to retrace all the way back into this next level in here. And that's basically where price finally arrived. This is also a Quasimodo pattern. Basically I have the left shoulder, we have the head, we have price breaking structure, price all the way coming back to the left shoulder. And I'm short. One of the initial targets on this trade, I did close somewhere around here. Initially, when price started to move lower after that post from Trump, I didn't manage to get my first TP. But one of the targets that I was also aiming for, it was somewhere around this level. I didn't close my trade totally. I'm hoping for price to potentially continue. I think I got a really good entry, so I will let dollar yen bounce whatever it needs to be bouncing in between until eventually try to resume to move to the downside. My main fear on this trade is the fact that price can still maybe go a little bit higher. Price can maybe still play this bigger structure, and coming all the way, we are looking at 160s, 200s. Okay, so that's a little bit of my risk, is that price can potentially still make a new attempt to go a little bit higher before trying to go all the way down. On the other side, if we do manage to start breaking below these lows and kind of this structure, then I think I may be in actually really good trades, and price may actually continue to follow through and maybe eventually fill all this that is underneath this low. So yeah, I'm just going to be patient on this one and see what dollar yen is going to give me. In alignment with that, I do have also, of course, potentially dollar yen, which if the yen index actually helps and starts moving to the downside, at least maybe dressing a bit towards to these levels, maybe that's going to be great. Otherwise,
the Dixie.
Yeah, the Dixie. Otherwise, if it starts going up, then that's going to be a challenge for my order on the dollar yen. And then looking at the yen index as well, it keeps respecting these lows, kind of this structure in here, kind of working as a support level. And I have this level in here that I'm also aware of. If price starts breaking above this level, that would be really great for my potentially short on the dollar yen. So those are just a few things I'm paying attention to see how eventually it's going to evolve. Because yes, otherwise I may be in a good trading here. We'll see. If I was about to add into this position, I'm not going to really add until price breaks this structure. And if price then breaks this structure, I'll be looking for a potential next structure before trying to break kind of, I don't know, some kind of a move to try to jump into. Again, this is not exactly the type of opportunity that I usually take in terms of continuation, but it's one that I will be paying attention to see if that actually happens. But for that, definitely we need to see these lows being taken. Otherwise, there's nothing for me to do there. And yeah, that's basically the trade I'm in. I was actually starting to pay attention a little bit to the pound dollar to look for a long just before price rallied. I was starting to do my analysis in here, looking at the lower time frame. I noticed as price had broken this small structure in here. I think the only thing I didn't really like to look for that long was the fact that this top in here was still respecting the previous low. So this top in here, not low, but the supply, it was still respecting this top in here, and it didn't really open the space for price to go higher, at least the way I look at it. So if this high had made this move, I would have been way more confident to try to look for a long at around this level, but that didn't happen. So I was kind of starting to look at it, and all of a sudden I just saw price rallying like that. So that was gone. All right, what is your LJ? By the way, I don't know if this is a fan that you have behind you for the heat. I don't know what it is, but there's a little bit of noise coming from your side. Background.
It might be my computer fans.
And okay.
Yeah, it's a bit warm here. Give me a sec. I'll try turn it down.
It's okay. It's okay. I just recognize that I don't know if you guys can hear it as well, the background noise from LJ, because I was in that position as well in the past. Like for some reason my PC was making so much noise, so loud. The fan, I had to replace the fan basically to and then it fixed it finally. But yeah, my partner was super annoying with me because he could hear it everywhere in the house. All right, swing trading, a pullback in the dollar yen. Russell, from where? Where are you looking at? Are you looking for longs? Are you kind of potentially continuation to the upside, or are you looking eventually for a short? What's up, Tai? Pound, franc Swiss yen. Okay. What is your guys? If you want us to take a look at any asset that you are recommending, it would be great if you guys could tell us if you are looking for shorts or longs. If you are looking for which time frame, is it 1 hour time frame, is it the 5 minutes time frame setup that you are looking at, so you can give us a little bit of context, and that's going to help us a lot. Because if you just say franc Swiss yen, I don't really know what to do aside that. That's a pair, right, to look at, but I don't know what else to look at it. We have Stach in here. What is he saying about pound? I'm on a long pound dollar looking to reach Asia high, just set break even. Okay, that's maybe more intraday stuff that is looking at. Which one is the Asian high in here? Is this one? This one? Nope. Is this one? Is this top? This one in here?
134.15. That's the end of Asia.
Okay.
Yeah, so it's that high technically.
Yeah. Okay.
Right.
Okay. Somewhere around here. Okay.
Yeah.
Yeah, but that's already gone, right? The price already went there above. I already took the votes as well.
Yeah, I think he's
Basically,
saying
I
like a
already did the full
return
thing.
to that level from this pickup.
Yeah.
Yeah.
Okay. Yeah, we'll see.
The higher high was basically start of London.
Yeah, 7 a.m.
Yeah.
Yeah, just basically already at the beginning. Yeah, it's in a range. It's indecised. What I could see a bit more of moving to the upside, maybe on the euro and pound, just technically. While on the dollar, price is still respecting at least this trend line as well, which is kind of nice to see. And you have still kind of this structure. When looking at Euro Index, for example, Euro Index already did a lot of the move. Okay, Euro Index, and it was basically the same correlation with Euro Dollar last week, and it already made a lot of the move, already filled out of this structure, and now it's getting closer again to the previous level of support resistance, which may still go a little bit higher as well. So I'm curious actually to see how Euro Index is going to react somewhere around here, to see if there's going to be any more sell pressure on the Euro pairs or not. Or then it can also just retrace to here and then just continue. So that's something that that could happen as well on this Euro Index, which can then play a little bit on the Euro. But at this point, honestly, a bit maybe similar to you, is just to see if price is going to manage to break above the structure or not, or if it's going to keep holding it. If it breaks, then maybe there's a little bit more of room for price to potentially go a little bit higher on the Euro. Yeah, we'll see. I didn't want to put it exactly into the words that you said. Kind of, it's going to depend so much on the war. Maybe sometimes it's going to be just on the next steps of the situation in the Middle East. Maybe it can be a bit just technically or based on technicals. It's true that we don't really have much news or many news this week aside from today. The service in manufacturing. Tomorrow we have some CPIs in the UK. I think Australia as well. Or maybe Australia was already this morning. But aside from that, there's nothing much this week. So we'll see what kind of opportunities we're going to have.
Yeah, it's all headline driven, right? So, but at the same time, this is very much a macro event at the end of the day. So that's the thing. Even last night's spikes or declines, depending what asset you're looking at. Headline driven, once again. Same thing with this. I very much like your dollar yen short, because I think this will ultimately come out in a better space. Trump's timeline was about that 4 to 6 weeks. We're now through 3 weeks into the 4th week. We talked about this before, so I'll just run through it quick, but it seems as though they are trying to push that on, right? And Scott Bessent in particular, as I've noticed, has been very quiet, where normally from the past while with the trade talks, all that kind of stuff, whenever Trump kind of missteps or stumbles, he'll come out and recorrect things. He's only done that once through here. Rest of the time, very quiet. And I wouldn't be surprised if he's getting the tap on the shoulder, saying like, hey, wrap this up. This is not going well. You need to fix it. So I think there has been some missteps. They probably misjudged how much Iran was willing to just stay steady, because how they get that win is by just creating as much difficulty for the US, which bleeds out to Europe, UK, China, everyone, the globe, and eventually forces them to some kind of agreement or ceasefire or relaxation of aggression. Now, in that case, obviously, last week we had the big central bank week, and everyone was leaning towards hiking rates. I really hope that doesn't eventuate, because this is the same thing how we got the financial crisis in 2008. So if we get a resolution or some kind of at least relative pause, and resolution would basically be opening of the strait, supplies keep coming through with commodities, whether it be oil, gas, everything else, fertilizer, all that kind of stuff. There will be some elevated prices, input prices, but at that point, so long as it's open and things are flowing, central banks will probably hold out from raising rates. Now, the other central banks will probably be firm on holding rates where they are, where we did have potential rate decreases from Bank of England, ECB, that kind of stuff. ECB probably had maybe one more, depending. It's probably out. Bank of England out. The only player that can reduce rates at that point is the US. Right? They have all the oil, nat gas, all the energy they need. And then I think that's where we get that turning point. Dollar collapses after being bought up through this scenario. And then Japan as well is the hard one, where it might just be enough for them to start raising rates. Obviously, massive energy importer, which you don't want to increase rates based on energy, but it might just tip the scales where they've already been on the verge. And you just do it anyway.
Yeah.
That will come from the nod from the US to do it, depending on where China is. So it's no mistake that obviously Takaichi and Trump met the other day. So again, it all comes down to dollar yen at about 160, like you're saying. So I would definitely prefer to lean on that. I think that's going to be potentially one of the biggest trades of the entire year. Defending that 160 level and selling down. So yeah, I like your dollar yen shorts. But I mean, we've still got a bunch to go through from here. We don't really get the next central bank sort of talks for another month or announcements. We get comments in between, but it's very tough.
Yeah.
Right now, so that's where the macro meeting, the techs are very difficult. It's a dog's breakfast, right? It's just a mess right now. Very difficult.
Yeah, it's going to be difficult to find a resolution. The way I'm looking at it, it's basically we all know who the winner would be if they were about to go full strength, but the problem is the loser, which is Iran, is going to accept to stay losing for as long as they want, and without like any common sense whatsoever, like not caring at all what everyone else in the world is dealing with. While the US is kind of about to win it if it actually wants to go full force on it, but it needs to be thinking about everyone else at the same time, even the American people as well. So it's going to be a patience game. Like Iran, I don't think is going to care if it goes kind of a lose for 100 or lose for 1,000, kind of that expression. So they will just carry on. They will just carry on for as long as it takes until
they've already been losing
for everyone else. Yeah.
Right, like they've been out of the global system for ages with sanctions.
Yeah.
So, what do you have to lose, really?
Exactly.
In some degree. So that's where I see if potentially this loosening of sanctions, allowing Iranian oil, Russian oil, that the US does some reverse strange thing where they go, okay, we've allowed that, and we're gonna continue allowing it. And on that agreement, you guys calm down. And they try and bring both Iran and Russia back into the trade system. Obviously, Russia is the hard one. But that might be the pathway for Iran. So in that case, obviously, oil plummets off that.
Definitely.
So we got very binary outcomes. Yeah.
Yeah, it's about the timing and if it's about to happen or not. But yeah, we'll see. For how much longer it's going to last, the situation, I think if that stays, we may have more selling pressure, for example, on the US indices. If it finally kind of went below that structure that we kind of looked at, that I've been looking at for a long time. yes, it bounced yesterday straight away after the news. That's another situation that it looks like about last year when Trump was tweeting a lot about the tariffs. Was saying something, and then a few hours later, it was someone was saying that's not true, whatever. So there was a lot of that volatility going on in the beginning of last year, until eventually the volatility in the market learned what was the playbook that Trump was playing, and it may start the same thing as now with war, right? Yesterday's move, it was obvious that everyone, the investors, are eager and hopefully looking for a resolution as quick as possible so they can start putting money into risk-on assets, right? That was the 5 minutes candles that we saw being created yesterday. It was exactly that. Okay, maybe there's some resolution here. So that was literally intent. Like if there was something that we could take from yesterday's move is the investors are eager to see something to be done and a resolution to be achieved in here. But while that's not going to happen, that's the problem, and that's where maybe we can even have a bit more of downside moves before actual price eventually we go on to go up again on the US indices and whatnot. Yeah. So meanwhile. Meanwhile, there are all types of opportunities, either quick moves, or maybe in a lucky one you can kind of catch a nice one and you keep on driving that trade all the way through. The move, gold up or down? That's the question. That's the question.
Look, yesterday was very good for gold. If you caught the bottom, like obviously we hit the. I know you don't have them on there, but it was basically at the 200-day moving average, like just a touch above
here.
there.
I'm starting to bring those moving average. Oh, there you go. Look at this.
Yeah, exactly.
Yep.
Bang on, boom, reverse.
Yeah.
Beautiful. Chef's kiss. So myself and Dirk yesterday took longs on gold. Very good. Also took a short on oil by chance, which is very speculative. But just like you were talking about. So one of the things I've been watching right now is futures volumes, where whenever Trump has these announcements just before, whether you want to call it insider trading or something else, where he gives the tip of the hat to his friends. We were talking about this earlier as well. Saw that about 20 minutes before last night's announcement and just took a speculative short on personal accounts, and then we just collapsed. So
that's great
trade. Myself and Dirk were very happy yesterday overall. So but yeah, it's really difficult because trading right now, techs are all messed up because of macro. Macro is messed up because of the timing, and all we've really got is headlines. And then the only way to really gauge a new input from what I'm seeing is options and futures volume. When you see those volume spikes, and then basically ride with that. And if you're taking outside trades, rely on the technical structure, but be willing to flip that idea.
Yeah.
So yeah, I'm curious, how have you actually traded much through this period with the chaos and like gold absolutely coming off, silver the same deal. I think gold will have a better time reversing overall. I think if I had like a hedge fund right now, I would go long gold, short silver. Okay. I think silver could potentially end up back around 50 an ounce at the end of the year. But I think gold will get that rebound.
I was just now making some drawings in here. I could see it coming back into this structure here, which is 53s, 54. There's maybe still a bounce to happen from around this level. not yet there yet. But then I think I'll prefer to see it actually coming into a bit more into this structure. Yeah, I was always a bit more bearish on silver. Just the structure. I mentioned that anytime you have a top, price comes down, kind of breaks something, and it comes back and makes this low again. Basically, you had this low and then you had this extra low. Usually, that's more of a bearish sign than a bullish sign. Okay, if it is just a low that maybe breaks some structure, but then price creates a double bottom, that's more of a bit of a bullish sign. Okay, quite similar to what happened on dollar yen before. Okay, where was it? Not here, a bit more in here. Like price broke this level, created a double bottom, not breaking it, and then still managed to fake out this top in there. Okay, if dollar yen had managed to break this level, I was way more confident to short from around here without the need to break new highs. But silver, it made that move, this one in here, so I've been a bit more bearish. It was then a question mark is where is the top being created. In this case, it was just fake out this level and the price just dropped without really the need to come all the way back into this structure here. Maybe a 50% retracement. I'm not really sure where this reaction was. But gold was a bit different. It didn't really create that much yet. At least it was just one low, but it didn't really create a double bottom neither. That was something that I was looking at as well. Like price gold dropped really quickly, but it never really retested. Yeah, it never retested
angular level. Like
it just stayed in here. And then
like the trend line that you have that we broke on Friday as well.
Yeah,
originally would have expected we'd get a bounce from there, but we had the headlines on Friday and just sent us lower.
Yeah.
So
that was a little bit different. Just at this point, I'm really just talking mostly technical as well, without really going into too much of which one to look at. But technically, there you go. There was no double bottom in this case. Prices created virtually low. Then retraced, respected this top in here, and since then it just sold off. But at the moment it actually respects this double top in here, the next time that it reacts in here, because it still reacted a little bit, still bouncing here and then traded and then eventually broke. But at this point, I'm not really expecting this low to hold anymore. I'm more bearish than bullish. And we were bearish in here, right? That's actually the trade that was the big one. I think it was Tuesday or Wednesday. When did you? I think we were on the live stream together, and we were looking for.
Yeah, we were.
And
same with the prior high, where you have the two lines above that.
Yeah, sorry. Yeah, somewhere
so we
here.
both mapped that out as the. I had that as the. Hang on.
Yeah, that looks like a top to me. Yeah, this was a great level.
Yeah, so if I go over to mine, same deal.
Yeah, 1 second. Yeah.
So that major potential sell zone, which we tapped into, has just collapsed from that.
Yeah.
Right. So, yeah. So I'll dip back to you.
Yeah, now, so if someone is asking exactly about gold, now the level where it reacted is not bad. Again, this was already, gold dropped 20% already, okay, from basically this top to here. It's basically a 20% drop, so it's kind of a big one. It's not a bad level where price ended up reacting within this structure. Eventually could even try to target this level, but it's already below 4K. I'm not really sure the price is going to go as low as that. So I think we can be trading this range for now. Okay, maybe somewhere around this top to this bottom, maybe you can be trading. I think eventually it's going to stabilize a little bit. Again, this was a really massive move that we had the end of last week, and I think price needs to slow down. Just the same way that price kind of went really big in here, and then eventually it's going to have a couple of weeks where maybe price is going to just stabilize a little bit with smaller moves. And maybe that's going to happen maybe this week. Price already came a little bit closer to the structure, so that's okay. Maybe even consider this top that price already touched it. So that's okay. And now we'll see how price may react from here. So who knows if price is going to stabilize a little bit between these levels until it finds something. If it starts breaking higher, then maybe we can try to trade a bit more closer to this 4,600 or something like that. And I think we can be trading between this high and this low. I think we can be trading around this level until further notice, basically. But it's already a big range. We are talking about 4,700. We're talking about 600 points in here. That's quite
a
big.
Massive range on gold.
Yeah, that's really big.
Massive. Yeah.
Yeah, so if I was about to trade anything, which I'm not on gold, I'll be trading within this range. That would be my goal in here.
Yeah. Yeah, so I basically completely agree. So that 3,800 rough level on gold that you were talking about, like lower, I think that would be the absolute low. I was talking about that with a bunch of the guys, like 3,800, 3,600 as like extremes with some of the guys in Discord. I don't think we'll get there at this point. I think you'd have to have something seriously going wrong for that to happen. I think silver, though, definitely has the capacity to go lower. Because I feel like, I don't know, people still forget silver is not a precious metal, right? It's still very much industrial. 50% of silver's use is industrial, and that has still been declining overall. So I wouldn't be surprised if we get silver going below or into the 50s towards year end, and then we get gold going higher, like I was saying. You know, we've talked about silver a number of times, and I was basically said it's a $65 to $90 range right now. If you start to go out of that because of anything else, now we've got those adverse circumstances. Yeah, silver comes right off once again. Like it's not actually worth that much, right? Because it is mainly a industrial metal, no one is going to pay those prices. Yet demand destruction, price comes down. Just like when we had the tops. And I mean, we talked about this ages ago, Pedro. Was saying like this is not going to sustain and will come off. So even from here, I would still see further declines. So don't necessarily bet on silver also going up just because gold is now faring better. Right, this is pretty much the kill zone for silver for me. And I think we'll sort of linger in there and potentially we go a bit lower, even all the way as far down in extension towards $40 an ounce. So this is basically the range, right? And we got those tops through there. That was when we were back through here, this was the range I marked out towards the future. We had that dip through, we're now back in. We did get those tops, and I think they'll be pretty firm. But I would say we actually end up in that lower band of this right now. Just because, you know, there's often a bunch of guys that buy gold. You know, when gold is running back up, they want to buy silver because it has a higher percentage movement, that kind of thing. And then silver drops back, gold goes up, and they get crushed. So,
what about this comment from where is he? Mansamus Golds. If the Dixie requires 100, it's over for golds.
I both agree and disagree with that. So for two reasons. So this comes back to the macro. So if we actually start climbing above 100 on the Dixie, that means this entire situation is cooked, right? That means we're pretty much heading towards the stagflationary type scenario. Central banks up rates, potentially we get, I mean, not potentially, we're definitely going to get a crash of the economy at that point. Gold initially will probably further collapse in the initial cycle because of that expected higher interest rate payment, and then thus the cost of carry for gold goes higher, as we're seeing in bond yields right now. So the major thing to actually watch is bonds. Everyone hates bonds, very boring, but that is the lifeblood of the economy overall. So yes, if we cross over that, that would probably imply dollar yen has run 160. That would mean euro dollar has run below 114, heading quick straight to 112, and then probably below that to eventually 107, 105. That would be in the worst scenario of the current escalations. Now, if we get on top of that, central banks increasing rates, that's where we get the GFC scenario, and eventually a full recession and collapse, particularly when we have the private credit situation going on in the background, which is not looking good. So if rates go up, they can't refinance. That collapses. Withdrawals go up massively. They have to close the gates. So people's money they had on paper evaporates, just like the GFC. We see hiring freeze. We see layoffs come in. We see demand destruction because oil, gas, energy input prices are way higher, both for consumers and businesses. Everything is cooked. So not good. On the initial global collapse, then because that is happening, we get like QE being pumped out. I think at that point, the US would have to put into, because the Fed only controls the short end of the yield curve.
Mm-hmm.
At that point, they'd have to put in yield curve control, just like Japan. Control the back end, because that will be ripping. Especially when they have the refinancing cliff for US government debt, right? Which has been this whole thing about reducing the debt, reducing rates, all that kind of stuff to refinance. So at that point, you'd see gold going down and then absolutely running higher. Because once we get the QE, yield curve control, all that kind of stuff, dollar is the reserve currency. Yeah, who knows what's going on. It's all then based on if they can get Europe, the UK, or the other major like G7 countries to do the same thing as the US at the same time and agree with it. Which after weakening their relations from the whole trade spat, questionable, you know. So yeah.
Yeah, that's worst case scenario. Yeah, basically what you just explained.
Yeah. So basically a dip first, but later,
yeah,
that's the only safe asset there is, because even bonds, when they'll have to buy back a bunch of bonds, no one is quite fully sure what the proper interest rate should be for those bonds, especially when we see that reaction with the dollar. Is it going to strengthen, weaken? Typically it should strengthen, but given the current climate, it might be a bit more mixed, and then that changes the entire dynamic with the bonds itself, right? So this is why I hate this current environment. Like, we're in a new scenario. It's almost like it's basically like 2008 2.0, regardless of the actual thing happening, but just in terms of the new financial engineering, where at the time, now QE and all that kind of stuff is very normal. When it happened, everyone's like, dude, this is crazy. Inflation is going to 1 million and it's all done. The global economy is over. We'll get that same kind of scenario now where they have to implement new financial engineering. And initially, people will be freaking out trying to figure out how this will actually work, how it will play out. And the thing is, they had strength back then. Now it's a bit weaker, and you got China in the background. So that's where it gets difficult. China is a real player these days. They weren't back in 2007, 2008, right? So, yeah.
That's fantastic.
We'll see. We'll see when we get there. Believe me, I'll update you guys. Like, I'm still trying to toss it around in my head, like, right now. So, yeah.
I think everyone is trying to play scenarios at this point. David, welcome. If this is the first time or not, feel free to subscribe to the channel. Keep on helping us to get now to 200k eventually. So we just crossed 100k, so we are quite happy with it. But that's next target to 110, and then we carry on. But welcome to the live stream.
No.
And go, yes.
We were talking before. We don't go 100k. We go to 1 million.
Okay, right. So it's not 200.
We're skipping 2, 3, 4, 5. We're just going straight to 1 million.
Okay, it's just an extra zero in there. And then our friend here is basically saying, okay, so basically it's safe to say if Dixie is above 100 and it stays there, we are just cooked. Okay, that's a way to put it.
I think that's actually not a bad way to put it, because pretty much I mean, we've talked about this in the past, I don't know, 2.5, 3 weeks since this like kicked off. Same with like Dirk and that kind of thing. So if dollar yen breaks 160, start to get worried, right? And I think Pedro as well, you'd agree, like even from a technical standpoint, all that kind of stuff, that's when you go, okay, something's changed. Because right now we've had traders, even when we've come close to that, willing to defend that level multiple times, even not just the recent period, but in the past.
Yeah.
So if we firmly break that, that is definitely concerning, right? So it doesn't mean we're full cooked, but it means we're in the heat zone. Like start putting on your fire retardant jacket and
That's boring
that
at the
kind of
time.
yeah. Start, yeah. You know, not all over, but definitely get more concerned. Like it's become serious. Right now it's very tentative. Like we're very moderate. Like yes, there's stuff going on, but it's not crazy. There's potential for it to be. But if we start pressing that, that means yes, we have breached that that kind of threshold overall.
Yeah. What's up, Discipline Trader? What are you looking at, my friend? Because I think you usually take great trades on gold. So if you want to share your bias on gold, feel free to do so. Thank you both. I see the same thing. Been short our risk for the last 2 weeks. Be nice. Yeah, that's great. A great interaction, great questions as well, and good comments. That's exactly what we like to see from you guys on the comment section. So that's great. What about US indices, LJ? You're saying that level could hold. We finally broke it. Even though, again, for anyone that trades the daily time frame or waits at least for the daily candle to close below, I don't think he actually closed below. So for those that need a closing below a certain structure to consider that actually broke structure, they are still neutral, maybe. I don't really need a break below the structure. But what is your take in there?
Okay, so first of all, as far as the current drawdowns, like quite frankly, we were due a drawdown in general, right? The market tends to have at least a 10 to 14% drawdown roughly every year to 2 years. Regardless, we've had very consistent upside. The past 3 years, it's been like 20% year-on-year return. Roughly, 1 year might have been 18%, whatever it is, right? So we're definitely due for that sort of pullback naturally, regardless. Now, through here, this is a NASDAQ. We crossed that 200-day moving average some time ago. We had basically this high cluster through here. Sorry, I've got a bunch of the options levels from the past there, but you guys can still see basically this lower level with that high. This has been the sort of dead stop point. So if we get rid of that again. Yesterday, we cracked through it. Trump came out and said we got some positive activity, some positive news, pumped it right back up. We ran back into the 200-day moving average, and by these the top of these candle open / closes, then we pulled back and we're about 60% or so of that drive. Now, that also comes back to where the market still seems to be holding hope that not necessarily what he said yesterday is one and done or anything, but hope in that this will actually progress and move forward. So we've taken out the risk premium of that Iran agrees, thus it's more closer to a 50-50 coin flip, but we're still holding that prerogative right now. So we go back to the S&P as well. Now prior, the NASDAQ had cleared that 200-day moving average or broken below it a couple times long before the S&P did. And everyone was waiting for, okay, do we see the S&P touch or break that 200-day moving average? and then see the Nasdaq also rally in sympathy with that after. Right now, doesn't look great overall. I think indices are very hard because we did have a very good business cycle. There is some disruption as far as like helium and these kind of things that go into AI, data centers, all that kind of stuff, which the question is then how much does that impact, one, their operations altogether, two, the further investment, right? Or does that just continue? Because if that does continue, we get these rallies coming back. So long as well, interest rates do either hold or potentially look to come down. If we're looking at we're going up, this whole thing collapses. If the situation goes on, we collapse. And we'll probably go back down to some of these key levels, like sort of mid of the rally from the Trump Liberation Day. So about S&P wise, I'd be looking about 5,900 or so, 5,950. That would probably be my base target from here, especially since we broke these lows overall. I think right now I wouldn't make a call, just like we were talking about. You've got to play it sort of day by day throughout this week, see where we are at the end of the week, and then it's going to depend on that central bank factor overall. Because if we get something worked out, and then central banks can go back to loosening monetary policy, full flip the other way. So at the current moment, I actually least prefer indices, because prior to this, we've also had the private credit wobbles, right, with AI infrastructure, that kind of stuff. So a bunch of the major players that are running the index have already come down. And now they've come further down, they're extremely cheap. So if you believe in that future that things will work out, funds are now starting to come in and buy that up. So you're against that, those two forces. So I prefer overall to trade currency in general. But I gotta say, the AI tech thing is such a, like the entire US is dependent on it, that I think they'd have to go all in to make sure that stays abundant.
Yeah,
So
I
hence
understand.
I overall would net be buying this. So I think any of these drops below, even though you're seeing these like key technical levels where we've had these breaks, I would start to actually buy up those bottoms. And just like we saw with Trump yesterday, as soon as we're pushing this, if you want to play that game, he comes out with a tweet or whatever to pump markets back up to keep them in a moderate area. He doesn't want full collapse.
Yeah, of course not. The other moving averages are what? Are the 50 and the 100? Which one are the other ones too? Because they're about to cross
50, 100. Right? Yeah, so that's 50, 100, and then 200.
Because those two at least on the S&P, they're about to cross as well. Kind of the 50 is about to cross below the 100. So that's an interesting one as well. I think on the NAS, I think it already crossed a little bit. Yeah, it already crossed a little bit, but it still needs kind of confirmation. And at what point, I think NAS like it will be a bit closer. Eventually, if the other ones actually cross below the 200, I think that will be, if price stays like it is right now, even if it is just on this range, I think eventually maybe another week or so, and eventually they get really close, the lines to each other.
So if we get like the lines like that, and the 200 keeps going up through there. Okay.
Yeah, I was mentioning more of the opposites. Yeah.
Something like that, and then price comes up and keeps going.
Yeah,
that's what I would prefer. You mean okay? So going down,
they actually cross below the 200. That to be
keep going.
That to be worst case scenario. Now, one thing that I still haven't really liked that much about this move to downside, and usually what we see on when actually tops are being created, is at least some separation. Like for anyone that maybe trades fair value gaps, whatever it may be. we haven't seen any fair value gap being created on the way down on these moves. Anytime price goes down, it just comes back again, then another leg down, another retrace all the way back to the high. Sometimes even fakes out the high before it moves down again. So I'm trying to see, for example, even if you look at the daily time frame on the even on the S&P or Nasdaq, whatever it may be, even from last year April, at least you had some separation in there. This is April, yeah, March, April. There was a little bit of a bigger separation. What I'm saying here is that basically every single move that price is doing is in a lot of compression. It's something like this constantly.
Yeah.
There's not exactly still kind of a gap in there, like a fair value gap being created. And usually you want to see that being created to actually kind of impulse into any leg or the next drop, whatever it may be. So that's still missing. If that happens, then I'm going to be even 100. Like, for example, if price vanishes now is like this, and actually there's a big negative news that's coming out, and we have a really big bearish daily candle, whatever, and then price finally just retraces a bit but goes without really touching anything, that becomes tricky, and that becomes a bit more bearish.
Yeah, I was going to say, typically, given the current things going on, S&P, Nasdaq, everything should have typically dropped way harder, and we haven't. They've been very sanguine, very calm, very measured. So that also means, though, that if we do get this really kicking on, and everyone throws out the whole idea that this will be done in the 3 and 4 weeks, and particularly this week, hence is the key catalyst for Trump to sort of come to some kind of resolution or de-escalation or something, anything, whatever it is, we could see massive falls. Now, the other part of some of the falls where they've been stemmed, that we did see a huge amount of selling equivalent to COVID, right? But we also saw equivalent buying for those that missed out through this current period. So we've got this kind of balance going on right there. But I think, if through that key breakpoint, if we see sustained daily closes below that, big candle, and it'll just be basically, I was saying to Dirk yesterday, and we were both saying, if this is not sort of really agreed and we've got proper progress over the next week, bloodbath, right? Because everyone will start pricing in the really, really bad scenarios right there.
Okay.
So, I agree. I think don't get fooled by both stock market moves and FX moves. FX has also been very calm, which normally FX is the canary in the coal mine and tends to move more aggressively, quicker, earlier than every other market. But we've seen most of the damage in commodities and the bond market, but we haven't seen that quite fully spill over just yet. It's tough. We've got a bit of a battle going on.
Yeah. There was one question here from I'm sorry if I not pronounce your name correctly, Angerind. It's a female trader so that's great to see as well. Like, you're definitely looking forward to see more women in the industry, and even interacting with us as well. Hey Pedro, hello LJ, can we talk about using ATR to determine weekly and daily maxed up for Forex pairs, particular GBP card? Thanks in advance. Do you use ATR? Is it something that you use usually or not?
I consider ATR, but I normally I infer it through different avenues often. Okay. So it's normally via like a pivot points or standard deviation channel in general, not quite through the ATR itself. So what were you looking at before?
She mentioned pound card. She mentioned pound card to look at.
Yeah, we'll go to pound card in a second, but this is an example where with like gold right here. So this is the pivot points
Okay.
right where we tipped that, we had the pause level there, and this was basically the collapse level through here. This is actually the main central pivot on the 1 hour, right? So this is a longer time frame pivot point, and you can see the R1 through here, which we also collapsed from. Then right now we've got this standard deviation channel. Anytime you press out of that, I'll tend to look for buys, for just at least a mean reversion type trade to come back into the average of that. So just like we had last night as well, and right now we're struggling to press beyond that. So that's generally what I'll look for as far as that, because obviously you can have the ATR, but it can shift, right? So hence I prefer to use the tangential ATR implied indicators to combine with that as like a confluence.
Oh, something's going on. Something's going on gold. Yeah, gold is just falling now.
Hang on. It is. That's a fair drop. Wow.
It must be another news. Another tweet. Maybe. That's the thing. We need to start being aware of maybe what time Trump wakes up or something like that, or kind of.
I was going to say, like we've had a bunch of headlines before with rocket launches, but
yeah, it's just there you go. It's that standard deviation that you had in there, the pressure.
yeah, I mean, look, this is 1 minute. This is 1 minute. So go out to the the further degrees, you're back into that support. The price heads through here, that kind of thing.
Yeah, but if you take a look then at pound CAD,
it was pound CAD.
Yeah, pound CAD. Yeah.
Yep. Okay, so similar deal. Yeah, you can see through here where you get the pivot points. So pivot points as well means like, okay, above bullish, below still in that bearish sentiment. So this is why I enjoy them. Obviously, you don't take them as like a firm piece to just, okay, we went above that level, go long, right? It's still a consideration point, but you can see right through here where we've got this key level on pound CAD, broken through that. That was obviously last night because of the news primarily, but again, we come up through here and pause around that resistance level, which will tend to be around some of the prior highs. Now we've pulled back. If you combine that with the standard deviation channel, you can see we've tapped out of that one standard div, moving from prior, the 2 negative standard deviation channel, up into that confluence with the pivot point. Look for that to pull back into at least the middle or the next best standard deviation point, which in this case is the middle point, and you get that further confluence with the moving average, right? So that's a great buy point from here overall. Same deal with the lows. If you crack through that and you've got something like other pieces through here, we get a bit of a trend channel resistance, where this especially is just saying that you've got higher lows, high lows, high lows, high low, high low. You got high, higher high, higher high, higher high. So potentially then when you actually retrace back into this area, this is a deep value level. You can probably get some kind of decent return and push higher. If you're looking at pure technicals and you ignore Trump's activity yesterday overall.
Yeah.
But yeah, ATR in general, I typically just look at that as far as the current expected movement. And then take the midpoint and roughly set where we opened from rollover and go plus minus that much either side. So say hypothetically where we are from rollover and say the ATR was like 60 points, I tend to go, in general, on average, like 30 above, 30 below, right? So if you see like a 0.3 negative rating on whatever currency, chances are that's sort of the bottom, and you'll tend to reverse up, and then you go 0.3 above, and then you come back down, and then eventually when we get a catalyst, that will actually push price beyond one way or the other, either above or below, beyond that general day-to-day back and forth movement overall.
Yeah, that's a good way to use it. Again, there are so many ways that you can try to implement that. I don't really use ATRs. There was a moment where I actually used to use it, the daily ATR, mostly just to see maybe what levels it's going to be eventually the bottom or the top whenever price gets there. But then sometimes I was getting a bit frustrated because price would actually just carry on for them dropping and not really just hold at that level. But sometimes it does hold it. I think it's important as well maybe to pay attention. If we are kind of reaching in a ranging market for a few days, then maybe those ATRs maybe actually tend to be respected quite more often. Opposite, if by any chance you see that price actually starting to create momentum, and maybe for the next 2-3 days, maybe there's going to be maybe some kind of continuation. Therefore, whatever ATR is calculated or level is being measured, maybe price will just break through it and just carry on. But those, again, what ways can you use ATR? You can use ATR, okay, as maybe a potential reversal trade. Whenever price gets there, maybe you can look for the reversal. Can use it as a target.
Again, it's a guideline, right?
Yeah.
It's a guideline as far as overall movement in the market right now. Yeah.
Yeah. You can use it as a target. A target can be a good idea. If price is moving in one direction and you are looking for a target, maybe pay attention to the daily ATR, and maybe you can target that level. Maybe there's a high probability that price will actually end up getting close to that structure. That's good. And then again, the other part is literally try to see if the market is more in a ranging market or in a continuation or momentum, basically momentum market, because maybe the likelihood or that the level is going to hold better, it can vary depending on which structure price is trading at. Yeah. All right.
Give me 1 sec. My housemate's asking me for stuff. Give me a sec.
Yeah. We have the decision trader that he actually sold. Yeah, he sold gold. So just catch that drop on gold. That's great. But basically price already reversing all the way through. Yeah, Henry, something happened for sure. Andrew, no, Andre. Pound slowly. Are you looking for shorts? Like yesterday we mentioned that you're looking for shorts on the pound. No, this is dollar yen. We'll see. Yeah, dollar is moving up in there. Is same thing as last night? Not exactly the same. Nope, we don't know what happened. Unless maybe there's some news. Maybe there's already some information about it. It was Turkey. Turkey did something with 135 billion gold reserve for Vero defense. So there was some kind of news from Turkey. That's why. Gold is went totally crazy. Yeah, it was Turkey. There you go. There's the news. Thank you for sharing, Donut. The online e-commerce. Yeah, Kim, basically. Thank you for sharing. Yeah, that's why it was gold also the only thing that moved, to be honest. Not really any other asset moved with it. But yeah, it's always great to have this chat with LJ, to pick his brain on this macro perspective, because that's actually the style of trading that I'm adapting even more and more as the time goes by. Try to look for bigger opportunities that actually can eventually get into good swing opportunities. Last week I actually mentioned also, for example, if you guys remember the pound and the euro Aussie, that trade, that setup and move is going really well. That could have been actually one of the one of the trades of the month as well. After price dropping for so long, got into a really good structure at this demand zone, start to creating some bullish price action. We had already broken slightly in here this top, one last low, and then price just moved to. It already filled basically the first key zone that I was looking for, just maybe even retesting this size, and price actually continues to move a little bit higher. So we'll see until where this pound Aussie can go towards to, maybe looking at structure by structure, but good move on pound Aussie. And euro Aussie, exactly the same thing as well. Good reaction from these lows, and already reacted and basically fill out this space as well. And they're looking at 4-hour time frames, so you can imagine this is a massive move, especially if you start looking into more time frame stuff. But yeah, these are the type of opportunities that I'm more and more focused on. So that's what I want to look at.
Interesting.
Yeah, these Aussie pairs. It was actually much better than the Aussie dollar, in my opinion, in terms of the opportunity itself.
It's been good.
Yeah.
It has. Yeah, I've liked it very much. It's been much more stable and compliant, both with text, and then also respecting the general macro environment. So the Aussie dollar has been very much my favorite through this as well. And even a couple of weeks ago, when we hit those highs, like you can see on your chart, I was talking about how, we'll probably get there. Australia, even though I don't like it, I think it's ridiculous, but we're going to raise rates again. And we did, even after coming into this situation. So we've had a double rate increase. And then with this current situation with energy input prices, is basically an extra rate hike. So that's why we've now seen off the rate increase last week, we saw the pop and then very much a decline. And we've seen that continued decline since, because are we going to hike rates again? We kind of already have the rate hike from that. So that's where we've gone from pricing more further rate hikes, which is meant to be 3. We've had 2. And now with the current input prices from energy, basically equates to 80% of a rate hike. Thus, we've seen it come down. So I like it though. It is definitely acting more technical, much more stable than other currencies. So
yeah, especially again for me, pound Aussie and euro Aussie, it was even more clear on what was going on in there. And Aussie CAD as well is kind of ranging quite nicely within this structure, so that's opportunity. And then Aussie yen actually is moving quite nicely to the downside. Aussie yen actually it was a good move to the downside, good correction, and it can maybe even continue to go a little bit toward, to be honest. We'll see how price may react from these lows in here. But good reaction, really good reaction from that one. Henry saying that maybe you are there's a high probability that maybe you're going to hike again, which is going to be a tricky one.
Yeah, dude, Henry, look, if we hike again, I swear to God, that's it. The entire economy is cooked. I think from now they probably will hold off, given the current situation. I think if they honestly hiked, it would be insane, because we're going straight to recession after that. No question. So, I mean, you can see there's still market pricing going back and forth, but that's also in tangential with the current market pricing for other central banks. So it hasn't quite hit the FX market the same, but I don't think we'll actually hike at all. If we did, I'll literally walk into the Reserve Bank and be like, all right, I'm governor now.
That's it.
Because you guys have no idea what you're doing. Yeah, not good. I sincerely hope we don't hike again, honestly. So
we'll see what RBA is going to do. This is for you, LJ. The kid end. LJ, what is your best gold analysis that guarantees you 70% win rate.
Like
Is there such a
guarantees.
thing? Yeah.
Okay, we can do that. Sorry guys, I've been getting distracted by housemates right now. It's kind of annoying me. Okay, so if you want we can give you, let's look at past data, because past data is definitely perfect. And we can go, let's do a 100% trade, right? You buy here, right? You sell there, 100%. Perfect.
I think you
now
can.
We're going to short here.
The stop loss is way too wide for me.
Sell here. Yeah, it's probably a bit wide. We probably should have just gone like this.
Yep. 5 pips
Like,
is my 5
probably
points.
like
Yep.
$2 an ounce or something. Oh, that's fine. Like what's that?
60 risk
Oh,
reward.
that's too much. Actually, that's too much. Look, where are we in at?
You need-
97. We need to go to 95. Right here. There we go. Perfect.
But
Okay.
you need to be tagged in though. You are not tagged in on the trade though. You need to actually be in the trade.
Am I? Okay.
No, you are not tagged in. Just a little bit more.
Oh, right, that's tagged in. That's fine. That's tagged in.
Okay. Now you
That's
think
good.
stopped out,
Right,
man.
we're in.
You got stopped out straight away. Just zoom in a little bit more. That's not.
Oh shit. Okay.
There you go. You are tagged in.
That's in. That's in.
Yeah.
And we're in spot. Okay. And then you're going to exit not quite there. That's a bit too short. We got to go a bit higher because we need that.
That's what I'm
reward.
at.
It's going to be
Come on.
162 to 1. All right. That's what you got to do.
Great trade.
Now this one as well.
How much profit was that?
$1 trillion. I'm now worth more money than Elon Musk. Okay.
Jeez.
Now, we're going to be safe with this one. We're going to put it above this prior high, but just
because
on that kind of low, because we're going to be a bit more dangerous, right? Safe but dangerous still.
you put more
Now we're
money
gonna
on this
go
one.
down
Yeah,
here.
you put half of the profit
So-
of the other one on this trade.
So it's just a 3.6. This is while we're waiting, right? We're waiting right now for better opportunities. Then we're going to go long through here. And we're going to pick every single top and bottom. And we're basically just gold mode. And then we're going to build, eventually, a base on Mars. And just go like this. Because we need all of the gold to get to Mars. And then eventually, when we get, right, so it's going to go probably to like 5, 6, 10,000. And then when we get to Mars, we're going to short gold, okay? So it's going to be up here, because once we've got into mining asteroids, gold is very abundant. And then basically we go like this, like a short at like 10,000. We go like this. And then
I'll go back
gold goes
1,000.
down to where's 0. It's probably so abundant that trees are worth more value, like more money. Like, you don't find trees on any other planet or anything. So gold, very abundant. And then we get a massive return right there. That's 11,148. 11 million. Anyway, it's so much money that we don't care. 11 million to 1. There you guys go. Now you can retire.
You forgot at least one was. He asked for 70%. You forgot the was there. There's one was that you
damn.
skipped.
Well,
Yeah, dude.
look, you can
3
get
out of your
the
10 trades failed.
70%, and then you just donate the rest to charity, to the other aliens and Martians that we venture and meet on the journey. There you go.
That's fair enough.
That's it. But yeah, honestly, like a 70% guaranteed strategy, if we're being serious. I mean, look, 70% normally that's going to be stuff where you're sort of scalping a bit more. The percentage doesn't matter though, to be honest, guys. Like, it depends what you make on that trade. So it's percentage multiplied by the success of that trade.
Expected
Sorry,
value, yeah.
by the return of that trade, yes. So, if you got 70%, but you make, I don't know, $10, and that's a profitable trade, and you make that 7 times, but on the other 30%, you've lost $20 a pop. You're only just above break even, right? So you want to go for larger returns, not just the percentage success, right? So
The win rate is just one portion of the calculation, unfortunately.
exactly.
Yeah.
So
That's
it's not
why
like
I feel like
quite simple, but we
expectancy
can
is-
actually talk about it if you guys
Yeah.
want. Like I was, pissing around, but yeah. That said,
Alright,
dude, I would take this trade. Wait, Pedro, would you take this trade? Look, look how far we're going. All right, do you want to take this trade? We'll take this short. Do you want to lock it in?
Yeah. Which one is better, like the long or the short? Which one is there high probability?
Well, we got to do both, right? So we got to bet on long enough that humanity survives, that gold can get up this far, and then long enough that we develop tech, we go into space, that eventually we don't need these minerals, and gold is useless, and then we collapse. And then all we trade is trees. And
Yeah, I'm going to bet on trees then. I'm going to hedge.
'Cause-
I'm going to have an edge on trees. Going to go long.
there's gold on meteors, there's gold on various planets, all that kind of stuff. There's no trees, right? Trees are ultimately the pure capital. We only have that on Earth. That is prime capital right there. So everyone that has like a bonsai tree or a bunch of trees in their yard, you're rich. Congrats. You just got to survive for another like 300 years for it to make sense.
Yeah.
There we go. That's all right. We'll do it. We'll do it, Pedro. We'll see where we are.
Yeah,
Good trade.
I'll keep track of it. Guys, I need to go.
Nice.
I need to withdraw my money just ready for this trade, to be honest.
You need to go and buy some more trees.
Personal
Yeah.
bank
Plant
player.
them in your backyard. Yeah, that's it.
Oh my goodness.
Nice.
That was great.
All right.
I would say fantastic again. It was always great to hear you. And Richard,
Of course.
nice to see you again, man. Thank you very much,
Have a good
guys.
one, my friend.
Everyone.
Good to see you, mate.
Bye bye. Have a nice one. Bye bye.
Ciao, brother. Hey, Rich. Yeah, look, guys. So, Rich, if you didn't get that already, market's not moving much right now. So,
Yeah, we are in limbo.
yeah, we're kind of having a bit of a laugh.
Yeah,
So,
we should play a game. We should change the
Did you
stream.
actually see
and-
the stuff with EV Marks? Which they actually do have a trivia thing that you can implement.
I did not. Where do
Yeah,
we
when I
do
logged in before, they updated this, I think the past week.
I will have to go and have a look at the change log.
Yes, because I was gonna message you, which could be fun. And we could do that from past streams as well, from things that happened and or market events. And
Well,
get
dude, we can do
everyone
that.
involved. Yeah. But
Yeah, we can do
they
that.
put it into the platform just now. So yeah,
Interesting. We'll have
Louis-
to go and have a little look-see.
definitely. Louis said he's already in. I assume you're in on the gold to a million and then gold short.
Yeah.
So congrats. You're basically
Yeah. Louis is
What's
a gold
after a trillion?
savant. He's a gold
Quadrillion?
savant. What about a quadrillion?
after a trillion it's just quadrillion, isn't it? Or is that just
Oh, isn't
four
isn't a
trillion?
quadrillion 4 trillion?
Yeah, that's what I was saying. What is the actual
Let us ask Almighty Goog. Goog should know.
deca trillionaire? I don't know.
Decapoly.
What's
Trillion.
after trillion? I thought it was quadrillion because it goes like 1, 2, 3, kind of like trill. Like million is 1, a trillion is 2. Even that by that logic, that's also wrong. All right, yeah. Ask.
Okay, here it is.
Yeah, it is quadrillion. I thought so.
Yeah,
Like,
it's a
I feel like
quadrillion.
I'm sucking myself out. I think that's right,
So
isn't it?
met. So M B T Q Q S S O N D U D T Q Q S S. It carries on. So it's a million, billion,
A
trillion,
B
quadrillion,
C D E
quintillion,
F G H I
sextillion,
J K.
septillion, octillion, nonillion, decillion, undecillion, dodecillion, tredecillion, quattrodecillion, quintessillion, sextillion, septillion, and then so on and so forth.
Okay, so what was the one after a trillion? I missed that.
Quadrillion.
Yeah, see,
quad.
there we go. That's it.
Quadrillion,
I
then
thought
it's
it
a
was.
quintillion, then it's a sextillion, then it's a septillion, then it's an octillion, and then it's a nonillion, and then it is a decillion.
That's what I thought. I was pretty sure because the entire market economy is a couple quadrillion. It's like 3 or 4 quadrillion total with futures and derivatives markets
7 of
put
them.
together.
7 of them are made up, Akram.
All of them. Yeah, all of them. Also, Pulley, yeah, I'll send you the PDF of my breakdown to long gold into the moon and eventual expansion. And we keep going up like this. And then, I mean, we probably go higher, to be honest. But this is conservative estimates. You know, we're a conservative pension fund. And then right here, we get Star Trek. Right? And then that's when you short the gold market, and then you win. And then you buy trees. If you got trees, you win. So I'll send you the PDF.
If only.
Pulley will get it for free. Everybody else has to subscribe for $200 a month, and that's how it goes. Because I'm now a futuristic trade influencer, which I just made up.
Dude, do you know what is 1 times 10 to the power 100 called? 1 times 10 by the power of 100. Do you have any inkling what that might be called?
Oh, dude, that's tree. Because at that point, all that matters is trees. Like trees. Dude, I don't think you've got this yet, Rick.
Okay, hold on.
Once we're out there, all that matters.
Listen, it's known as a 10 duo trigentillion, also known as a Google. Ha!
I don't know, dude.
It's
I got this thing out here, like the dinosaurs knew about this. It's called a fern. It's called a fern, right? It's a plant. It's kind of like a tree, but it's a plant. We got redwoods. I think they got some bigger numbers.
You guys don't have trees in Australia. Trees don't exist where you live. It's too hot.
Dude, we got paperbark. Paperbark. We can also write on our scriptures from the bark of the trees, and we can put our holy scriptures of the government on whatever new planet of
okay, Egypt, relax.
Extra new earth, something. Beautiful.
I was about to say, dude, you should relax, mate. Egypt, relax. You and your papyrus. Okay. Tree bark, Australian tree.
Anyway, though, Rich.
Yeah.
Anyway, how are we doing? Obviously, you've been busy, so you've not been looking at markets in general. So that's fine.
No, but I've been having a bit of a gander now.
Jumping in now, what are you seeing?
Oh, dude, we are slow. It is slow. So here's the thing. Here's the thing that I spoke about yesterday, and I feel like it becomes more and more prevalent the more often we have like these massive impulsive moves, the unintentional impulsive moves. So for Trump, it was intentional for him to send out his little tweety tweet. But what I mean is like these moves are like fear driven. They're not well thought out. What I'm seeing happening. Well,
I'd say
it's more of like a fear response
impulse,
or like a
impulse.
yeah
Impulse.
it's an
impulse,
emotional response. It is an impulse,
Yeah.
but like you get different kind of impulses. Like this one is like more of like an emotional driver. Somebody says something and you react to it. You don't always choose how to react, but it's like it can be whatever. It can be fear, it can be greed, but it's this impulse is anyway. The thing that I'm trying to get to is like whenever we see like these crazy, sudden, unexpected moves due to somebody sending out a tweet and then you get everybody freaking out, it's generally followed up by either a complete turnaround from where it was, taking up everything that it initially started with, or it just goes into flat price action. So massive impulse, an attempt at a I don't know, like a redistribution of sorts, and then just flat. And then we wait. And then we wait for next follow-up. So generally, like, a day like yesterday would have a follow-up of being, like, cautious. If I'm going to see movement, is it generally going to be a movement that I would want to be interested in getting like a trade in on, or is this kind of the movement that's there to kind of lull me into a false sense of security so that I'm going to be stuck in sideways action for the next 2 days? So I kind of like sit with that thought in mind whenever I see a massive move that was not scheduled news related, let's rather say.
Yeah.
And then I kind of like wonder, okay, how long is this sideways price action going to last while everybody calms down? Well, everybody is like, okay, we had our impulse, we had our reaction. Let's just think about this a little bit more clearly, and then we'll decide what to do. And that's usually, or that's something that I feel like is happening more often now, more regularly when we have these like Trump tweets and whatnot. There's very little follow through. There's very little reversal. It's just kind of like up, a little bit down, and then sideways for a while, and then everybody gets a sense of their bearings, and then they push it in whichever direction they want it to. So a day like today to me is just like
Yeah, I agree. Like today is very much, again, no further data, headlines, whatever. It's pretty much tweets, like geopolitical headlines. Nothing economic, put it that way.
Exactly.
So you can see right here on the NASDAQ, like we're pretty much just accumulating around the options level.
Yep.
So the midpoint of cluster of primary trades, spot gamma, all that kind of stuff. We're just stuck here. Right, so no tweets from Trump today. We might get just pretty much this. You know, maybe we get a pop to the top or pop to the bottom at some point, but that's kind of it. So you've got like this broad range through here, and that's literally it.
Yeah.
So obviously, if Trump comes out or Iran comes out and say, yes, we are actually making progress on discussions, even if there's nothing concrete, just say we are having discussions, that will be very positive for the market. So from there, you'd see a lift much higher.
As of right now,
I agree.
Limbo.
Yeah, pretty much. So same deal, and hence you go back to these moving averages, just like we had on the 15-minute for gold. We did have some other headlines around gold specifically earlier. Nonetheless, it doesn't change anything. We'll still... Okay, so you put this base triangle with that, like, that's where we are.
Yeah. pretty much. And you see it on the lower
either you
time
get
frames as well. 5
pump
minute
up
as well. We're also in a triangle.
or pump down. So I don't really like this trading.
Yeah, I agree with you. The problem is I'm a trend trader. Trend trader. There we go. I like following trend. I like it when we are in a trend. I like it when we're in a trend long term. I like it when I can kind of have a look at... Oh, sorry, I didn't...
Oh,
didn't
sorry.
no,
Don't worry.
don't worry.
I thought you
It's
cut it up. I thought you were
There we
talking
go.
about something. It's fine.
No. We can go back.
Okay.
I aspire to the idea that trend is friend. And most of my strategies are reliant on trend having established, or at least a trend changing its direction into a different trend. My strategies are not consolidative in its execution, because to me consolidation pretty much means I kind of know where I want to be, and everybody's in agreement to a degree. You're kind of like in a much smaller band. Buyers are content, sellers are content, and that to me is just, I want that back and forth. I want them to start fighting, so I want to start seeing a bit of volatility. And if it's completely sideways, there's generally a little bit of volatility, but it's more because they're agreed in where they want to be. So I want something to say, no. Let's start splashing some water in everybody's faces and get everybody a little bit annoyed. Let's get that back and forth a little bit more volatile, and then let's have an argument. Let's try and push this price. And when that happens, I want to be in it. Then it's like, okay, cool. I feel like there's a driving force to try and push price in a direction, and there's conviction. And if we don't have conviction, like today, where you're making a high, it's followed up by a lower high. You're making a low, it's followed up by a higher low. So it's conflicting information. You're doing exactly this. You're making a flag where every single time this might indicate, oh, this is bullish, but this indicates it's bearish, you know?
Yeah.
That conflict to me is the wrong kind of conflict. There's no conviction, and I want conviction. So I want to break.
Yeah, I was going to say, does that not lead to conviction? Obviously, though.
It does.
Once you get the break,
does lead.
like obviously,
Yes.
that's yes. Yeah.
But this is like that's why I say this is limbo. This is like that waiting period where you know something is about to happen. You know that it is potentially going to be volatile. It's going to be volumetric, but you don't know which way just yet, because the information that you had yesterday was not based on, like you said, a news event that was not necessarily geopolitically driven. In this case, it was geopolitical, but it was like geopolitical uncertainty.
And then
Once
it
there's
ran
yes, once there's no.
stops. Yeah, it caught the market off guard. So probably you can. I always, when I see these things, like you discount basically that top range that we've had, which were roughly take those lows, and where we are now, we're kind of in that middle point. I would take that whole higher point above as you just chop the head off, right? Because you have that runs of stops. So I always take that as the excess, and below is reasonable price action per the headline.
Yeah.
Everything above that is excess.
Yes. I agree with you in this regard.
Yeah.
This creates a false sense of direction, in my opinion.
Yeah.
Where you've reached a plateau, you've attempted to push lower, and then you slowly but surely print higher lows and higher highs on the lower time frame, obviously. And then you get to a point where you start pushing lower, and then you're like, okay, we're done. We're done going higher. Let's sell. And then you start selling, and then you get into this. Then you get into this sideways price action. So it lulls you into a false sense of security when you have these impulsive moves and then a correction afterwards, where you've had the reaction and now everybody's level-headed. and they're like, okay, whoa. That happened there yesterday was off the cuff. That was such an emotional response. That's why I said it was like a fear response. You're right. It's not necessarily a fear response, but it's like kind of the idea that this is not what we wanted at all, and now everybody's scrambling, and they're like, oh crap, this is not good for us. And then you get into this false sense of okay, it's going to start pushing lower now because we're going to recontinue what we had started prior to this volumetric movement. And then you just go into consolidation. And that puts even more thoughts of fear and more thoughts of uncertainty. And that, to me, just drives these kind of flag-like patterns without a pole to hold it up. This is just a flag that's kind of like hanging there, no support. And to me, this can go either way now. We can either start selling off, and it makes sense because then we're going to try and come back down to these areas where we had prior to the news, or you could have the excess, as you've explained it, which is right above this area up over here where we've kind of like had the turn, where everybody's been level-headed and say, whoa, okay, we had a bit of a reaction now. And my question is, which way is it going to break? And when it breaks, that's more of like what I'm interested in. It's the break, the retest, and then the confirmation of the continuation. And then I start looking for trades. Then I start looking for a sell, or I start looking for a buy. Speculation, one thing, but confirmation to me is more powerful. And that's kind of like what I want. So I want to see either it break above, convictingly, break above these like recent highs of the day itself, and then show a propensity to want to carry on pushing higher. Or alternatively, we do break lower of this channel, we start breaking lower, we want to start showing a propensity of wanting to test the low of the day, or potentially come back to where we were yesterday prior to the news. And right now for me, it's just a waiting game. I'm just going to wait.
I was going to say, so we had another thing from Pulley. Was it Pulley?
Yeah, this.
What do you think about that?
I think that there is a correlation between S&P and the NAS.
Yeah.
So this is definitely something that can happen. And considering the fact that we're already trading by the options expiry of NAS. And I don't think it's updated, to be dead honest with you. I don't think we've updated yet. I think it's still 24.16. Yeah.
Yeah, it's
so
still
it's wait until New York opens up.
Basically, yeah. So you got to wait for the final piece, basically an hour before, right? So you'll get a rough. It won't change too much, but even up to the hour prior, there might be a couple points difference.
Yeah. At close at 5 p.m. EDT, which is East. EDT is what? What is EDT?
End of days trading, I guess.
End of daytime.
Yeah. EDT, which was whatever. I don't know. We used to say is end of days.
What's there?
But time frame. Yeah, end of day trading.
Yeah. So if we do have the option price of the S&P 500 dropping or being quite a bit lower, that could potentially drag it. But then at the same time, something like AUD USD being quite similar to that of NASDAQ, would you then expect the AUD USD to start pulling lower as well? If NASDAQ starts pulling down as well. And then if you're not convicted in that, then there's like a bit of a divide, I think. Because they are semi-correlated.
I would say sort of, but normally like you'll have Aussie dollar correlated with like say pound dollar, euro dollar, all the majors, and they'll start rallying in general.
Yeah.
But Aussie dollar will come off.
Yes.
But that's only because the NASDAQ risk-off component which it
Yes.
has high beta exposure to, despite the US dollar transfer, where dollar yen will be coming down, euro dollar up, pound dollar up, that kind of stuff. Aussie dollar right down. That said, when you see that with euro dollar going up, pound dollar up, dollar yen down, Aussie dollar only comes down because of the US indices. Perfect buying opportunity because out of sync, right? Per se, it's not a full risk off scenario. We haven't had full buying into the dollar itself. So that's when you actually want to buy that overall. I would say though, Pulley in general, like, I mean, S&P right now is pretty much at the options level, just like the NASDAQ. So I know you were saying like it's a bit far above, but like it's really not. It's pretty much right there. Options level for S&P is 6572.9. $6572.9.
I'm not convinced.
In what terms? Of like
that-
shorts or longs or what?
Of longs yet. So this is S&P. We had effectively this double low down here. So established, test, push through, and then we closed very, very bullishly, obviously. But the bullish movement was because of news. And I don't think that that news was accurate in the sense of what is actually happening in the background. And I think it's going to be a few more days or maybe another week or so before we potentially get what actually happened. Or we may not even ever get the full scope of what happened there, or who's lying, who's telling the truth, all that kind of like stuff. I feel like this is a red herring. I feel like this news that was brought out yesterday is a misdirect. And I am not convinced of us pushing higher yet. However, I'm willing to be completely wrong. I'm willing to say, you know what? This is actually going to start pushing bullishly. I think that we're still in this downward trend that we established like in the 25th of February already on the S&P. And the same thing for NASDAQ as well. Like, we have been bearish for quite a while. This is on the daily chart, by the way. So even though this whole segment here you can think of as like just sideways action, within it, we do have these like attempts to push price lower and so on. I think we're still within that. The thing that I'm not convinced by is the fact that we had this effective low segment here that we did created, tested, retested, broke through, and then tried to push back up again. But the breakthrough higher was because of news, and I think it's a misdirect. I think we're still going to potentially try and push price lower on NASDAQ. But I cannot say with certainty. That's the thing. So I'm waiting for that certainty. I'm waiting for that confirmation.
Yeah,
That's
I was going to say,
I'm willing to be incorrect.
yeah, I prefer to run like limit and stop orders in general right now, rather than going straight to market. I think breaking those key technical points based on potentials of fundamental macro headline, whatever you want to call it, stuff going on is the best way to play it. So if we do get a further calming, yes, we've got massive upside coming through.
Yeah, I mean, there's all of this.
We've also, we've also hit those base levels, and we crack through some of those lows, that we've got massive downside as well. So,
Yeah.
like I was saying before, this is very much that kind of neutral area that I always hate in trading, because you don't get a clear this way or that way. signal, and you got to kind of be prepared for both sides. Then you got to be prepared for both sides depending on what data is coming out, plus news signals, plus directional movement in general from cross correlation. You've got a whole slew of stuff going on. So it becomes very difficult. And then especially when you want to split this between, say, stuff like the S&P and like the NASDAQ, which the NASDAQ has all the tech companies do trade the NASDAQ, or you trade the S&P right now with the broader market. But at the end of the day, the NASDAQ is going to pull it.
Yeah.
Yet the S&P broad market is selling off. The tech sector is being bought up. So now you get this equilibrium because of the market cap weighting between the S&P and the NASDAQ, where you kind of go roughly nowhere, which is basically what we're seeing. So they've come down to these really cheap valuations relative to before, that people start to buy it up. Pension funds, whatever. Stuff I've talked about with Dirk. So that's where you get this cross funds flow aspect, which some of the flows coming in are not really trading on the current environment. They're trading on future aspects for stocks. And other people are trading on the now, real time, the current escalation, that kind of stuff. And so that's why we've seen S&P, NASDAQ, that kind of stuff not really get hit as much as they should have overall in any other general consideration for this kind of event.
Yeah,
it's interesting. I'm very uncertain what to do, because I mean, Dirk and I both have gone back and forth of this either being the final rip for markets or the collapse, and we've both gone back and forth each other with our own evaluations of that. And it all comes down to
you to change your idea, and you convince Dirk to change his idea, and then you're back and forth again. It's just like, okay,
I mean, there's always updates.
Sure.
Yeah, there's updates with stuff that's going on, but end of the day, it comes down to central banks. So any business cycle is not collapsed by business itself. It's always central banks. So if we get this raising of rates within this current fiasco, then we are cooked. And so it's a gauge on your respective expectation for ECB, Bank of England, the Fed, all that kind of stuff to increase rates, or thus at least signal potentially hawkish embellishments that they might increase rates, which will tip pricing of assets, even if they don't do it, over the cliff, basically.
Yeah. Are we having any sort of news at the moment?
We did have, so I think right now, I mean we've got the US news later, but right now,
because we're seeing a bit of a sell-off on gold at the moment, as well as NASDAQ, and I think that UJ is picking up. Yeah, UJ is picking up. So something got released now. It's not yet on Forex Factory, so I was wondering, maybe it's on Financial Juice.
Yeah, I got to get the premium. I don't have it, so it comes in about 20-30 seconds later. Yeah, I missed the cheap entry. Otherwise, it was like Australian, like $2,500. So I was like, oh yeah, maybe I'll wait.
Yeah, we'll wait. Even
the other one was $150. So yeah.
Is that per annum or like monthly?
No, that's lifetime.
Oh wow, okay.
So $150 and then lifetime. So the other one was $2,500. I was like, well, I'll wait until that comes up again. So
yeah, I think something came out now because this is a large enough candle in relation to everything else. I would say.
Yeah,
AUD
and
should
Pulley
come
was
in
saying
down.
before, sorry guys, that was yesterday's option price, my bad. Yeah, I thought so. I didn't want to say anything because we had it stuff marked out, but yeah, you were good, Pulley.
Yeah. Oh, what is oil doing? Same as this morning, kind of sideways.
Let me check like Reuters.
Something did come out. That was from earlier. We'll see. It's a shame that the options chart doesn't give you news.
No.
Oil back at 90, which is pretty much the high of London session.
If I can just grab some water, if that's all right.
Yeah, dude. Dude. Go for it. Go for it.
Yeah, my voice is terrible, so I'll be back.
I don't know if water's going to change that, mate. I'm joking. Yeah, let's have a look. Akram saying, respect to you, LJ and Rich, you made the market slowness bearable. Thanks, mate. We appreciate it. Yeah. The thing is, like I said, I said this yesterday. I was expecting... Well, I didn't say I was expecting. We were looking at Euro, and we were talking about what I wanted to see happen should price continue. So we were talking with Victor this afternoon. Not this afternoon, yesterday afternoon. And I told him that I wanted to see the highs of that area broken. And then after that, a retest and then an establishment of a new trend to push higher. So wanted it to break, which it did, but it failed the retest. So it absolutely just started pushing a little bit lower, taking up some of these lows in its process. The thing that I didn't want to see was us getting into this consolidative price action, which is exactly what we entered into in Euro. So that last vestiges of the day, the whole of New York session, we've gone nowhere since yesterday on Euro. We haven't broken lower than the lows of the New York session of yesterday, and we have not broken above the New York session of yesterday either. And this was my fear. This was like, I did not want to see this because that would make trading very difficult. It's just one of those things. The same with pound as well. Didn't even break the New York session of yesterday. So everything is just consolidative. It's this whole area over here, that's consolidation. We tested that, started pushing lower. We have the lows there, which was tested once, twice, 3 times, a 4th time. It's just, this is uninspiring price action, in my opinion. So what do we need to see? We need to see it break. We need to see conviction. We need to see move either bullishly, break above established areas. So you have this area over here, which is consolidation. That was rollover. You expect rollover to be a little bit more flat, but you don't want to see it respected. If it's respected like it does here, meaning it doesn't break close and then try and push higher, it kind of like just comes into it and wobbles, kind of like loses its steam to try and push price up. In this case, it's lost its stream on all directions. There's no steam pushing it lower. There's no steam pushing it up. So you want to see it push volumetrically. We've got 2 areas right now as we speak. We've got this area over here, which was respected this morning with the Tokyo session. And we've got this consolidative section up over here that was tested between the London and the Tokyo session and then reacted off of, let's rather say. So these to me is the immediate 2 areas of break, retest, continuation that we need to see. If we do break on the lower side, there's a lot more area to come and test, I think, immediately. Because the last few days was also a little a little bit uninspiring. So there's more to test. I think if we break lower on, for argument's sake, on euro, we've got nice areas down here to test. However, if we do break bullishly, we do have this higher end up here of yesterday, and then we have to go a little bit further back to see some action on the daily. So we have highs up over there to test, and then bar all of that, we do have some area of... Do we even have an area? I don't even think we do. It's maybe up over there. Should we break above? I think you're muted, mate.
No, I was going to say, yeah, it's about there.
Yeah.
With that point. So 116.08 is roughly what I'm looking at.
116.08. I mean, we're so close to it.
Oh, sorry. Oh, you're looking at long term. Sorry. Like the...
No. I meant like if we do break, we do have on the daily.
Oh, then yeah, right back up to 118. Yes, of course.
So
sorry, I thought you were looking at near term charts.
No.
The near term is very similar.
Yeah. Now I'm thinking like if we do start breaking, then the upside is nice and solid. Whereas if we break down, we have these lows down here that kind of like first need to be taken, I think.
I think the higher side is only going to be on, obviously, Trump tweets and de-escalation. Otherwise, we're still net
negative.
The downside. Yeah. Overall.
Yeah, I agree. I agree with that. So I think that there's more... I wouldn't say chance, but like, let's say I'm leaning more towards the idea of selling.
I would say I'd put myself at like a 58-42 type thing, right? So it's not quite 50-50, it's not quite 60-40.
Yeah.
Yeah.
But yeah, to me, this area... Yeah, to me, these are the two areas I want to see break, retested continuation.
Yeah.
But you know what doesn't need a break, a retest, and a continuation? It's William and Anastasia.
That was a smooth transition, wasn't it?
I don't know what it means, but hello.
We don't need confirmation from you guys. You guys are already here. You're already confirmed.
Whatever it was a very smooth transition, Richard.
Beautiful.
It was,
beautiful.
It was good.
Hello. How is everybody?
What is good, people?
Today?
How are we doing?
How are you guys?
I was about to say, not everybody all at once.
Yeah. Do we guys? Do we want to pull numbers like first, like 1, 2, 3, 4? Like
I am good.
I'm great, guys. Yeah. Oh, hey, Will, come on. I took one. All right. I'm good. I'm great. Thanks, guys. I'm here. We're doing well.
Shall I go next or okay?
Yes.
I'll go next.
Market is good. No, Will, you're fourth.
Okay. Fourth? How does that work in any form? Hang on a minute. There
Something
we go.
like this.
Yeah, there you go.
So, Anastasia, how are you?
I'm good. I haven't traded this week after the whole announcement. You know, I'm still waiting for some kind of settlement of the market because I didn't trade the initial movement after the announcement of the Trump, and then after this, exactly this, I didn't trade anymore. So I'm waiting for some kind of clarification after all. But for the rest, I'm really good. How are you? How are you, Richard?
I'm
Richard
doing good.
is God tier. He's going to retire next week. He made $1 million in about 25 minutes. Was it, Rich?
Seconds, 25 seconds, mate. If you're going to give the
25
numbers,
seconds,
make the numbers solid.
He went all in, with his house, and now we won't see him again.
Everything in escrow, mate. Everything is now currently in escrow. It's just I'm just waiting for my dividend payouts now. You know. No, I'm currently sitting on my hands. I am not trading. I absolutely despise sideways action, and everything to me currently is just flat. But other than that, I'm good.
Well, Will, I'm not sure he's here or not, but in any case, you saw this trader who put $500 million on sell on oil 10 minutes before the announcement of Trump.
I did. I
You saw
made some
this?
money off it.
Yep. I wonder.
$500 million on the stake.
My question is this.
This
Who
was
do
the
I
same
need to
trade.
be friends with? There's a much like dirtier version that I can ask, but like, who do I need to be friends with to get that like 10 minutes before the news, go ahead, everything on black, everything on red, spin, baby. Like, who do I need to be friends with?
Because
Trump.
I was going to ask you, Anastasia, if,
Yeah.
especially with futures, like that's where you saw it come through. I said this to Rich, right? And Dirk and I were on stream yesterday and cleaned up with this. I was curious whether you saw that, given the current administration, and they've done this again and again, if you're actually looking out for that. Where you see the volume spike
Yeah.
every time, massively, before we get an announcement, and it's always counter trend. And it's like, okay, well, that's a bit...
Someone's leveraging.
That doesn't
Someone's
make sense.
positioning themselves.
Okay, right? Yeah, so I was curious if if you cotton onto this, but either way.
No, I didn't actually. I didn't look into it. But where do you see the volume spike?
I was on
What
futures,
are you
so
looking
I've
at?
got another futures platform I'd have to bring up on here, and
Okay, but
and
you're
then the
looking at
cross current with with like QQQ, and then S&P
Okay.
and everything as well. They're at slightly different times, but I then saw all three light up, right, just before this, and we saw mass volume come in out of nowhere.
Amazing.
Oil
Amazing.
was
The
the
fact
latest.
that you made money on this is just amazing. Honestly, LJ, it's just awesome.
Yeah, I mean,
I'm a big fan.
I will say it was very speculative, but given the current environment, I feel like this is like I was saying to Rich before. This is like a strategy, right?
Yeah.
Like Trump does this, then he does that, and he goes back and forth. And if you're not doing this, you're not paying
You're
attention.
missing out.
Like
Yeah,
I was saying to Rich, like if you're in trading for the past X years, like we got Trump for 4 years now, and we had him 4 years from 2016 to 2020, and say if you started trading back then, that's a solid portion of your entire trading life, and most of the activity is going to be driven off these headlines, right? So if you're not taking advantage of that back and forth, like that's the current trading regime. Yeah, like you need to try and implement that. Maybe not every time, because sometimes it's a bit more iffy. But there's definitely quite a number of times where it's very clear cut. It's like when Trump did the 150 to 200% tariffs on China. Like, it's impossible. And so he's going to go back the other way. Of course.
Yeah.
And then you just clean up. You're like,
everybody is like, 200% tariffs on China, and then
thanks,
they freak
mate.
out, and then you see this on the chart, and you're like, oh, and then everybody else kind of like becomes a little bit more level-headed when they start thinking about it, and they realize this is not ethical. This is just absurd.
Yeah.
Nah, let's go the opposite direction. And then you go the opposite direction, and it's like, this actually does make sense now. Good trade.
But yeah, so I was just curious whether you've started watching that stuff at all. But
No, fairly honest, no.
yeah, I would say do it. It's good. It's very good.
I'll have a look at
very
it,
happy.
but I didn't start trading oil even after the whole war with Iran started. The moment I left oil a couple of years ago, I didn't come back to it. Yeah, you should be taking the opportunities obviously when they come, but at the moment I'm choosing a little bit more safe trading for myself, which does not include necessarily participating in Trump announcements and everything. So,
Yeah.
you know,
I got to say, I'm pretty sure my oil trades have actually been some of the best over the past couple of years,
yeah, they're amazing, to be honest.
like risk reward wise, because they're very long term trades. Same with this one, back from October. Hang on. Like that was beautiful. And then we got this recent trade through here, right, on Brent.
Yeah, a
with
little bit of a sell.
yesterday's thing. And the thing is, I just took it. I didn't touch it. I didn't try to go back and forth or trade it. I just, yeah. Which makes me think if I should go back to some more swing trading in general. Because these have been cleanups.
Yeah.
So
Why
I
did
don't
you
know.
stop? Why did you stop doing swing trading?
Dude, you do something for over a decade. You kind of, I mean, you want to, start doing other things.
Dude, I've been making money
it's
for
not
like
like
30-something odd years. I'm going to continue trying to make money for the next 30 odd years.
yes, but it's not like I
don't get married.
I was gonna say it's not like I don't still produce from, like, I still do swing trades, right?
Yeah.
Still produce from that, but eventually you go like, oh, okay, I can do this, I can do that, blah blah. You start investigating other things, and that does also have its benefits.
Yeah.
And
Yeah.
technically, I do make, like, I definitely make more money from that, like trading actively. The thing is, it's much more active time on the charts, more stress, that kind of stuff, more impact.
Yeah.
Versus some of these trades, which when they do come through, clean up, and it's a massive portion. So, but my thing is always like, okay, what if that didn't happen? Right, and that's the trouble when you wait 6 months.
And then
and if it
something
didn't
doesn't
work out,
realize. Yeah.
then you're cooked. So that's sort of why I do both.
Yeah.
But I've been thinking maybe we should do more of the latter, right? Because it's been pretty good. So, I don't know.
Yeah, I don't mind the idea of a nice swing strategy, and then you have your intraday to kind of like alleviate swaps and, just flat market movements for months or whatever.
And that's where I make my income from. So I have to have daily, stuff going through. Like I trade for a living. So, that's where you get,
we need that trivia game, mate.
No, I was about to say. I was going to say we've got a bunch of some of this. So first of all, Dirk wants us to look at gold.
Gold.
I'm sure he's very happy with gold pumping, like we were talking about yesterday. Akram says DAX. Because
I had a look at the DAX earlier, and I'm like,
DAX fiend, right? So DAX right now, where is the DAX?
Dude, the DAX is doing exactly the same thing as every other index he has.
Look, Akram, don't trade it right now. This is the neutral. Like when I see an asset like this, it's in the rubbish zone, right?
Yeah.
This good, this good,
Not
this
good.
bad, negative, not good. All right. This is in the neutral zone, not clear. You're waiting for decision making. You're pretty much flipping a coin as to where flows come through overall. So, Akram, you got the pump yesterday. I know you're on the right side. Stay out. Don't do it. Don't be tempted. Right? Just take what you got.
Like the majority of the assets are now at that stage as well, So, I feel like the longer you watch the charts when they are in this kind of state, the more you have the itch to get into something finally, you know. So I would say just stop looking at it until something starts happening and the price starts moving and there are certain decisions made. And then, okay,
Yeah.
you can come back, reevaluate it, because if you stare at it, you're gonna start seeing the things that are not there, usually.
Yeah, you'll start seeing ghosts. Like you're like, oh yeah, that'll happen. Not really. So
Yeah.
I agree.
Market psychosis.
I was gonna say, Dirk, what are you talking about with this?
He's already got the aesthetic. He's German. He loves gold. He's bold. He needs a cat, preferably one that's also hairless, like a sphinx. And then he needs one of those wheelie chairs that spins around and Mr. Bond, you know.
Do we get an invite to the
Of course we do.
island and the
Yeah.
no, the house, the complex?
Yes. Dude, it's right there. He literally said, "I'll invite you." We're all
I did
invited.
too. All right, good. We got the invite then. We're good.
Yeah.
Thank you, Dirk. All right, nice.
Yeah,
Anastasia,
okay.
do you want to come to the compound? We can do it. We can all
What?
trade. We're going to Dirk's compound.
Of course.
To trade gold.
Yep,
Always.
to trade gold.
We're gonna make sure that we hit the Union Depository building and irradiate all of the gold so that it becomes useless, and then we will have stored gold that we will then flood the market with, because that would be the only gold available. This is an actual plot that was part of James Bond and Goldfinger.
I was going to say
Actual
yes.
plot. The actual
I
plot.
was about to say. Yeah, Rich.
Kind of smart.
Long gold,
you're really
short
driving down supply and you're really picking up demand. Price will skyrocket. And you're already holding all of the gold. Non-irradiated gold.
Precisely.
Like that. I'm going to be heading out in a minute, but before we do, I just want to quickly just speak about this. Question from Sahil asking, as we're not allowed to trade the news, what if our TP or stop loss hits within the plus or minus 2%, plus or minus 2 minutes? So the 2-minute rule only applies for new trades. You're not allowed to open up or have a new trade trigger during that 4-minute windows, 2 minutes before the red folder and 2 minutes after the red folder news. If you have an existing trade running already that you took long before, no impact. If it hits stop loss, it's a regular trade. If it hits profit, it's a regular trade. So it's the opening up. It's having a, for argument's sake, a pending order or a buy stop that is waiting within that and gets triggered during that time frame. So
that's obviously if you guys sometimes accidentally open or close a new trade or something like that in that time frame, but it's like an accident, yes, it will be considered that that's obviously an accident. If you do it repeatedly, then obviously they'll be okay. You're around it. So if you accidentally do it, don't freak out like you've lost the account or something. It'll be seen as, yes, that's accidental. Like it's not intentional. You might have just slipped up and whatever. So don't freak out too hard. But yes, 2 minutes either side. Just stop trading. You know,
soft breach
overall. Yeah.
Soft breach. All right. I will see you guys a little bit later. Yeah, enjoy. Anastasia, it's good seeing you again. LJ, good seeing you as well. Will, good seeing you as well, my friend. All right, I'll see you guys. Just
See you, Richard.
So,
Ciao, Rich. All right. Okay, we'll get back to being serious since I can see comments. No one thinks I'm funny, so never mind.
Where are they? Dude, I've not seen.
Oh, we had a few throughout. You know, just
no way.
being
you're
trolled.
not funny. Shut up.
Yeah, not funny. Not funny. So, look,
It's okay,
we don't
okay.
have much activity right now. We've
We
been
think that
pretty
you're a
boring.
plan.
Yeah, look, I've been here for the past couple of hours, and
LJ, I think you're hilarious, my friend.
all right, well, thank you guys. All right, you know, I appreciate that. Honestly, when you look at this, like, we're not moving much. So, what do I have else but to? I know.
Dude, EU, GU, and gold are the exact same as well. There's just nothing. Absolutely nothing going on. Like, you're on the 1 minute right now and there's nothing going on. Like, you go onto the
I know
5
that.
minute.
That's what I mean. How many times do you see me going into the 1 minute? Like, I do trade the 1 minute, Will, right? But how many times do you see me on stream going to the 1 minute to do this?
Yeah, precisely. You know,
Very
like,
rare.
you like go on to like the 5 or the 15 and you just see nothingness. Like, pure garbage price action. You're like, oh, okay. Fair.
We've had this draw for the past while, but again, it's down to 85 from 91, 92. Right, from peak to bottom, we've got about 10 pips. And then that's been
brilliant,
pretty much the past 45 minutes, almost an hour. So
Go on to like the I don't know, 30-second chart or something. Maybe there'll be some movement on that.
one tick. Let's go into the one tick. Wait, what is this? Wait, is it not giving
I think you gotta get
the
like
one tick?
ultra premium for one tick, surely.
Don't I have premium? Pretty sure I got that.
that.
Alright, can we go 1 second then?
Yeah, we can go 1 second. What would they like?
Alright guys, we're
You
on
can go
the
1
1 second chart right now.
Well, as you can see,
Alright,
there's a
guys,
descending sort of channel there. So if we look at a really extremely high value demand zone, clearly a couple of milliseconds prior.
Very clear. Alright, we're all HFT trading right now. I hope you guys have your fiber optic cables, and we're gonna enter long here, we're gonna exit there, and we're gonna place like 6 or 7 shorts all through here as well, just to hedge those prices out. And we're gonna go HFT, and we're gonna enter. You gotta assume this was multiplied by 100, and expand. That's what we're doing right now.
Why are you putting a stop loss on as well? Don't be a broker.
There's no stop loss. Exactly, we're hedged
screw,
out.
Screw
Fine.
stop loss. Like, screw that. You're on the 1 second chart. Who needs a stop loss?
But yeah. Either way, guys. You're back, Will. You're back, Anastasia. Again, what are you guys seeing? Because I'm boring. I've been here for like 3 hours, so please entertain everyone without myself.
Let
Terrible.
me entertain.
Mr. Mark.
So
Yeah.
Well, I'm actually a bit worried that
Yeah.
I'm not going to so I don't know.
I am actually looking for some shorts on gold potentially. Maybe a little later today. Yeah.
What are you looking for short goal? Like what exactly are you anticipating here?
Yeah, 1 second.
I like that.
I'm
Question
looking at
is,
the
did you get
structure.
in?
Huh?
Very
No,
nice.
Waiting?
nice.
Or are you waiting
Okay.
to get in?
I'm waiting. I'm still waiting to get
Okay.
in. So the
Okay.
reason I'm looking for the price to go down, and the reason I'm looking for short, is because we've been kind of failing to break through this volume zone. So we broke below this previous lows where we had lots of volume. Here as well, over there, announcement obviously on the potential end of the war with Iran, and we've been failing to go above 44.50 since then. Looking at the futures quote as well, so the price has been kind of going. We see the pressure of sellers, so we're gonna get lower and lower and lower, and buyers have difficulties more and more to push the price higher. Now, this is the majority of the volume from this week, obviously, because we are ranging around this level. So that's 44.10, 44.15. I want to see this 30-minute candle closing below this level, because if I'm going to zoom in, you're going to see that we didn't have the price, like the price went below it. We didn't hold below it. So I want to see the price closing below 44.10 level. If it close below 44.10, I'm going to be looking at potentially sell gold. If you look at the 5-minute time frame as well, and the reason I'm looking for sells is because on the tops we had quite a big volume coming in. So every time the price was going higher, and since then the price has been pushing below and below. So those cluster volume, those bursts of volume is something that is my concern basically for sales. So if we close below 44.10 finally on the 30-minute time frame, which is 5 minutes left, a little less even, what is it, 420? Then I'm gonna get into the short, and I want to see if we're gonna be able to reach, at the very least, this consolidation in this case is gonna be more of a scalp. And if we're gonna go lower, then I want to see the price reaching, breaking the previous lows and reaching this zone right here. So this area, that's something I'm looking for. So that's on the 5 minutes. So that's more intraday slash scalp trade. And then I'll see acceptance around this level. So we're gonna get the reaction. I'm gonna get out, not gonna place a stop loss because potentially I'm looking for the price to go even further down, maybe within a couple of days. So I don't really see bullish structure for gold yet. So I want to see if we're gonna be able to reach even maybe lower than the previous low, so 40.90 something for futures. So I have quite a bearish scenario in mind for the futures for the gold market as well.
Interesting. I like it.
So that's something I want to see.
I'm getting a bit of feedback, or is it my mic, or I'm getting quite a bit of feedback, like I'm hearing myself back.
No, it's Anastasia's microphone
I yes,
speakers.
something is wrong with my mic.
No, your mic is fine. Your speakers
Yeah.
we can hear ourselves from you, but it's
And
only
like
when
this?
you stop
Is
talking.
this better?
Yeah, when
Yeah,
it's like now, it's fine. I think it's when
Oh,
you talk
perfect.
by yourself and then we stop and it.
Okay.
Yeah, so it's fine.
I'm gonna, yeah, okay.
That's all good. Yeah, I like that. So I'm the same deal. Looking for, ideally, personally myself, prices to come back down through there, and then potentially 3,800 to 3,600 ideally, and then even for like long-term portfolio to buy up from that for gold.
Yeah. Fair.
Yes.
Where
very
are
nice.
you?
So-
where are you? So as we come into the end of Q1 now, where are you thinking goal to go to by? I don't know. Do we say? Let's say the end of the year. Like I got asked this question while I was on a panel last year, and someone said to me,
Yeah.
they're like, "Well, where do you think gold is going to be by the end of Q4?" So I'm going to ask you guys the same question as we are getting ready to close up. And are heading towards the end of Q1. What's your thoughts on gold? Because you're talking about going down to all the way down to 36. So let's see your predictions. Where are you thinking gold by the end of 2026 Q4?
You wanna take over?
Do you want me to go first? Okay, so first of all, okay, so from last year, I had the 5,500 to 5,600 for gold, right, which ended up being pretty spot on. Now, that's the tops. Where we end up, I think I'll call 42 to 4,400. It's very difficult right now, though, with the current climate of things going on, because that will shift everything. Same way with stuff continuing, I would see silver below 50 right now. But that depends on how things transmit. So in, say, a month or 6 weeks from now, that could be different. But I would say it's 4,200 plus, at least, put it that way.
Yeah,
at least. Yeah. I don't think we'll settle below that, and most likely we're probably more like a 4,700 type range coming to year end. But
yeah,
I don't think we'll get to 6K.
I was going to say, I think it was JP Morgan that said that their predictions for gold is 6K by the end of the year. I was a bit shocked when they came out with those figures. Don't quote me. I think it was JP Morgan. It may have been someone else. When I hit 6K, I was like, really?
Many.
6K? That's some pretty premium prices. But Anastasia, what about you? What's your thoughts on gold by the end of the year?
Yeah, I was listening and I was thinking, are you not expecting gold prices to go back up? I think we're gonna go back up until the end of the year, closer to the end of the year. I don't think we're gonna settle below 4,100 or something.
So you don't
but
think
I
we'll
think,
get $50,000?
yeah, I see. That's for Bitcoin or for gold, Dirk?
Yeah.
It's definitely gold.
Oh my god.
Definitely gold.
If it was Bitcoin, I'd be a bit worried. Like, what are we at Bitcoin now?
Bitcoin,
like 7?
all in.
Yeah.
Oh, short? No, but honestly, I don't think for gold we're gonna settle below 4,100, 4,000 level, and from that point on, I would expect gold to pick up back some speed back to the upside. I'd say around 5,000 until the end of the year, back around the same highs, maybe a little higher. Depends. It's difficult for me to say, to be honest with you. I don't think we can settle below 4,100, 4,000 maximum level. And from there, I expect the upside movement. How much depends on Trump mainly, and on Federal Reserve as well, because now we have the probability also to see the rate increase instead of versus the rate cuts that were expected
Yes.
later in the year. So that's going to be also a major impact on that.
That's what I was going to say. So depending on the path of how this turns out, like I could see either 5K to 4.7 average. And in other scenarios, I could see 6K plus, depending on how this goes. Right? And there might be another dip before that, but that's where we end up towards the end of the year, if we're talking about that. And so it's very path dependent, which is very difficult right now. I hope that central banks don't lift rates. Right? If we do, we're cooked. Like, that's literally GFC 2.0. And then yes, eventually gold will dip again initially, and then rip beyond that once we get like QE. Probably have to get yield curve control from the US, and then it gets weird. I don't think they'll have the same leverage as they have had in past crashes through this. That's why I don't like it, because it gets a bit. Even the old playbooks don't quite work, and then that's where it gets odd. And then hence the only asset I can see that is fair game is gold, and that's when you get the 6K, 7K plus aspect.
You reckon we'll go that far when it comes to like 6, 7, 8, 10? You reckon gold will get to $10,000?
10 might be a bit far right now overall, because there will be a relative pullback that eventually, if you have that going on, the US will call for the other G7 sort of countries like Europe, UK, that kind of stuff, all the Western type countries to sort of come together on the same aspect and deploy the same monetary policy. Just like when we did have the GFC, like everyone eventually deployed that. Same with COVID, that we didn't see a major debasement or selling of the dollar, because all major currencies that could be potential replacements or otherwise, or those that hold power, also did the same. Right, so long as they all work together in sync, the current financial system holds together. As soon as someone starts to divert, it starts to crack. And obviously Trump has put everyone off with the current trade war type situation. and Europe has been trying to develop their own situation or system to take over the primary dollar, reserve dollar of the world. So it'll be the reserve euro thereon. It's still probably 3 to 5 years away, developing the tech and the cross currents that is needed. Like it's very complex. It's not easy to just do that, right? But yeah, that's the next best competitor overall.
Yeah.
And then you got China like trying in the background. I don't think they'll get there because no one's going to trust them. That's the other part. You have to have trust, not just the infrastructure, but you need trust of government, trust of legal systems, that kind of stuff, which China doesn't quite have in respect to the rest of the world.
Yeah, fair. Yeah. Not only that, there's the whole, initial, financial war between China and America before all this kicked off.
Yeah.
That's fair. That's it.
I mean,
we've got a couple of questions. Go on.
Yeah. Oh, sorry,
go on. Oh, okay. I was just going to say, we got a couple of questions for Anastasia. Elvin is saying, hi Anastasia, do you think gold price will hit below 4K? I'm assuming that's on the potential short that you're plotting up now.
No, I don't think so. We just talked actually about this, right? I'm expecting the price to pretty much stay above 4,100. 4,000 at the very minimum I would be expecting. On the short that I actually entered already, so I am in short for gold at the moment. I am waiting for the price to hit. I have a goal basically at 4,300, 4,280. So this zone right here, right below the previous lows. And then I have the zones of my targets between 4,115 and 4,090. So around 4,100 level. So that's what I'm waiting for, but I don't think we're gonna go below 4,000. I don't think we're gonna go below 4,100 neither at the major.
Yeah. What's the prediction of Cardi blocks?
That's what we need, honestly. That's the prime prediction. Like that's
we need to get Goldie blocks,
right? This guy controls the market. He has all gold stores for every country right now. So
higher
definitely.
Gold market. Yeah, I was gonna say I just saw. I agree with.
Yeah, again, I was gonna say. So yeah, same deal, similar to Anastasia. I think we were talking about this a bunch in the Discord lately with a bunch of you guys. To be honest, like any dips below that level, 4,100 to 4K, definitely buying opportunities. Like potentially, if this kicks on and somehow there's like excess, it will be from volatility and positioning, not from real true positioning, if that makes sense. So it's not like people are trying to actually short gold. There's margin calls, all the rest that come into play, and then hence you get a kick on. There's also deliverables as far as like gold as an actual commodity and gold actual bars. Those costs go up. We also have potential interest rates, inflation, that kind of thing going up. So the cost of holding gold goes up. But from there, once you get that turnaround, that is probably the absolute base. So from there, definitely buy overall. So yeah, I think
I want to be long-term holding gold.
Yeah. Especially after the bounce that we had from yesterday, from Monday, that we're actually holding up pretty nice. We may get another revisit. But anywhere down there, I'd be buying up in general, both for long-term or intraday activity. The same. Yeah.
I agree.
Yeah, if we do head down that far, then I'll be looking at getting back in, because I was long-term holding gold. I say long-term holding, I was holding it for like a few months, so it is technically swing trading, I suppose, but I decided to take out. I'm going to be looking at getting back in on gold if we do come down to that level, or around that level. Same goes with Bitcoin. You know, I took all my Bitcoin quite some time ago. If we do come down to a significant like sort of pullback area, I will be getting back in with a lot of my sort of long-term holds. Same goes with a couple of like the S&P. Same goes with the Nas. You know, there'll be a few different assets out there, depending on how the outcome, should we call it, of this war goes. Will be, you know, depending on what I put in. We got Abradolf Linkler saying, "What platform is that?"
That's a futures platform that I'm using for analysis. It's called ATAS, but it's only for futures and crypto.
Yeah.
Both. How do you find
So
the futures platform? Have you guys tried the Fivers futures yet? I haven't actually gotten on it.
I haven't not the Fivers one yet, but
Yeah.
other platforms, yeah, like past stuff, yeah.
Yeah, fair. Like I want to try the Fivers platform, but I'm going to wait until I'm back in the UK and I have my big setup in front of me, because what I don't want to do, I don't want to be like trying the Fivers out when I'm on my laptop and I got all sorts of changes going on around me. So I want to give it like 100% attention, but I'm looking forward to trying the Fivers.
The thing is the wait list.
Yeah, fair. I haven't even put my name on it. Holy shit!
Come on.
Thing is, everyone wants it. There's such a high demand for it. Everyone wants
That's
it.
what I mean. I put my name in ages ago. Still haven't got a account.
Oh, really? Oh, fair. Oh, maybe I need to put my name down now then. Maybe I'll get one like when I'm back.
Yeah.
Guys, can you switch to your screen for a second for the charts?
Yeah, I'll tell you.
I need to reload my platform. Yeah, thanks a lot.
Yeah, sweet, no problem. Just looking at gold, I was actually looking at the gold when you were talking about shorting it, and wow, it has dropped. It's actually, you know, it's been a bit. Gold for me, like it broke above here, so there's a potential like you could have been buying, but then, you know, it just wicked around and consolidated, and it just did a whole lot of garbage nothingness. And truth be told, I don't want to be in any of that. And then it started dropping off nicely, so you know, it's pretty awesome to see that, you know, you guys were predicting the short idea, and you know, it is slowly heading down, which is quite nice. What I have been interested in though was the Nasdaq sell, and we didn't actually come back up to my entry area. You know, we didn't actually come back up into this area here, which had a 3 confluence stack. But what we did get, which was pretty cool, was the price did come back up into this area, which I had as an area of interest. It just wasn't my entry area, before then actually continuing that trend back down. So it's pretty cool. I'm enjoying watching what Nas is doing at the moment. I've not taken it. Like I said, I don't want to trade today. It just feels too garbagey for me. But Nas is looking good. You know, if we can come down, take this. We're now in my potential point of reversal for this trade idea. So this is an area that, you know, I would look and consider getting out depending on how price reacts. So if price was to do something like this and just sort of consolidate, then I'd probably get out at this area here. However, you know, price seems to be dropping, so if we can do something like that, then I would probably have held this if I was in it. But this is actually a really nice trade. I'm enjoying watching this. I think I'm targeting pre-session lows, I believe. Yeah, these are Asia lows. So I'm just targeting Asia lows. So it's pretty cool. See how it goes from there. Like I think you said the other day, LJ, or earlier on, you'd like to see it head a bit lower. I'd personally like to see it come down to this area here. I think you had a bit lower than that, though, if I remember rightly.
Well, I mean, that's like the base, sort of pause-ish level. But to be honest, if we start declining, chances are we go lower in general.
Yeah.
So the further you break below that, probability is we actually go head towards that 114 and eventually towards 112. Now, that's entirely dependent on the current situation escalating further. So, given where we are, that's not the main focus. Right now, the market is holding on to confidence that we will get some de-escalation or some kind of calmness in things going on. But net, I have a slight bias to that downside right now. But it's very almost 50-50. Like I was saying, it's like 58-42, right? So it's not definitive. It's very close.
Yeah, I wanted to see price to come up to this area. I wanted to see price come up here. And just sort of like just hold around here somewhere, and then start breaking down. Even then, I probably still wouldn't have traded it until we broke below here, something like that. But I mean, it's just consolidating. It's just doing so little at the moment. Your best bet is just chill, chat, have a bit of a banter, and just see what happens. See if any people like to wake up and choose violence and just tweet random garbage and see what happens to the markets.
LJ, actually, I have a question to you. Maybe I missed it when you were with Richard, but do you think, Will, and you too, I'm just really interested to hear the LJ's perspective from the, all the macro perspective and the sentimental. Do you think the whole end of the war with Iran is speculative from Trump's side, or is it realistic? Because there were confirmations that whatever they were saying, whatever he was sharing about the discussions being held, were not, in fact, real. And there was no confirmations from the Iran side that there is any, agreement being reached or any discussion being held at all. So what's your opinion on that?
Okay, good. I'll say with this, I'll let you go first, Will.
Yeah, I was going to say I'll go first. I feel like you have a more in-depth, deeper. Yeah. So I think we discussed this a little earlier. We spoke about that we don't think that necessarily he was chatting rubbish. I don't think it was garbage or it was false information. I think he potentially was under the impression that it was, but I think there's a bit of a communication error between certain people, and I don't know. I think it's just going to be a matter of who wants the end deal more, and what deal are they going to make on where's the equilibrium? Where's the center point? Where's the middle point that people are going to find harmony? Because one person wants one thing, the other person wants another. It's just simplicity in arguments, in war, or in conflict. So when you've got that sort of that pull against each other, like at what point is going to be the middle line where they go, okay, here's a compromise for me, here's a compromise for you. Either neither of us are happy or we're both happy. Like at what point is that going to be, and what needs to happen and be said and be done between both nations, and the communication within has to align to that as well. Like if you've got let's call them the negotiators and then you've got the leaders. If you've got the negotiators arguing with each other and then they come to some form of alignment and sort of equilibrium, and then they go back to the leaders and then they just give a complete false term, then it's like, well, then we're back to square one, because then the leaders are the one that are going to be like, well, actually, this is said, that said, and then that's where the whole sort of what's the word I'm looking for? Almost like propaganda comes from. It's like almost scaremongering and false information when it's actually not. It's just miscommunication between who is talking and who's leading. Now over to LJ to properly break it down and give an intelligent answer.
Yeah. So pretty much. So I will say this, Anastasia. So the past through the spirit since it began, like for example, Dirk and I were saying it's basically the 3 to 4 week timeline, which with a potential kick over to like 6 weeks. Right now, we're pretty much still on that same timeline. We've come into the 4th week with Trump really putting the pressure on to get this done. I don't think that. So the thing is, when you go from like a game theory type perspective, obviously it's beneficial for Iran to say we had no talks. One of the major key points for Trump is to actually calm markets. Very obvious, right? So if you're sitting in Iran, obviously you're going to say, oh, we didn't talk to them at all. But from other indications and what they've put out themselves, you can see there is some kind of discourse at some level between the parties. Same with the Gulf entities, same with Europe, same with China, India, Pakistan, all of them, right? So it's very hard whether you trade off the headlines from Trump, just like we've had from the trade wars, all that kind of stuff, where he goes, okay, 150% tariffs, next day it's 30% for China.
Yeah.
And we get the thing of, oh, we spoke to China today, China says no. Next week, China says we spoke to Trump, Trump says we didn't speak, and they both go back and forth. So the whole thing is this big game theory. So hence you have to end up trading off those headlines, but at the end of the day, play off the actual macroeconomics of if the eventuation of what we're looking at comes to bear, what are the ramifications for the global system in general? Just like trade tariffs, it would be terrible. Just like this situation, terrible. So you have to assume that we will be going to that same point, that eventually there will be a reformation, that everyone will come together, not as friends, but some kind of calmness within all of this. And that's basically what I'd be betting on in all of this. There's much more still to go, which is the hard part. Even from like the spike we had last night, I would say that Iran has spoken to the US, even though they've denied it. But again, it goes back to game theory type of situation. What do they advantage themselves by saying, yes, we spoke to the US? Nothing. But they do gain an advantage saying they didn't. Right? So that's where it gets very hard. So I would still bet on the ultimate calamity of this, if it continues, is a global recession, very much GFC 2.0, whether it's the US, it's the UK, it's Europe, the Middle East, Russia, everyone, Africa as well, like everything collapses. So I would just bet on that, and they don't want to see that, especially when we have the US refinancing debt cliff coming up. Not very good. Right now, this is pushing rates higher, not lower. So they need to wrap this up, see rates go higher, then see them collapse, then see the US being in the best spot to reduce rates, which sees the dollar come down. If that happens, they can refinance at a lower rate with interest rates. Plus the dollar is lower, which means other countries can refinance their own proxy buying of treasuries. Then we're good. Then they're happy. Petrodollar is intact. Treasury buying is intact for the US. And we're good.
Yeah.
That's it. So you can see that kind of seems in simplistic terms, like that's where they're trying to go right now.
Yeah.
So I
I'm
would
just
still
seeing
lean on that. My only
One of-
other thing, the side piece, I would mention that through this period, Scott Bessent has been very quiet. Where in past periods he's echoed Trump or tried to back him up or recorrect what he's saying. This period, very quiet. I think he's spoken like once. And so potentially through back channels right now, he's gone to Trump saying like, yeah, you need to wrap this up, get it done. Not quite working out how we hoped. Not good. So I think that pressure might come into vogue and they'll try to sync things up. And it'll probably be a later issue. We'll come back to this again. But for now, it might be wrapped up near term. And 8 months, 12 months from now, back in the same situation.
Yeah, I was just going to say, seeing Louis is just updated. I've actually checked Financial Juice on this as well. 12:44 Financial Juice. Iran has fired a new missile wave at Israel. So, yeah, fair. That's interesting.
Yeah.
Almost completely.
Yeah, Trump doesn't have as much control of this like he did with
Yeah.
trade talks, obviously. Iran, like their own agent. You got the other Middle East partners, whether it's Israel, the Gulf states, all of them. Like they're gonna start making individual actions and determinations by themselves, and then everyone pretty much has to agree to some aggregate view overall, which makes it much more difficult. Where Iran pretty much has to say, we have to appease like China, India, and Russia. Now, we don't really have to care about Russia because they were selling oil at like $33 a barrel. Now they're selling at 90 plus. They're very happy. So it's pretty much just China, India. India has gotten exemptions from the US. So we just got China here.
Yeah.
Right, so that's where, yeah. There's no clear side either way right now. It's very annoying, actually.
Yeah. Speaking of being very happy, Unbiased Trader saying Trump is being nice to me. Another week of getting funded. This one on a CFD account. Now 250k in total. Whiskey time. Then target 1 mil. Hopefully by the end of the year. Unbiased Trader, in a time of such negativity with war, big congratulations to you. That is some fantastic news. Big well done for getting 250k funded. $250,000 in funding. Brother, we all know that you're going to get to a mil by the end of the year if you keep on this trajectory. So, cigar and whiskey time for you, my friend. Have a fantastic evening, afternoon. I don't actually remember where you're from. So, I don't.
Such a great friend, Will.
I know. Clearly, I know. Innit? What an awful friend. Can't remember where you're based right now. Let Anastasia speak a little to brighten the day. What to expect from the dollar? I'll tell you what. To better the question, I completely agree. Let's let Anastasia speak and give her opinion on what she's just asked us. Yeah.
Brighten the day on that because there's a second
enlighten
how that ends, and I'm curious to what you think about the dollar right now, and then I'll have a back end of what I was saying into where things are. So
I'll start probably with my opinion on the Iran situation. I agree with you that I don't think Trump has much of a control over it, as much as he expected to when he started the war, for sure. And I think the majority of the things that he's saying is manipulated for the market purpose, because obviously the cheap prices of oil was his goal initial, not the opposite scenario that we are having at the moment right now. So I don't think he has much of a control, and he's essentially trying to convince people in the market that everything is under control while it is not. So definitely no one would be expecting the attack on the majority of the countries in the Middle East from the Iranian side as well. So that has a massive impact, obviously. Overall, through the market, as I was saying before, I am expecting oil prices to go higher again, because I don't think we're going to have the solution with the oil delivery anytime soon until the war is gonna start. It's gonna stop. I don't think there will be an agreement reached easily, because for this, Iran is not gonna step away and then they're not gonna surrender. I don't think so. Not gonna try to find the middle ground, and Trump will not be able to say that we just leave the situation the way it is, because he already started that. And leaving right now at the way that at the point where the war is would give US a very bad image. So I don't think they have the solution at the moment for Iran. And I don't think it's going to be over on the 5th of April unless there is an insider's information, which it doesn't look like, because Iran doesn't confirm any discussions with the US. So overall, I am expecting oil prices to go back higher. I'm expecting gold prices, silver prices to go back higher from 4,100 level, as we were speaking before. For the US dollar in general, I honestly wasn't really analyzing this from the longer perspective, because in my personal opinion, we are approximately stuck in the same consolidation. So it doesn't change much. I'm gonna reshare my other screen in a moment because I needed to reload the futures platform. 1 second. So if we look in general at the US dollar, from my perspective, we did have an attempt of go below the level like 96, 95.9. We had several attempts of those which successfully failed. And right now we are bouncing back up. I am expecting US dollar in generally to reach the previous highs approximately. So I don't think we're gonna see the lower US dollar anytime soon, not in the first half of a year, I would say. I do believe the instability with the Fed, which everyone's attention is turned into different things. But instability and we don't know basically what's going to happen with the Fed and with the interest rate, with the new chairman of the Federal Reserve as well. So this is still in the air. And while not a lot of media are talking about this, I don't think this is a closed topic yet. So this is going to come into the side back, and I am expecting the US dollar in general to continue higher. So my targets would be in the next couple of months to reach back approximately 103.5, 103 for the US dollar index. This is maximum as 107, I would say. And I don't think we're going to go back lower below 95, 96 level. So that's my opinion on the US dollar in general.
So you're betting on the situation getting worse?
I don't think it's going to get much worse. I'm betting on the situation to continue longer than they are saying it will. And
so from now, for the situation to continue longer, we're probably net. For us to drive higher would mean euro dollar goes below 114, next stop 112. Below that, if we blow up more infrastructure, down to 107, 105. That's how you get that high. So that's basically betting on the situation getting much, much worse. That's the only way we get there.
You don't think we're going to get there if the attention is going to be turned back into the Fed situation?
No, because the only central bank that really has propensity to cut rates is the Fed.
Yeah.
Right. So ECB and Bank of England were basically at the floor, right? We were looking potentially at ECB reducing rates once more, out of the question. Bank of England, we've had inflation coming up. Now people are starting to bet. Prior, it was 2 more rate cuts. Now we've flipped to none to potential rate increases. We've seen Australia here increasing rates. We've done that twice. The thing is, with the current energy input shock, it equates to 80% to 1% of a full rate cut already. So it's very tough. So the only player that has energy to sustain this current environment is the US. technically, if we shut down the entire strait, shut down everything, the only player in the entire world would be the US. They could do this for 4 years of their current resources. Right? China, done. Korea, done. Japan, done. Anything of Southeast Asia, done. Australia, done. UK, done. Europe, done. Everyone, out. So, even if we get a resolution, and yes, there will be some blowback of rebuilding some of the infrastructure that has been hit in, say, Qatar, that kind of stuff, the US will not be as adversely hit. The rest of the world will. Now, if we get a continuing situation with the US where employment is slightly coming off, because regardless of that, even though they have the infrastructure if they needed it to keep those prices stable, it's still going to be elevated a little bit. They're the only ones that could potentially confidently reduce interest rates because of demand destruction. I think every other central bank would wait quite some time and still be looking at the potential rate hikes versus the US. So this is where we get the inverse, where we get dollar pumping through now, then big crash overall. And we have Jerome Powell being replaced, and we have the refinancing cliff for the US.
I was going to say, yeah, JP is being replaced. That's coming up soon as well. Jerome Powell's out relatively soon, I believe.
He is. So May. So same deal. This is where I'm personally looking at like 160 on the dollar yen, Anastasia. So if like we've had a number of attempts around there, but we haven't been able to break it at all, right? Traders each time keep pulling back from 160. We know there's intervention from Bank of Japan, and at this point we know that Bank of Japan is pretty much on hold until US says go ahead, increase rates. Because the weaker the yen is, it benefits the US regarding China. So if we keep seeing this hold below, I think we just start to look at much deeper dollar depression. So that's the only thing. Like normally we're very like on the same picture, which I do see the same picture, but when I look at the other macro plays, and the thing is the bond market right now, the bond market is king overall. And the bond market is essentially communicating the opposite outcome. Kind of on both instances, even if we get worse or better. And that's my concern overall.
Makes sense.
Anyway, it's just food for thought. You can completely disagree and tell me I'm stupid. That's fine.
LJ is stupid.
But I'm probably ridiculous. But that's just my my input in general. So I don't know.
Look, at the end of the day, none of us are wrong, none of us are right until the time actually comes where the outcome happens, and then either one of us are proved correct or incorrect. But until then, it's all speculation, and no one's right or wrong to speculate whatever that they are anticipating will happen. It's just a matter of time now and waiting to see what outcome prevails. Especially
in the current market reality, right?
So exactly.
So it's interesting to hear others' opinion, because then you are never able to take everything into account yourself from different perspectives. So just by talking, having this conversation, you get a little bit different insight and the perspective on things. which is always something good to say, to stay a little bit more critical to your own opinion, about the market. So it's interesting, but I'm still expecting US dollar to go a little bit higher. But then obviously we'll see, how it's gonna turn out in the next couple of months.
Yeah,
I'm just
exactly.
more.
So it's a timing thing, right? It's hence what I was projecting is like where we go now, next couple of weeks, and then beyond. So I would personally expect US dollar higher near term, but then a great reversal after that, right? So that's the critical point.
Yeah.
It doesn't mean now, but we're waiting for it. I think we did have headlines right now as well.
I've just checked financial juice. I don't think so.
Yes.
I mean, we definitely had a massive move on indices and
Yeah,
FX.
well, Nas has actually nearly hit my TP on where I would have placed it. So,
Guys, I will have to run. I'm a little bit late to the meeting, but in any case, I'm still holding my short on gold. So it's a little bit in profit. I'm thinking to move it to break even at the moment. And again, my targets are below this lows previously here. And then if we break this zone approximately, then I'm going to be aiming towards, what is this? Let me change something. So if we break this, I'm going to be aiming to break even the previous lows here eventually. So let's see if we're going to get there. But at the moment, I am aiming at least towards the previous lows around 4,300, 4,990. And the futures quotes are below the lows, and that's the only thing that I'm trading at the moment. Yeah, and when the currencies start moving, maybe I'm going to be looking for the short on euro and pound as well, but they're quite stable at the same lows right now. So they're trying to break it, and I'm overall short and also on euro and pound, but let's see.
That's fair.
yeah, nice.
Lovely to have you, Anastasia.
Yes. Thank
Good
you
to see
so
you.
much.
Yeah.
It's amazing to see you both.
Pleasure as usual.
Thank you, guys. Thank you, everyone, and I'll see you back on Thursday.
Nice one. See you later, Anastasia. Have a great day.
Ciao.
Ciao for
Adios.
now.
How are you doing?
Hasta la vista, baby. Good, man. Yeah. Just looking now at the drop on EU. We've dropped below that nice little low area that I wanted to see eventually.
It's fun.
But weird price action, man. Such a
yeah. This goes
Such
back
an
to
odd-
the smile thing we were talking
yeah.
about.
Well,
hey?
yeah, exactly. Yeah.
Who's that?
GU being a little bit
Yo.
nicer, but yo, Rich.
It is. 'Tis rich.
Is that
It
Richard?
is indeed. Look who's back. Back
I
again.
think that's him.
Yeah. LJ, aren't you
Yeah, that's
supposed to be going to bed, my friend? It's way past your bedtime. Go read a
Bro,
story.
you're
Pick up
you're
a
2 hours
tea.
ahead of me, so it's got to be what, 11-ish p.m. with you right now.
'Tis 11:10.
11.
Tis a bit late.
Yes. Well, it's 11:13. Must I be
I
specific?
was hanging around. That's fine. It's alright.
It's all
Yeah.
right, all right, all right.
That's alright.
Alright,
Alright.
Oh dear. Yeah. GU, had I actually taken that, it would have hit stop loss. But like I said, the chances of me actually taking that trade would have been next to nil anyway. NAS would have been a bit nicer. The chances of me taking that would have been a higher probability had I taken it, or had it have come up to my level. So GU is here. I sort of marked this up with LJ. We were discussing GU and EU potentials. Didn't really like much going on here, but I thought I'd mark it up anyway because it looked quite nice. Same with EU. I think LJ had a similar area as well. Kind of wanted to see what had happened up here. Nothing. Gold, just didn't even want to look at gold, if I'm honest, today. NAS, however, has moved pretty nice. It's moved the nicest of the assets and pairs throughout today. You know, we had a really nice area here, and then a failure here. Then we had the break and close here. We just didn't come back up and retest this zone. You know, we had a nice consolidation. We had a nice imbalance. We had the fair value. We had the fib retracement as well. We had a three confluence stack, but it just didn't quite come up. And then it's now coming back down and eventually close to TP. It's still not great price action, but it's been the nicest of them today.
What do you think, LJ?
Careful that we still come out like up to the options level from here. Like we could definitely have a rebound. We've got a higher low from that wick, right? So
yeah. Well, like I said earlier,
no negative news from Trump. We may well have a bit of a rebound overall.
Yeah.
So
this area here was my potential point of reversal.
Yeah.
PPR,
potential point of reversal. So this, truth be told, depending on how people are... Oh, no, don't say it now. Yeah. So depending on how price was going to react there, truth be told, if I'm honest, if I was actually watching this trade, I would have set an alert here, watched how it reacted. This pullback here, I probably would have gotten out somewhere around an average of here. So this, in theory, would have been a 2-hour trade had I have entered it.
Yeah. Either way, I will say goodbye to you guys. I'll see you guys tomorrow. I've been up, like 17 hours from now. So I will see you guys tomorrow. I won't have to be up so early tomorrow, so I'll be more refreshed. I'll see you guys tomorrow overall. So
actually gets a lay in.
All right, mate, LJ. Thank you very much for all of your insights, mate.
See you guys. Ciao.
Cheers, LJ. As always, thank you to LJ for his very in-depth insights as well as his comedy, which goes unappreciated.
I was going to say, no one thought he's funny. I think he's funny, but apparently no one else appreciates him.
Guys, come on, appreciate me. We got to have some fun, right?
Yeah, that's why I said like, your humor goes unappreciated. We appreciate you, mate. The two of us appreciate you.
All right, good. We're going to the moon with the gold trade. And yeah, all right. See you guys tomorrow. See you guys on the moon or Saturn or...
Go to bed.
Where are we going?
You're going to bed, son.
You know what LJ should have? Like above his bed, he should have all of those like glow in the dark, like planetary systems and lights and stars, solar system, and then he goes to bed and goes, I'm going to bed.
Yeah, but then he'd just be like a cat. He'd just be playing with them. I can see it now. LJ there, just like pouring away at the solar system.
No, but he gets to like really dream, and the last few things that he sees is the starry sky. And it's like to the moon.
That does sound good.
Anyway, yeah. Nasdaq has started to move nicely. I sort of agree with LJ in the sense that we can potentially see a pullback to try and get back to the options expiry.
Yeah. What level did you say the options expiry was again? I remember you said earlier, but I can't remember.
24,167.
Oh, I was predicting around 2168. Okay, 2167. I was pretty close.
Yeah. So that's the options expiry, and we can potentially come back there. But for me, it's because of the fact that those options expiry do tend to really act as a magnet. My only issue is that it's also, well, not really an issue, but like another thing is like it's a cluster of price action where we were sitting consolidatively. So we were really struggling in that area, and then eventually we started pushing lower, retested, and continued lower quite nicely. I don't really foresee us running up. If we do start running up, I can see us being blocked on our way pushing up long before yesterday's highs. And it's more towards... Am I sharing? Yes, I am. It's more towards this area over here. So if I go down to the 15-minute, it's this segment where every single time we've kind of like hit it, we've had like a very nice bearish reaction off of it. If we do push up, the options expiry is somewhere around here. I doubt us pushing higher than that block. I am still of the opinion that we're going to potentially come down here. Yesterday's, low point prior to that sudden like news spike. Because right now we've shown zero willingness to want to push above this area. So to me, this is acting as quite a bit of resistance. And this whole segment down here is completely untested as of now. Technically, if you consider this and this being equal highs, this and this right now is acting as equal lows. But with the idea of showing zero propensity to try and continue this movement that we had from yesterday, I can only assume that there is more of a willingness or a drive to potentially come back down here. And then we'll see. So I'm still sticking to that idea. We'll wait and see for things to play out. We've got news in 11 minutes. And then after that, we've got we've got New York Open in 11 minutes, sorry, and then we've got news after about half an hour or so after that. So yeah, I'm very interested to see what Nasdaq has done. I have not taken a trade yet, so I'm just gonna carry on being patient, sit on me hands, and wait. That's pretty much what I'm doing.
I don't blame you. I was gonna say we got 8 minutes now before New York opens. So we'll see how it goes. If I was in this trade, if it did tap me in, which it didn't, I would have been taken out already anyway, so don't bother me too much. But what's your speaking of New York opening, and like New York now opens at a time where I can watch the open for about half hour, 20 minutes while I have some food. What's your thoughts of the open range breakout, the New York orb strategy? I seem to be... So I don't really talk about strategy so much on my social media. I don't believe in it. I've got my strategy. It works for me. I sort of discuss trading, and I believe in, if you're going to teach someone trading, don't teach them a strategy. Teach them the ability to analyze the market. It's very much like what you say. You have the saying, teach a man to fish, he'll eat for a life. Give a man a fish, he'll eat for the day, but switched in reverse. So, like, I believe in that ideology. However, like, it seems to be popping up on my social media more often. I don't know why. Maybe the algorithm is saying, "Will, try it," but it seems to be sort of popping up more often as the New York open range breakout. What's your thoughts on it? I've never really looked at it. I don't know who's the designer of it, but it seems to be flooding the socials at the moment.
I am going to quickly just go and close the door because it's raining.
Yeah. No, that's absolutely, that's
but
absolutely
I actually have an answer to this, so just give me a second.
Okay, interesting. Yeah, sweet. Guys in chat, let me know your thoughts as well, because it's super interesting to get your thoughts on this, because I've never really considered this, or maybe I have, and I've just never really called it open range breakout. So what I believe it is the 15-minute. So if I jump up into the 15, apparently, so it's the 15-minute candle, high and low. So we've got, let's say we've got the high here, and then we've got the low down here. It's the breakout of either the high and continuation, or the low and continuation. I believe. I mean, someone correct me if I'm wrong, but let me know what you guys think. Is this a trending strategy, or is this something that's been around for some time and only now it's like the algorithm's thrown it out to me?
Opening range breakout, mate. It's all the rave.
It is so. It is a trending strategy. I'm not like
Yeah.
I'm not a T-Rex when it comes to this thing.
Every trader and their parent has tried the opening range. It is on every single platform. It's on every single video. It is all the rage.
Okay.
And it basically works on the idea of the opening range has all of the information that you need to take a trade. There is market orders lying in limbo, waiting for the market to open up based on analysis that they've done prior to, and they are waiting for that range to establish, and the range is different. Some say it's the first hour, some say it's the first 15 minutes, some say it's the first 30 minutes. So
Okay.
the consensus is a bit all over the place between which of the three is the actual opening range. However, we have data. We have a friend in our circle called Jurgen who has an opening range strategy, but the difference is his is completely data driven. So he has a whole load of information on a website that he can go and direct back to and say, okay, this is the actual history for the past year. This is the actual orb breakout for the past whatever. Yeah, like exactly like this. Like MGN is saying, the orb strategy has been around since the 1990s. That's what I'm saying. But it's a reoccurrence. It's like it's gained favor yet again. The market is cyclical, but also what is popular is also cyclical. And in this case, orb strategies have become way more popular again. But anyway, so Jurgen has got his strategy that is based on the orb, and it's very successful for him. But he doesn't trade it the typical way. You know, waiting for the orb for the opening range to be established, break out, and then continue in that direction. He has. I don't want to talk about his strategy because I wouldn't call it proprietary, but like the information that he has, the data and whatnot, it's his
Unbelievable.
His stuff. But it's kind of like using, for argument's sake, the different sessions and how they interact with each other based on their opening ranges. Like how would the New York session be impacted by the London opening breakout? And then reversals back to, it's very interesting. But right now, the opening range breakout, I just feel like has become we forgot about the strategy. Let's talk about it yet again,
Yeah, that makes
exactly
sense.
this. Lower time frame. I think the thing about the opening range breakout that a lot of people like is the fact that you don't have to do any trading the whole day, and all you're doing is waiting for, let's say, the first half an hour or first hour of a session, and you get all of the information that you're looking for in that section. And then you trade based on whether or not it's breaking out above or breaking below. That's it. Obviously, you're going to add support and resistance points. You're not going to take a buy when the opening range breakout is very close to a resistance point. You're not going to take a sell when the opening range breakout is at a support level. So the idea is you add confluences, you add support and resistance, you add areas of interest, and then you see whether or not the breakout is in a direction that supports a higher time frame area of resistance or a higher time frame area of support. So I think the opening range breakout can work. I just haven't spent any energy to try and see if there's any efficacy to it.
Yeah,
The way
like
that I see
obviously, like,
things. Yeah.
go on.
Now I'm saying the way that I see it is that there's a lot of volatility in that area. There's a lot more volume, and you get like spikes, and then only afterwards do you see the propagation of a new trend or a willingness to have orders move in a direction that you want. So I don't trade the opening breakout. I wait to see if there's something that forms first, and then I will continue with the trade.
Yeah, yeah, nice. Like, of course, I've heard of the orb, like ish, like like Jochen, our friend. I knew that he had something like the orb strategy, which he's spent a lot of time developing. But I've never really tested it, never tried it, never actually looked at it. And dude, it's just traders are flooding on my Instagram at the moment, and I've spent quite some time tailoring my algorithm to a specific kind of content, and
that you can't shy away from now because it's blurred in your face.
well, no, quite the opposite. I don't have traders on my Instagram. I don't follow traders. If you are a Forex trader on my Instagram page, congratulations. It's because I'm friends with you. I don't follow traders. I don't know why. It's just a rule that I've had. I don't trust a lot of traders, certainly on Instagram. Ironically, I've got like over 18,000 followers on Instagram, and I do post a lot about my lifestyle as well. So ironically, I hate the people that I actually potentially display myself as. Not necessarily hate them, but like I did 90% of them, I don't, they're not trustworthy people. So I don't do it. So I trust more a lot of the people who don't necessarily have something to sell, or maybe they have something to sell that's to improve your life, not to increase your fortune. However, recently traders have been flooding my Instagram, and not just like gurus either, like just standard everyday run-of-the-mill traders like you and I, just on Instagram talking about the orb strategy. And I thought, where are you all coming from? Like, what is going on? And it just seems to, like, I thought, is there a new, like, has it reimbursed as a new trend, as a new craze, or I thought, have I just, as my algorithm, given in?
No, I think it's because it's like MGN said, it's been around since the 90s. And it's based on techniques that were developed in the 60s and the 70s. The thing is, a lot of trading styles, I wouldn't say that they fall out of favor. It's just that a new car is always going to look more attractive to most people.
Yeah, of course.
So the idea is that you're seeing something that looks really nice, and then you go and test it, and it either works, and then eventually it's no longer a craze because now everybody already knows about it. And then what happens is, at some point, something new pops up, even though it's never new. That's the thing. And I think that's what's happening with the orb strategy. It's not a new thing, but people have just kind of like forgotten about it. And then some influencer of sorts has been like, oh, I have this thing. And now there's been enough time between the 90s and the 2020s, like 30 odd years, where maybe some of the traders that have been coming into trading didn't really spend the time to try and figure out where this stuff has come from. And, like Wyckoff theory and blah, 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 all of that kind of like stuff. So to them, it seems like the newest thing. And what they're going to do is, because it's the internet age, the age of the influencer, they're going to push this and be like, oh, I have found this strategy. And it's just like, well,
I found the holy grail of trading.
Yeah, it's existed for the last 30 plus years. So it's just either reimagined or it's renamed or whatever you want to call it. And that's why we always come back to the ICT conversation.
Yeah.
Because it's a similar thing. Something that has existed for a long time has become more popular because somebody has been pushing it, renaming it, but it's concepts that are exactly the same over the last 40 plus years. So
yeah,
nothing wrong with it. If it works for you, it works for you.
Yeah, absolutely. I totally agree. I think if it's working and it's a system that works, then make it work for you. Like, I see so many people arguing. Like, if you could go to a trader pub, the argument that would cause the most fights with alcohol would be ICT, yay or nay. You know, it's like the ultimate rivalry is ICT traders and not ICT traders. And truth be told, I find more times than not, there's a similarity between all traders. Those trading ICT, Wyckoff, Orb, you know, SMT, whatever you're trading, there's such a similarity in their trading style. It's just dressed up differently. And more times than not, and I see this all the time, I've had not an argument, but I had a running in with a family member recently, and they spoke about something which they had heard a negative implication on. So it wasn't their exact findings, but instead trading hooligans. So it wasn't necessarily their findings. It was actually the opinion of the findings, and it was someone else's opinion of the findings of someone else again. So someone had come up with these findings, someone had heard of these findings, had their own opinion on, and then gone to this particular person that I know with these findings, which they'd, you know, hear, like Chinese whispers, and then
It's a game of telephone, mate. It's a game of telephone.
Literally
I heard, and that person heard it from that person, and so on and so forth.
Yeah, 100%. So when it comes to like ICT trading, a lot of people hate the ICT concept, and I'm not going to say ICT concepts, the concept overall in general of ICT trading. Most people actually hate it because it's called ICT. I can guarantee I could learn a completely different concept. I'd struggle because ICT is so similar to so many other concepts out there. I could go and learn a completely I tell you what, I could go learn macro funding, macroeconomical trading, and then I could say I'm an ICT trader. This is how I trade, and someone would say that's wrong. That's absolute garbage. That doesn't work. When it's absolutely not ICT, I just called it ICT. And then I could go up to you and say, I don't trade ICT, I trade macro, to someone who doesn't necessarily, maybe they're new in trading, or maybe they're not necessarily the most knowledgeable in trading yet, but I've called it ICT. I've called it something else which you've never heard of.
See, even you're getting confused. You see?
Yeah, no,
like, changing names and all that kind of stuff. It's confusing, mate. That's what
exactly.
it is.
That's what I mean. And that's all it is. It's name changing. That's all it is. It's marketing.
Yeah. It's the same thing of like you coming back and be like, hold on a second, isn't that thing?
Yeah.
Isn't this that thing? This is like, yeah, technically it is, but I like it. I do the same thing. Like, I'm gonna be dead honest with you. Like, my basis is like my understanding of it. Like, it's how I've taken something that I had no control over, that I viewed, and I tried to personify it for myself so that I can have some ownership over it. So I can say, oh, you know what? I came up with this cool concept, which in reality is completely false. I didn't come up with the concepts of bases. I just named it a base.
Yeah.
So it's the idea. It's the idea that you take something and you try and make it your own, so that you
100%.
feel like when you implement that thing, it's your own unique understanding of the market, which I am 100% for.
Yeah,
that's why I said I don't mind the fact that ICT calls it fair value gaps, or calls it the silver bullet, or the Judas swing, or whatever the hell he calls these things. I don't care what it's called. I've never had a problem with the concepts, the naming. I don't care about it at all. That's why I said I've never had a problem with those things. The problem has always been the claims,
the way it's portrayed, and
the claims. Yeah.
Unfortunately, look, to be fair, like I've over my time of trading the past 8 years, like I have looked in, and the more so I've looked into the idea of these concepts. Well, we should create a HGT, hypergrowth theory, of course. Of course, to earn millions, it's all about buzzwords. 100%. Let's do it.
Yeah.
Let's call it, instead of the silver bullet, let's call it the diamond shell.
It's got to make sense, mate. It's got to make sense.
Shotgun shell, and it's made of diamonds instead of silver and a bullet.
That just seems unnecessarily expensive.
Exactly, because you're that rich, because it's 100%, it's 101% win rate.
Jeez. Okay.
I know.
Anyway, yeah, like once again, I don't care who trades what.
Yeah, no, exactly.
I feel like there is things that are more probable than others. I think that there are things that make more sense. But if you are an ICT trader and you trade ICT's concepts, what you're trading is the words. You're trading the buzzwords. The concepts itself, reversals, imbalances, all of these things exist and have existed long before Mr. Sanders decided that he was going to coin these terms. Yeah. Anyway, I'm not here to bash on anybody. ICT concepts, ICT traders overall, I've seen some that are very profitable. I don't know whether or not...
Awesome ICT traders. I know some awesome ICT traders. They make more money than I do in a quarter, but they do it in a week. You know, so like I've seen some phenomenal traders, but they don't care that it's ICT. You know, they acknowledge that it is, and they say, "Yeah, I'm an ICT trader." Oh, you're rubbish. Yeah, shut up. I make more. I don't care. I make more money than you. You know, so that's their whole persona. You know, they really don't care. However, you know, they are fantastic traders because they acknowledge who they are and the strategy and where they've learned from. But like Rich has just explained, they take ownership of the fact that it's not necessarily a new concept. Instead, it's just the buzzwords for this concept has been named, but the theory behind it has been around for generations.
Yeah. I once again, it's always going to be the words and actions kind of like thing. That's the kind of person that I am. Samir, what's up, mate?
Yo, Samir, what's good, brother?
Hello guys, how are you? I was looking at trade here. Price is touching the trend line.
Samir,
I am gonna.
You are on US30. You are in a buy.
Yeah, I just took a buy here.
Hang on, let me try and predict. Something's going on with Samir, and I don't know what it is. He looks different.
What you mean by that?
You're not wearing your glasses. You usually wear glasses.
Where is my glasses? I forgot.
I knew it. Come on.
I forgot.
Samir, I know you too well, man.
Oh man, thank you. And now I'm just seeing here and there. I forgot to wear my glasses, but forget it. If I see here, then I'll probably wear, but it's okay. I can manage. My one eye is enough for these trades.
While you're over here with your left eye, and then my screen on the right hand side, I have to just every now and then just. I need my glasses.
His eyes are gonna be like all over the page. You look like a chameleon.
Yeah, I took a buy here. By the way, I'm gonna explain our lovely viewers why I took this trade.
Are you in that right now? Yeah.
Yeah.
Oh, fantastic.
I can pull out my MT5 shortly, but let me explain this trade through this trading view. Very basic thing, nothing too complicated. Price was coming at the support and resistance area, very clean. Price rejected from here a couple of times. Going to the 15-minute time frame, we had a touch of this trend line, which is 1, 2, 3, 4th time it is touching. So I'm like, maybe price can reject from here. And EMA side, I'm not seeing any established trend right now because we are still, kind of a flat on the EMA side. So probability of price going down or to the upside is 50-50 based on the EMA. But my levels and this trend line is showing me that I should enter buy. So I'm just entering buy. Yesterday I entered, I think I entered a trade around here, if I'm not wrong. I closed it around break even. So yesterday was a break even day for me. But today, let's see. Price is coming to the trend line. So I'm just gonna set my TP here on my Fivers account. Let me set my TP here.
Yeah, unbiased trader Samir trades Dow Jones, but
Yeah.
Nasdaq and Dow kind of like they do run very similarly. So, but Samir is I'm the Nasdaq guy and he's the US30 guy.
Yes, I used to trade NAS, but I found my win rate is little bit better in US30, so I shifted to this pair only.
Nice.
So I'm trading futures also, so I am setting my stop loss there as well. So let me do it here, and shortly I
Right.
would love to share the terminals with you guys. Okay.
Yeah, awesome stuff, man. Yeah, go for it. I'm actually going to take this opportunity to hop out so I can go have some food and get ready to go dream about hitting take profits again. So, guys, thank you very much for joining. I just saw that we've got around like 150 likes, I think it is on the YouTube. I don't know what that has been updated to. Guys,
Yeah.
big shout out to Samir. He's about to show you his trade live in at the moment. So make sure that you're going to smash the like button for him. Let's see if we can get 200 likes for Samir. And guys, make sure that you
Let's
subscribe
go,
to the channel if you
guys.
haven't already. And I shall see you el mañana. Thank you very much, guys. Peace.
Enjoy,
Will.
Will.
Thank you so
Have a good
much.
night. All right,
Okay,
Samir,
now,
and then there were two, you and I. You and I.
yeah,
For
I'm
everybody,
checking out my MetaTrader now.
bring
Let
them.
me reshare my screen.
Yeah, I'll do it. That's Will's.
Okay. So
There
as
we
you
go.
guys can see here, I am in the buys here, and my risk is around 1%, which is $1,000. Little bit more like 1100 or something like this. So because I entered lot size because I assumed it should be near around 4 lot size. So I'm okay with 1.1% risk. Actually, it is not even 1.1. I forgot my account is scaled up, so it is 1% only. I'm sorry.
Yeah, it's going to be
Yeah.
slightly less, around 0.9. I have a
Yeah.
question for you, Samir. Why don't you use the position sizer?
Yeah, I asked about that tool uh, from you only, I think, or maybe Victor. I was
Victor as well, yeah.
too lazy to set it up, to be honest. So I will,
Okay,
I will use that. I will use
I
that.
mean, fair. I'm too lazy to. Okay, fair enough. Like, all right.
I downloaded that also. It might be in my computer somewhere, but I was gonna use that, but then I was entering trades from my phone, so I was like, okay, whatever. But I will set that thing up as you reminded me. So yeah, the same trade is in my futures platform also, and TPSL is somewhere close to these figures only. So let's see what we get today. Yesterday was a okay day. Took a break-even trade, but on the future side, I booked some percent there. But let's see what we get today. Level is clean. Trend lines are clean. Let's see.
I wanted to ask you, for this specific trade, did you put in a market order or did you put
Yes.
in a pending order? Okay.
I put it a market order, but I should have taken the pending order because I was gonna enter at this area here because price touched the trend line here, but I got on the stream, so I was like, okay, price is rejecting, so let's take the entry. But I should have involved in the trade around here. Even if you go to the 1 minute time frame, I think price is not at all impulsive in this area. I'm just talking about this particular leg. So I do like to observe these kind of nature. And if this nature was not there, if price was moving, let's say like this type of V-shaped recovery type of thing, then I wouldn't have taken this trade. As we are slowing down here, touching the trend line, I think this NYSE open is just gonna give some volume. Of course, if it comes to the upside, that will be good for me as I am bullish here. But it can also break this trend line, But nature is telling me, the trend line and these levels are telling me I should go buy, or I should take the trade on the bullish side. So that's why I am in the trade here. These type of nature is important for me whenever I want to take any trade. Most of you guys might be thinking, oh, we just touched the trend line and he just executed the trade. It was not like that. These type of nature is the main reason which gives me confidence whether I should take the trade or not. So levels are everywhere, but these type of nature I do want to see. Either price is slowing down or it is impulsive. So if I would have seen, let's say, something like this, price coming like this, then this was not really my trade. So then most likely it would have broken this level. There is high probability if price is having this much volume, then we can break this level. But as we are slowing down, let's see what we get today. Oh, I think I accidentally deleted everything.
That's okay. I think
yeah.
everybody kind of like understood what you were looking for. Steven is asking you, Samir, how many pairs do you trade?
I trade US 30 only, and sometimes I touch gold. If I see, everything is lining up, I remember, I think, no, it was US 30 only. I remember there was a big FOMC push right here, and I shorted this trade here and I booked some profit in this candle. If everything is aligning, like fundamentally and my technicals also, then I might can trade gold probably like once in a month. Other than that, I am focusing only on US 30 majority of the times. So let's just put it that way. I trade US 30 only. Gold, like here and there, like very rare. But sometimes when, some setups are calling me, if I don't see any trade, I was like, let's take a look at gold. If I see very interesting setup, then I might can take a trade. Now, as we're talking about gold, I shorted here, I think, if I'm not wrong. Yeah, it is on the 1 hour. Yeah, let me show you on the 5 minute what behavior we was having here. Okay, as I'm a trendline breakout guy, some levels here and there.
Excuse me.
So yeah, so look at this. We impulse to the downside. We are slowing down here as we broke this level, and we are also seeing some kind of head and shoulder. So I took a trade around here, and the 15 minute and 30 minute also, if you observe the wicks or candles, we are rejecting from this level. There was a previous level of the 4 hour time frame. So I shorted here. I think my 1-to-1 was done in this candle. Stop loss was somewhere around here, and take profit was somewhere around here. But looking at the US 30, I think I do like this nature a lot, as we are slowing down on the 5 minute also. So I am positive about this trade. If I see this kind of setup like 50 times, 100 times, I will do the same thing. So
Same
in
trade,
the
yeah.
back of the mind, I'm not doing anything wrong here or breaking my plan or anything like that. Risk is okay, 0.9% here. So yeah, let's see now.
Yeah, like stick to what you know. There's an interesting question here from Unbiased Trader asking Samir, how many marriage proposals do you get due to your Fiverr's profile pic?
No, actually, no marriage proposal. I'm young right now. I want to achieve things. Then maybe I can look at this side.
Potentially getting a partner.
Yeah.
Also, good question from Unbiased as well. Rich and Sam, do you guys believe in market orders trading? He personally hates it, and he did follow up, gave some context.
Okay.
He hates it for entries, but he does allow stop loss and take profit orders for exits, which I think is like typical. I think most people will have a stop loss or a take profit point as, you're not pending to sell now all of a sudden. I think most people is just like, okay, that's the stop point of the trade. what is your feeling on taking market orders versus taking pending orders?
For me, as I mentioned, the nature of the price is important. Once it comes to my level, so automatically I am bound to take the market orders, as if I take limit orders, then I am not able to see the reaction of price in that particular area which I'm planning to enter off. So for me, it is market orders. Once I get my nature slowing down of the price in my area, some trend lines here and there, then I get some confidence to get involved in that trade, then boom, I punch the trade. So market orders, of course. So for me, I've been a market order guy from a very long time. I have tried limit orders here and there, but majority of the time I have spent my time entering based off of market execution, or just taking the trades when I see the setup.
Yeah,
Do we have
I'm
any
exactly
news
the same.
today?
The news is coming out, or came out, I think, a few minutes ago.
Okay, I'm just making
Yeah.
sure I didn't entered.
Yeah, no,
News?
it was at 15:45, or in this case, 1:45 GMT. So it was 7 minutes ago. We had flash services and manufacturing PMI on the dollar. I'm the same when it comes to market versus pending versus limit. I am the same as Samir in that sense, where I want to see the characteristics of the candles. I want to see how momentous the movement is in a certain area. I want to see whether or not the movement that is busy establishing is breaking higher highs, higher lows, that kind of like stuff. So I want to see whether or not we're actually about to create, or we're establishing, let's rather say, a new trend. And most of my trades are, well, not most, all of my trades are very specific things that I'm looking for. And sometimes what happens is I can see step one, or let's call it A, B, C, D, and E. I can see A and B forming, and it's great, but B, C, and E, B, C, D, and E is like all over the place. It's not quite there. So if I were to take a pending order or a limit order at a specific point, I don't really know whether or not all portions of my trading requirements going to be in place by that time. So I just go market order. I wait for my confirmation. I wait for A, B, C, D, and E to be in place, and then I execute. And that's how I've pretty much done it all the time. So that's kind of like what I'm focusing on when it comes to my trading specifically. So I agree with that. Like, I can understand if someone is like negative about market ordering, because market order, obviously, you're not always going to get what you want, the exact entry point. Where if it's a pending or a limit order, there's at least that this is where it is going to activate, done. So less slippage,
Okay.
and so on. So with market order, if there is no willingness to buy or sell at that point, you'll probably get a higher price or a lower price. It's going to slip you a little bit. The other thing that I kind of like look at it is that we're small fish. So market ordering, in general, is going to be negligible amount of slippage, negligible amount of spread. So for me, it doesn't really matter in terms of an edge to be gained there. My edge comes from, I can see price moving a certain way. I can see a reaction. I can see the build up of momentum. I can see the loss in momentum. If I'll have to go and guess where that exact moment is going to be for my entry, because I don't trade, let's say, breakout or hops off of support points. Yeah, that's basically me.
Okay, so we had a trend line breakout also near my trend line, the 15-minute one. So I do like this breakout here. So now let's see if we sustain this area or not. The only thing I'm concerned about it, I didn't saw the news. So according to my time zone, I entered this trade at 7:12, and the news was at 7:15. So as in the fivers, we have I think 2 minutes rule. So I think
Yeah.
I took this trade
You're
1
safe.
minute. Yeah.
You're safe. No, you're safe. It would have had to have been, your entry time was 16:42:28. So it would have had to have been more than 16:43. So
Oh, yeah.
you actually shaved off 32 seconds. You were 32 seconds outside of the rule. So you're safe. You're good.
Yeah.
And then anyway,
I think this
we're
is a
more than
lesson here.
two. Yeah, we're more than 2 minutes after the news, and anyway, and neither one of your stop losses or take profits were hit. So you're safe. You're safe, mate. Don't worry.
Oh, yeah.
Steven's saying it's healthy trading one pair and it's easy to concentrate. Yes and no. I don't know about the health portion of it. In terms of concentration, yes, it does help. However, because you're staring at one asset and one trade plan, you can start seeing things that are not there because you want it to move because you feel like, okay, I'm only trading one asset. I need my trade to be on this asset and I need it to happen. So it can be healthy. It's good. Generally, I would say concentrate on one until you get comfortable and then you start building up. But in general, I would say that people can get impatient and they can kind of like get stuck in trading something that is not according to their plan because they haven't traded anything the whole day and there was no setup for them. So it's a balancing act, I think. Nicholas asking EU and GU long. Right now, EU and GU has...
Let's see what EU and GU is doing. Is Victor gonna come today on the live stream?
No, Victor is sick today, so Victor is not here. I'm Victor today.
Okay. But where is
this?
your
By the way,
mask?
this is what Victor looks like without his mask. Spoilers, guy. So what I can see on EU and GU right now. So on EU, we did have this base area over here. However, it is off of a news reaction. So I don't really know if this is, how can I put this? I don't really know if this is natural price movement. So a natural trend that was formed. In this case, it was an impulsive trend that was formed. So I have no idea whether or not this area over here is going to be respected. However, what we do have is, if I do bring this up a little bit, is we have a little bit of a support structure that was created basically on the high end of that attempt to try and push price lower. We had the break, an attempt at a retest. Let's just do that. A retest, another retest, came back again, retest again, another one, and so on and so forth. And slowly but surely, we've kind of started to attempt to try and push price a little bit lower. The high of the day so far, which was just after the Tokyo session, after rollovers, consolidation basically tested, we have not come back to this area at all. However, we do have a little bit of not volatility, orders sitting below this point over here that has not yet been tested apart from just now. So we can be picking up some orders. And like I said, this is a potential base area already. This is on the 15 minute. On the 5 minute, there might be a better area to test. Yeah, not really. It's basically just the impulsive move, a little bit of a retracement, and then a continuation. So you can effectively think of this as just a continuation of the initial move and retesting it close to and then moving up again. My biggest issue is just the fact that we have not taken yesterday's highs or yesterday's lows. We are reacting a little bit more bullishly now during this area of consolidation over here. So on the 5 minute, we've slowed down heavily coming into New York session. New York session opened up, and it seems as though there's a propensity to try and push up. However, we are still in this downward slope for the whole of the London session so far. On the 5 minute, by the way. So shorter time frame. I want to see whether or not this is in fact the low of the day, and that we can potentially see these high points over here tested before potentially going and trying to sweep the high of the day. So establish a higher high or a new high, a higher low, and then a push up. And as we start pushing up, I will potentially take a trade somewhere over there as an example, aiming at least for the London high, and then maybe having my stop loss being somewhere below this swing to get a 1 to 2, something like that. That's if we are going to have this EMA disrespected. This is if we are going to make a higher low and then a push up from there. If this ends up just being a lower high in relation to that high point that we had over there, and this is now the new low, there is a potential for us to create a new low, push back up, retest this area of consolidation, and then potentially pushing lower again. So for me, price action is going to dictate what I want to do and how I want to enter a trade. In this case, yes, we are getting a little bit of a reaction. It's still quite muted because we have yet to sweep these highs. And this was quite a volumetric movement down. We did have these areas of consolidation over here with a singular wick reaction and then a strong drive through it. And then this could theoretically be a test of this area right now. So that could be a test to try and push price lower. Begs to be seen. That's why when it comes to predicting versus kind of just waiting for confirmation, I would much rather wait for confirmation. Just kind of know what it is that you're looking for. But also be ready to kind of like change your plan. So like your bias in this case, if I was looking for a bullish bias, I wanted price to push up, by all means, certain points need to be broken. If that happens, I'm taking a buy. If that does not happen, and the inverse happens where we have a reaction like this and we start printing a lower... Samir, we're getting a lot of feedback from your microphone, mate.
Now also?
Yeah, a lot of feedback.
Let me see what I can do. Wait.
Oh, it's gone. It's gone now. It's gone.
Now it's good?
A little... Yeah, it's better. There was a very, very, very teeny tiny bit, but it's good. It's all right. It's manageable.
Mic check, 1, 2, 3. It should be good.
Mic is checked. So yeah, it's just for me, it depends on whichever one comes.
Decent momentum on US 30. If you can pull out my screen, people can watch the live trade going here. Took this trade live with our lovely viewers. Oh, look at that, guys.
It's heading up. Looks good. Very good.
We should move it to break even. Okay, let's do it. Because as it's a live account, let's not risk the hard-earned money here. Okay, so now I am not risking anything. So I can now relax as my job is done. So TP is making sense above this high. And if we see on the 5-minute, yeah, this is a high right here. So let's keep it right at the entry, because in the fivers, if you're trading indices, you have 0 commissions. I can pull out my, you basically have no commissions. So I think that is a plus point too, if you are an indices trader and if you're trading with us. So
So I have a question for you now, Samir. I have been playing around with the idea of cutting some of my trades, like just taking some of my profits off of the table every quarter of the way up. So 4 TPs, TP1, 2, 3, and 4. When I reach TP2, I move my stop loss to break even, and then I let the rest of the trade kind of like run. But I've already taken off a quarter at TP1 and a quarter off at TP2. Have you considered doing that? Or do you simply have your 1 entry, 1 take profit, 1 stop loss, move stop loss up to break even when you reach a certain point? But do you ever actually take off profit from the table, take off risk without adjusting the stop loss, let's rather say?
Actually, from day 1, I have followed this approach where I'm taking, all my profits at a certain area I haven't practiced this thing. To be honest, I was too stubborn of doing this thing because back of the mind, I was having, what if I close the trade and if it maybe I book like 50%, if it hits my break even after that point, I will lose some profits. Because of this nature, I have been trading with the hard TPs. So this foundation has stayed with me till the date. So I don't trail the my stop loss, or I don't book my profits. So I just follow my TP and SL approach. But nowadays I have incorporated this break even point also. If price is coming close to my TP, back in the days I was not even doing this, but I think I should do this. Why? Because this is just the 1%. Overall, it is not going to hurt me that much. But if it turns into a loss, I think psychologically somewhere that is hard to manage.
Yeah.
Break even, still, you can be okay. I hit a break even, but psychologically, you fight with yourself. Only this thing I have incorporated. But as of TPs, from day one, my foundation has been built that way. I'm listening to those guys who are promoting, um, take the profits at your area, wherever your area is. So I think I have built my foundation that way. So I have never tried this approach that you just mentioned.
I think the idea of that is more, you sometimes get runners, and then even though you did take all of your profit at a specific point, there was always that potential of that trade running up higher, and you could have had more, as an example. I'm still testing the idea. I did take a trade on Monday, yesterday, with that same
Sometimes
concept.
with this concept that you have mentioned, sometimes I think results are gonna be somewhere similar only. If you cut
Yeah.
your profits at a hard TP, or if you let your winners run, maybe there will be slight difference in the results. Overall, I think it is gonna be same only. This is just my I haven't really had have
Tested
data
it,
of
yeah.
this thing,
Yeah.
but this is what how I think, because trading is
So
all about
here's the thing.
yeah.
Here's the thing. I thought that it was going to be the same. However,
Okay, okay.
you are cutting back more of your losses. So imagine this. I have 4 TP points and it's 1R, 2R, 3R, 4R. Imagine that. Okay.
Okay.
At the 2R point, I remove pretty much half of my entry already. So half of my risk. If it was 1%, I'm only left with 0.5% of risk. Okay. So I will then move my stop loss up to break even. And if it comes back, I've locked up the 1R plus the 2R, which then equates to 0.75 of that 1% risk that I initially had. So even if it were to come back down to break even, I'm still locking up 0.75% of profit. Okay. However, because I have a 1R, a 2R, a 3R, and a 4R at different points, and then move up my stop loss, the amount of times that I go back to break even or into stop loss, let's say I have a 60% win rate and a 40% of the time it's going to go to break even, or it's going to go to stop loss. That idea is it's going to pull back. And by the way, I think US30 and NAS is going to start pulling back now. So I think if you want to look at potentially...
Yeah, this is some fair value gap. I think price is rejecting.
It absolutely tapped it, just wicked it, and is rejecting now. So
Let me go to the 1 minute time frame and let's see how this
yeah, it
candle is
rejected
gonna
on the...
close.
Yeah, it rejected on the 1 minute.
I'm just gonna see if we respect this area. If we didn't, I'll probably close the trade. We'll take some some percent, probably 4, 5, 300 even. Still, that is a winning day for me. Let's see how this area holds. Yeah, I can even shift my
Yeah, I was kind of like
stop loss
wondering
here.
if you want to do that, then you at least... But anyway, so back to what I was saying. So the amount of times that I'm going to go to a loss, if I had a static take profit and stop loss without moving it, without adjusting, cutting trades or anything like that would be a 1 to 2. So 40% of the time it would go down and it would just be a straight loss.
Okay.
But I don't actually know how often or how high into my take profit it went before it eventually went down to stop loss. That could be 13% of that 40% of the time. It actually just kind of like turns close to the 2R point and then goes down, that kind of like thing. So I'm leaving that 1-to-1s kind of like just in limbo. So in this case, if I adjusted my stop loss and brought it up, I'm cutting out a few of those trades that would have been a full 100% loss and turned them into a 0.75% loss. And then the times that I have the runners, the runners are going to be more than my initial 1 to 2 at full 100% risk. Because the way that mine is set up, it's 0.25% at 1 to 1, it's 0.5% at 1 to 2, it is 0.75% at 1 to 3, and it's 1% at 4. And if you add all of those up together, it becomes a 2.5R trade instead of just a 1 to 2R at 100% risk. But because I'm cutting back on most of my losses, I'm having a little bit of profit. And instead of it being a full 100% loss, it's a 0.75 or 75% loss. So it more than makes up. I'm getting some of them running to 2R, some of them running to 2.5R, and some of them reaching 1R and then going back down and hitting stop loss. And from my back-tested data and all of the information I've lined up, it's more profitable for my strategy. My expectancy becomes higher.
I think the equity curve is also gonna see some less, drastic drawdowns this way.
Drastic dips. Yes, it's a smoother downturn and then it's a smoother upturn as well. Where with the static 1 to 2, it's a sharp push down if I have a few losses versus a sharp up pull if I start getting winners. So it's something that I'm looking at. I'm not saying, hey, introduce this thing, this is how it needs to be. I'm just kind of like just working on the idea.
It makes perfect sense. US30 wise, I have already secured my position. My stop loss is here now. So I don't really care about it now. I care about if I'm following my plan or not, which I did.
Yeah.
So now, whatever I get, I think it is okay. So we can talk about gold also. Let's see what gold is trying to do. It
Gold
is
to
stuck
me
in
is
this
sideways.
consolidation. Yeah.
Yeah, no, it's
Let's
very
go to the
sideways.
4-hour time frame. Actually, we are seeing some kind of pause here on the 200 EMA. If we see on the daily time frame, it was a 200 EMA here. I can, pull out here for you guys. Moving average. Okay, it is right on the 200 EMA. So after a very long period of time, we have touched this area, and this is the first touch. And even if we break this little bit, I still think we are gonna regain all the momentum, because I have seen this thing a couple of times. 200 EMA or 200-day EMA, it is very hard for price to break that. Even if it breaks, it regains the strength if it is a first breakout. You can even historically see this thing. For an example, it was a breakout, still it regained. So it is very hard for price to do that. So I still think we can recorrect all of this downwards momentum. But of course, you cannot enter a random buy here. This is just the longer term view here. So now I think we are consolidating also. It means the analogy that I was explaining, wait for the price to come in your level and then let it wait for slowing down of momentum. We are seeing that. I think if we break that area, we can see some kind of momentum to the upside, at least till here. What is this area? Let me mark it here, which is 4737, somewhere around this area. And if we close above the EMA on the 1 hour, then I think we can shift the trend. Right now we are still below the 200 EMA on the 1 hour. So I think we can wait for the price to close above the 200 EMA, and then you can place yourself in buys. Right now, I will not take any trade on gold because we are
Same.
consolidating. Yeah, but US 30 wise, I'm seeing some kind of momentum, and we have another pattern here. If we break this trend line, I think that will be good sign. Let's see. I think I should actively manage my trade. I don't do that, but it's not bad to test this thing, where I'm trailing my stop losses and all these things. So I can test this thing, maybe. Of course, it can create some kind of impact in my equity curve. I'm not a
It
back
could.
testing type of guy. I do more of a live testing. Why? Because I believe emotions are not same as back testing and live testing. So I do believe results will vary in back testing and trading live. So if I have to do this practice that I'm mentioning here, I will try to do it live, or maybe I can even pass smaller account. I can test on that, in that account. So I will try this
Yeah, you
thing.
can do that. You can try that. Like, imagine you, I don't know, make it a challenge for yourself for the stream and then say, I'm going to
Yeah,
take a, let's say, for example, a 2.5K high stakes account, and I'm going to, when I take a trade, just trail my stop, and whatever I get, I get. And I find a swing point, I trail my stop loss to a swing point, and then I see, and then you have your actual, because you don't like doing back testing, or you're not more really a back testing person, you're more of like a live in the moment kind of like testing. You can
yeah,
test
yeah.
it that way with minimal risk on the table. I think that would be pretty cool. And then everybody in chat can also, whenever you come on stream, they can come and see, oh, Samir has, I don't know, he's lost his account because he was, whatever. Or
Yeah,
wow,
yeah.
he's actually like really deep into profits now. And I think you can then test as well as see how to properly manage it at the same time everybody else sees it as well, which I think is pretty cool.
Yeah. By the way, I do have to look some data, some kind of back tested data, so that I can get some kind of confidence. Like this is how I'm supposed to do this thing.
Yeah.
Still I have to practice this thing. So I still have to look the maybe data for a month or two. So I don't know. I can structure these stop losses in a 1 minute structure, or maybe 15-minute closes, and I can bring my stop losses above the high or low, whatever, or maybe EMA. So these are few concepts that I will know from back testing only. But when it comes to your profits and all the emotions, that is gonna come out from live testing only. Then you will make mistakes, then you will know, okay, this is the mistake that I did. Maybe I was not supposed to put the stop loss too close, or I put it too high. These type of things.
Becomes a learning curve.
Yeah, exactly.
Yeah, just a live learning curve.
Yeah, I have a question for you. Do you use any journaling software or anything like that?
I do not know. What I do is I have an Excel spreadsheet that I manually fill in at the end of the day for every trade that I've taken. And I have a folder with screenshots of the trade
Okay.
along with the analysis that I have. So I can go and cross-reference. I'm a bit more old school in that sense. I used to write it down, like actively write it down. I took a trade. This is what I felt. So I have columns, notes that I can add just to say I felt this way. I do know that there's some really good journaling software out there that you can hook up to your MetaTrader or something like that, and then it can automatically export all of the data for every trade of that day, and then you just give your notes for it. But to be dead honest with you, the idea of going and writing it in to my spreadsheet and having the folder and naming the screen grab that I took is cathartic for me. It's like I'm finalizing the day. I'm not just like automating it. I'm actually going and I'm writing down my thoughts, which is sometimes difficult in the moment when I'm taking the
Yeah,
trade.
I have
But
just
when I look back, I'm like, okay, I felt this, I
Yeah, yeah.
experienced this, I write it down. So it's like a cathartic end to
Yeah,
the day.
makes sense. Yeah, I have just invested in a journal maybe yesterday, so that's why I was asking you, because on the event
Which
a
one
guy
did
was
you take?
using it. It is Pro Journ X. It is a Indian company. The event, those guys organized this event. He was a founder,
Oh, yeah, yeah,
so
yeah.
he gave me the access. It is, I think, it is very good thing. It automatically, pops out what you are doing wrong. Like for an example, maybe for me Tuesdays are worse, or things like that. So I think I should have invested in something like this in in the starting of my journey. Or you can also go the old way, as you mentioned, using the sheets and taking the week out, or on the weekends you maybe can write down your mistakes, or what was your performance for the past month, what days you have good wins and all these things. That is all, that works, that also works.
Yeah,
um,
I
the-
think for me it's that catharsis, that the fact that I'm closing my day off with that thing, and I run through it, and I can kind of. I'm not one of those people that will wait until the end of the month, then review my data, and then say, "Oh, I should be doing this next month." I do it every day. So at the end of the day, I have a look at now. It's like, you know what? Tomorrow I need to implement this, because for me, it's the idea of it's that Monday mentality. I know Will is talking about this or talked about this often before, where I'll wait until Monday. I'll wait for Monday. I'll do it Monday. That kind of like thing. And eventually, what's going to happen is you're not going to do any of it, because the momentum, the reasoning why you wanted to do it in the first place is lost. So that Monday mentality, I don't want to have it. I'll rather start today, and I'll have a look at it today, so that I know come tomorrow, I'm starting it with a fresh incentive, instead of waiting for the end of the month. I still look at my data at the end of the month, just kind of like, oh, okay, cool, it was a positive month. I followed my plan more often than not this month. But it's kind of like a very quick review, rather than okay, I need to sit down and really dissect each aspect of my month and then determine what I need to do. Nah, dude, I did that last night. I'm ready today to carry on with the new thing. So that's what I kind of like to do.
Yeah, that's a good thing. I think in spreadsheet or Google Sheets also, you can optimize that thing. Maybe use some formulas or things like that nowadays. I'm not aware about that, but I
Yeah, you
think
can.
that can be useful too. But US 30 consolidation. Let's see if we break to the upside, and let's take a look at other pairs. Maybe GU. Let's see what GU is trying to do. Major pairs moves good. Okay, I do like this, consolidation like this, which is on the 1 hour, which to me is impulse and correction type of thing. And can we enter buy here? We have to ask ourselves. For that, we need more confirmation here. Going to the 4 hour. Okay, this trend line was broken, which was coming like this. So first break failed, second break trying to sustain. Going to the daily, let's see how daily candle closed. The yesterday's candle, okay, very big bullish candle here. So I do think we can continue bullish today or tomorrow. And let's try to take I think I'm about to hit a TP here. Okay, it is very
Yeah,
close to the TP,
nice.
guys. So I'm
Nice.
just gonna bring it like this.
You're probably going to hit it, but I also think that if US30 carries on pushing now, if you go and have a look at the 5 minute, you'll see that we have created a base.
Yeah,
So a new. Congratulations on your lovely trade.
that's amazing. Order filled on the future side also. I got a notification. That is good. Okay.
So, I wanted to plug something very quickly based on the fact that you have now taken profit. If you guys in chat want to learn how to have the absolute calmness of mind that Samir just portrayed while being in a trade, I mean, he didn't even smile the moment his trade hit TP. That is how locked in he is. He's a absolute emotionless machine. I'm joking. He's got emotions, obviously. But if you guys want to learn how to do stuff like that, what you need to do is you need to head over to thefivers.com right now. You will see that we have the performance coaching course from our very own Mr. Richard Wells. You know him from the live stream on Thursdays as well as on the Discord on Thursdays and Fridays. He has absolute golden nuggets of information every single day. So what I'm going to say is our performance coach, Richard Wells, has finally released his performance course. So it is free for everybody that has a hub access. If you have hub access, you have access to his course. So if you'll see, there's a free course module, module 1, module 1 is split into 3 portions right now. You can go and watch the videos, you can download the worksheets, and if you want to, you can go and unlock the full course by just going to the hub and registering with the Fivers. You don't actually have to own or have paid for an account, an evaluation account. You just need to be registered with the Fivers. Link is in the description for the hub. Go and join it. This is the kind of stuff that leads to someone like Samir being cool, calm, and collected while being in a trade, just following his plan. And this is exactly what this course is all about. So go and read up about the course itself. There is a short little course overview video that you can watch. And then there is the free module 1 going all the way down. It says free, but it basically means that you don't have to register with the Fivers in order to watch this content and to go and review this content. Like I said, it's free in any way, just by registering with the Fivers at www.thefivers.com. Link in the description. Simple.
Let's go, guys. Amazing. I think everyone should give it a try, because I think you are gonna learn something anyway. Every guy or everyone you are learning from can give you something, and you can implement that thing in your own trading. And definitely you should take full advantage of this opportunity. And with US 30 trade, it is gone now, 1 trade a day, and tomorrow we'll do the same thing. Yesterday took a break even, and yeah, I might can incorporate this thing that we was talking about, which is trailing the stop loss, and that way I can have a little bit less losses, I think, or maybe I will secure something. I will look at this today. Probably I'll spend today's night this way, looking at charts, and see if this thing can give me a little bit more consistency. So yeah.
There is the link for those of you who wanted to go and have a look-see at it. By the way, I'm starting on the weekend with the performance coach information. So I'm also going to be going through all of that. Samir, I actually think that your US 30 trade has a pretty good potential to carry on pushing higher.
Actually, me and Victor was talking about it yesterday. I was having the trend line on the 4-hour that I have drawn. Now I'm on the futures platform. If
That's fine. I'll have a look on the 4-hour.
Yeah, that trend line that price is following for a very long period of time. And I was talking yesterday, maybe today is the day we can break this trend line. But yesterday, of course, we didn't broke that trend line. I think if we break that, we can shift the trend. That was just my opinion, because we was on the very decent support area also on the daily. So as we know, indices don't like to trend to the downside for a very long period of time, like let's say for 2, 3, 4, maybe like 8 years or whatever. So somehow indices, they try to find a very good support area, and then of course it bounce back, no matter how kind of conditions are in the world. Of course, we saw COVID fall. I think that was the biggest fall. Other than that, 2008 crash, if I'm not wrong. We still recovered that.
2008. Yeah, we recovered, but yeah. It struggled. Obviously, COVID 2020, we had this fall down over here.
Yeah, if you just look at a bigger time frame, I think we touched on the support area on the weekly. Yeah,
200 EMA, I'm assuming, yeah? I'm just going to put all of them on, and then we'll see. So there's the 2008 crash. Right over there. It took quite a bit of time to eventually take all of that back up. 4 years, by the way. 4 years to take back the 2008 crash. Because we only retook the area here, which is 2012. And then COVID is over here. This was COVID. This one took less than a year for us to
for
take
this
it back.
one we came to the support area also. For the 2008, we don't have that much information. So,
Yeah, so
but for the COVID,
200
we was,
EMA, yeah,
yeah,
started there. So 2008 we had the break of the EMA. So let me zoom in and then you'll see. So we had the break, we had the break of the EMA there, the retest of it, and then the push down lower. And then it took quite a while to eventually come back to that level over here, 2011. So 3 years basically from this point where we've broken the 200 EMA to get back to price action in that area. This was by far the biggest one though.
yeah, it feels like in 1, 2, 3, 4. I think it is a weekly candle. Yeah,
Yeah, so
4
1,
or 5
2,
weeks
3,
was
4,
crazy.
5 weeks. Yeah, 5 weeks of downward crashing. Yeah, that's kind of crazy. Going
A
having
lot of people
a
made good amount of money here. I remember I was in a mentorship class back in
15%.
2020. Yeah, I was saying that I was in a mentorship class in 2020. I took a course from someone. There was a kid, I think, who was 18 years old. He made
Yeah,
like $100,000 in 3 4 days. I think he was shorting it, like crazily. But of course, that was beginner luck. I think he lost it that money in upcoming days when price was, coming back to the upside, or maybe starting a new trend.
I mean, it happens. It is one of those things. He should have compounded his
Yeah.
trades and maybe try to do some opposite swings and stuff. I don't know.
Yeah.
But yeah,
I still
this
remember his name, but anyways,
you're not gonna name and shame him, are you?
no, I'm not gonna name him. But I was just, thinking that in my head. But anyways, US 30 wise, okay, it is NAS 100. Let's take a look at MNQ here on the futures platform, going to the daily time frame. I think it is also
Let's
on
bring your
some
screen up
kind
because I
of
like having a look at the new platform. Want to have a look at it a little bit more because I have yet to get my email to say I can open up this futures account.
yeah. You will get that. You will be a futures trader, but
I need to talk to Dave. Dave, get me an account, mate.
Dave is the guy. Dave is gonna get you 2 accounts actually. But we liquidated here. Now we it is really hard to analyze this thing, to be honest, because we liquidated this. Now I don't know if it is retesting this area, or it is wicking and then finding its maybe closing upside here today.
This is on the
This is
daily.
on the daily time frame. Let me go to the 1 hour and
Yeah.
let's see now what price is trying to do. Okay,
I was about
this
to
is
say, I think yesterday's move was on the daily a little bit expanded, the high and the low. So how much volatility and volume do you need in order to touch either one of the two, the high or the low of yesterday? So previous day high, previous day low. You need quite a bit because the volume that was in play to get to that point. So I am not sure whether or not we're going to see the high. I'm more inclined to think we will see the low.
Yeah, we are just, some kind of break and retest scenario here on the daily. And
Yeah.
if you go to the 1 hour time frame, remember this is a daily level. We are rejecting from here, but I'm not liking this nature either, which is
I
convincing
don't
me
like
to
it
go
either.
short. Yeah, this type of nature. So let's see if we close above the 200 EMA or on the daily time frame. If we close above this area, then maybe we can call this was a fake out area, and then maybe we can look for opportunities to the upside. The only thing which is gonna change is if we close below this trend line. Then I think this whole pattern that I have drawn here, it is gonna be failed in this case. Then maybe we can even print new lows. And also, when I was trading forex, these type of behavior was not sustaining. I haven't seen this type of behavior a lot in indices. So let's see what this behavior do. We will know in a day or two. Let's go to the even smaller time frame, maybe 30-minute time frame, to see it in more detail. Okay. Yeah, we have to see if these two trend lines that I have, if we break this, I think we're gonna continue at least till this low. If we break to the upside, of course, we can tap this high. So right now we are trading in the this pattern. But US 30 wise, I think the moment I booked my profits, yeah, it just gave some kind of a pullback in that area. I think my take profit was somewhere around here. On future side, I'm up like $800 to pass this account. We need like $3,000. So I was risking 250, but once I took two wins, then I shifted my risk to 500. Basically, I was risking my profits. So tomorrow also I'm gonna be risking like 500. If I want that, then maybe I can risk 700 or something like that. That I can divide my trades that way. So that is my risk management plan, for the future side. Starting slow.
Which account do you have? Do you have the rebate or do you have the base camp?
Rebate one. I have the rebate one, and we have a consistency rule also. I have to make sure I meet that as well, which is 30% consistency score. So on the future side,
Oh, I see. Yeah, there we go.
by the way, that's why I love CFD account of the fibers.
Yeah,
You have
no
one
consistency
consistency
rule.
rule.
Yeah.
So these type
Well,
of things, yeah,
we have a variant, which is the 3 profitable days,
yeah,
which is it kind of like serves the same purpose. You want to see people make consistent profit over a few days, whereas with a consistency rule, it's about the size of your wins. They don't want you to have exponentially larger ones or exponentially, well, not exponentially. They want you to have similar size wins. So it's not allowed to be 30% larger than your previous win or 30% larger than your previous loss.
yeah. But that is somewhere easy to manage in my opinion. 3 profitable days, because I was
Yeah.
that kind of trader. I was having no money in my account. If I was having one, my first trade is 1 to 2, then I was literally stopping, trading for that particular week, or even waiting for my withdrawal after that win. So this type of consistency rule, it really you cannot follow that approach that I was following. I think that was also the major reason I secured some kind of payouts, because I was stopping after it was a winning day for me. But future side, you need to meet this consistency, and I think it builds a right foundation also. If you have these kind of rules, I think prop firms make you a disciplined trader if you follow the rules, and if you have some kind of plan. But on live money, you don't have any foundation, you don't have any rule. You can overtrade, over risk, then of course your whole account is going to be blown. So that's why I have this perspective. It is just my opinion. Prop firms are a little bit better than your own capital. But of course, if you
Yeah.
learn the skill, if you learn the discipline with the fibers, of course, if you followed a rule, then it can make you a better trader. Then of course you can put your money, take the withdrawals from the fibers, you can put that money in your live broker. That can be the approach. But if you're a beginner trader, I think I recommend prop firm to every beginner trader. it really is gonna build some kind of discipline, and your mindset, your thought process is gonna, run that way. And that habit will also stay with you forever, I think, because you are building your foundation with prop firms, these rules you are following.
I see with the futures platform that you need to make 4% in order to get a withdrawal. Or am I
Yeah, I think
misunderstanding it?
4%. I have to check
It's a
the
withdrawal
FAQ
target.
properly, but yeah, it was 4%. And you also have to meet the consistency and all these things. Let's see it live here. Yeah, as I mentioned, these rules make you a better trader, and yeah, but I still think CFD is somewhere a little bit easier. Futures are for those people who know trading, who are a little bit disciplined, and they want to explore the other market. So this is just again, my opinion. So as I'm trading from trading CFD from almost day one, so that's why CFD have some kind of soft space in my heart. I know many futures guys are also doing good in that space, but I'm a CFD guy.
Yeah, I also I got my first taste in stock trading. So CFDs was my second rendezvous, basically, with trading was with CFDs. I haven't done not Forex. I haven't done futures trading. I looked for all of the F words, and I only found it on the third try. I haven't tried futures trading yet. To be dead honest with you, I haven't had the time to really go and put in the effort to go and really do my research. However, I think I'm probably going to say this every single day, but I'll eventually get there. I'll eventually have an opportunity to have a look at it, and then yeah.
Yeah, at first,
Scribbles is saying... Scribbles is saying futures require perfect entries, in my opinion. I don't think so.
just use the smaller, contract size.
Yeah.
If you're using big contract size, then you are scalping maybe, then yes, you need some kind of perfect entries. But the idea of the big stop loss that I use, only that is the reason, I cannot have the perfect entry. So that's why I keep my stop loss wide to, keep it a little bit safe. Even if it pulled back, little bit more or got against me, I still have some rooms. So that's why I go with the bigger stop loss, and I trade micro NQ one contract. Yeah, I think that is a good position size, because if you have, let's say, 100-point stop loss, I think you will lose $100 if I'm not wrong.
On MNQ.
On MNQ, I think on US30 or MYM, you lose $50 on one contract if you have 100-point stop loss.
Okay.
I did the research on NYM because I am a US30 trader. I asked Dave how this thing works. I didn't ask the M and Q. So guys, if I'm, if I don't have the right information, don't clip it up, put it, he don't know anything, because I don't know about M and Q. I know about MYM, the one I trade.
Yeah. No, I think that's fair. I think it's a fair assessment. I'm going to go and have a little gander at the futures program. And for everybody in chat, if you haven't already, we do have a futures channel, a YouTube channel, which Dave runs. You all have met Dave. He as his future segment, and he runs through that. He also has some special guests throughout the week as well, and you'll see sometimes Mr. Samir over here go and join him on a Monday, and then sometimes it will be Victor that joins him on Mondays. But in general, New York session, you can go and join him if you want to go and join the futures channel and enjoy learning about futures trading. I think that's pretty groovy.
Yeah. On the CFD side, I am focusing more on scaling my account. I'm at 125K, It may can take 1 year, 2 year, 3 years. I do wanna reach to higher numbers in terms of scaling the account. So I'm gonna focus more on risk management here, and my risk management, the plan, of course, I can share it with you guys also. I was thinking if I'm in loss, let's say I'm risking 1%. If that is a loss, I will decrease my risk. This is the approach that I will follow because I do want to run this account, and I want to get that scaling account. May can take me a lot of time, but I think that is okay. I think it also the point also comes in my mind. You should choose the reliable platform. If you are focusing on the growth here, since 2016 the fibers is here. I'm talking as a trader right now. If I was looking, about scaling my account and all these things, basically looking this thing as a career, my first choice should be looking at the reliable platforms who is operating since a decent amount of time, who have good history, reviews, and all these things. And you can do your own research. The fivers is the best. You can do your own research. Okay, so yeah, this points comes in my mind. If I was trader, I this is my topmost priority, to choose the right platform.
Scribbles is saying, so far I've only used the fivers. I started in December trading live accounts from demo with the fivers. That's awesome.
That's amazing.
Yeah.
Okay, we are rejecting from this area. Okay, right now I'm on the futures platform. Okay, we are rejecting from this area. I think that's why having the TP on the logical area is must. I was keeping the TP here above this high, so which was starting of this leg. This might be the liquidity. We don't know if it is gonna go to the upside or not, but I'm out of the trade. And if I go to the larger time frame, if I draw this trend line like this, we still are respecting the trend line. So I do think we're gonna break this area, but we are not seeing that volume right now. So let's see if we pushed back higher in this area.
Oh, I wanted to ask you this. This being a futures platform, do you have access to any of the volume profiles? Have you tried putting it
No,
up on
I
screen?
haven't tried it, but I think we do have the access of that because all the time Dave has on the chart that volume profile. I can explore here. Maybe it will be somewhere around here. Okay, I can see volume profile here. How to apply this now?
Oh, that's just the regular volume profile that you would get with CFD.
Oh, here. Okay. So this is the volume. Okay, we are seeing a breakout, guys.
Seeing a break.
That will be a good area to enter. Let's take one contract size here on the future side. How to
You're seeing the break on Nasdaq as well on CFD.
On the Nasdaq, we still are on the trend line. We haven't.
I meant like you're starting
area.
to see the same push, same volume.
Yeah. Okay, let's go with the one contract size, guys. I'm gonna buy it here. Not gonna go with a crazy risk here. I don't wanna risk all the profits that I made. I'm gonna just risk like $100 here for let's say $400, 1 to 1.
Nice.
Somewhere around here.
Get you closer to that $1,000 up mark.
Yeah, I'm risking like $143 for 143. Looks like a promising volume candle here. So that's why I think this maybe today we can break this trend line. Let's see. Stop loss is decent here. Yeah.
Would you ever consider re-entering if it comes back and touches the trend line again?
This one?
Yeah. Would like you took an entry a little bit higher? Would you in normally would you reconsider having another entry? Let's say in this case you're not taking your full lot size. You're reducing your risk. But if this was a trade that you were super convicted in, would you re-enter at a lower or a slash better price so that you can have an even or a more averaged price across all of your trades?
I think if I was planning that trade, I will wait for the 15-minute to close, and once it is making a wick, I will go to the 1-minute time frame, and then I will see how it is behaving. If it is slowing down here, like let's see here, little bit of a bullish engulfing, something like this, then yes, I can enter a retest of this trend line. But all the things should be aligned. 15 minutes should close bullish, as just simple higher high, higher low, these type of knowledge or these type of concepts. So yes, I can enter. Let's see how 15-minute is closing in about 6 minutes. I'm just gonna go to the 5-minute time frame, guys. 5-minute, okay. 5-minute is here.
Yeah.
Let's see if this trendline breakout sustains or not. By the way, normally I will not take this type of trade as I'm in the profits, so I can risk just the smaller amount of profits that I made in this trade. Normally, if I would have taken the trade here, I would keep my stop loss here. But
Yeah,
as
I
this
mean,
is
like typically
yeah.
your trading style, yeah.
yeah,
This is more of a scalp for you. This is more of
yeah,
a
this is more of a scalp using trend lines and the behavior. We tested this area, the base that you was calling, this one,
yeah.
and we got a bullish engulfing, and we also broke the trend line. So I do have multiple confirmations here. So that's why I took the trade. So yeah,
And then your stop loss is just below my base. Look at you, Samir, stealing my concepts.
I'm just copying
The
you here.
Richard Butler, yeah.
I stole your concept. Now you have to find another one.
Ah, damn it. I have to go and find another concept.
Yeah.
Julius is saying best prop firm is best prop firms. I'm assuming you're saying the Fivers. The Fivers is the best prop firm. You are 100% correct. The Fivers is the best prop firm. Look at you, mate. Like, look at your trade. You're on fire recently, dude. Like, where's this confidence coming from? What's your secret?
Maybe I've seen this thing like a lot of the times. These trend line breakouts and all these things on US 30. That's why. And all the self-talking thing, if I follow this trend line breakout, if I follow my plan, I'm gonna get the results. And I have broken my plan also sometimes. Like for an example, I have entered. I remember. I think we was on the live stream only. The trade reversed from almost hitting my stop loss, and it did trigger my stop loss the next day, by the way. But
Yes,
I could
we
have
were on
entered-
stream, yeah.
Yeah, I could have taken a better entry. My trend line was something like this. I still remember, something like this, and the nature was good only, but only the point was there. I enter off something like this. I'm just giving you an example here.
Yeah,
Something
yeah.
like this. My plan was, I was about to enter when the trend line touched right here, so that I can have a better entry, and my risk to reward makes a little bit more sense. That was the mistake that I did actually that day. So on my CFD account, I was keeping a little bit more wider stop loss. I think I took some profits on my CFD account, but the future side, I made a mistake here. So these type of mistakes, small mistakes, um, I I remember this, so I try not to do this thing. But today I didn't did any mistake. For an example, it touched the trend line here, took a trade here, didn't wait it for this. I could have else I would have entered somewhere around here. That wouldn't have made sense. I think this breakout is not good. It should have sustained. So I'm gonna close the trade here. If there was enough volume, we should have pushed higher.
Started picking up. Yeah.
I am used to the
Right.
nature. Yeah, I saw the nature of US 30. I'm seeing the nature of US 30 from many weeks, many months. So if there is volume, these type of breakouts do survive, or we see a huge push in the one direction. Maybe this is not the day. Not
Maybe
that
not.
good of a volume. Yeah.
Yeah. Maybe not. All right. With that, we are nearing the end of the stream. We have 1 more minute, so I want to do a few shout-outs. First and foremost, thank you to everybody in chat for joining us again today. We would love if you guys would drop us a like, and if you haven't already, please subscribe. Please go and follow all of our socials if that is the kind of thing that you are into. The giveaway that we will have next week Monday is a TikTok and Instagram exclusive, so it's only for those who have followed the TikTok and the Instagram, the Fivers and beyond on TikTok and Instagram. And then once again, for those of you who are interested, tomorrow afternoon we will have Sol, who's going to join us again, the CEO of the Fivers, to do some scalping along with Samir and Victor. And then the performance course is available right now. You can go into the links that we have down below, go and start watching the videos, start working your way through all of that information. It is well worth your time. We really appreciate all of you. Thank you very much, Samir. Any last words from you, my friend, before we sign off?
The last words again, I say every day, guys, following your plan is must in trading. And in the last event, the guy was having a conversation. He was giving the his speech. He mentioned, you guys are making losses anyway. Why not to follow the plan? Losses are going to happen anyway. So you can make losses by following the plan. That will give you some kind of, confidence also. And with that being said, that is it from my side. Tomorrow, same time, I'll see you. And hopefully I catch this type of trade tomorrow also. And I can make some decent profits. With that being said, that is it from my side, guys. Again, I will say, make sure you're following your plan. And that is it, guys. So I'll see you tomorrow. Thank you to everyone. Yeah, take care, guys.
Cool. So we start 8:30 GMT in the morning until 3 o'clock, 1500 hours GMT. All right, guys, enjoy. Have a great day. Look after yourself. Always trade your plan. And then we'll see you all tomorrow. Cheers.